panel discussion. What I will do is invite Melissa Collett, who will be chairing today's event, up to the stage, and Melissa will introduce herself and her panelists. As we're waiting, I'd like to say that Melissa is actually Professional Standards Director at the Chartered Insurance Institute. She leads its professional standards, ethics and conduct activity as a united profession across insurance and financial planning. You'll correct me if that's not correct. Non-exec chair of the Professional Regulation Standards and Compliance Board, 11 years as an ombudsman, and experience as a solicitor specialising in litigation and regulation at Hogan Lovells. I'm sure I've missed something out, but I'll hand over to you to take over now. Welcome.
Thank you very much. Please join us. So hello everyone, and welcome to the Insurance Leaders Perspective. And I'm Melissa Collett, Professional Standards Director. I had that lovely introduction, and there's not much more I can add to that. But I am really excited to be here today. Are you excited to be at this in-person conference?
Yeah.
I didn't hear you. Are you really excited to be at this in-person conference?
Yeah.
Yes. Wonderful. That's more like it. So welcome, everyone. Great to see such a big crowd today. I think it's this conference's first time back together. I also want to give a warm welcome to the camera over there with our colleagues who are joining us remotely. Really delighted to be here. And we have an incredible panel today of executive leaders who are going to be sharing with us what keeps them up at night, what are the biggest challenges, the digital challenges facing the insurance sector today. So I'd like to get them to introduce themselves now.
Thank you, Melissa, and thank you for having me. I'm Neville Cooper from Vitality. Vitality, I'm not sure of many of you if you know, we are pioneering this concept of shared value insurance. We understand that insurance is behavioral in nature, and as such, if we can change behaviors, we have a great opportunity to actually influence the risk that we underwrite. Our model is very much around a connected ecosystem with technology obviously at its core.
Thank you.
I'm Xavier Blanchard, so I've been heading product functions at AXA for a long time, more than 20 years. Different places really, in HQ, in Asia, in France as well, where I'm coming from. You'll have noticed my accent, sorry for that. And I'm currently overseeing for AXA a couple of specialized business lines, of which travel, of which mobile phone insurance, and meaning partnership is at the core of what I'm doing, and tech is at the core of those partnerships, because it would be hard to think about doing partnership without tech as its core in the world of today. So it's really interesting, comes with challenges that we'll talk about, such as scalability, but really good to be here, and thank you for attendance this morning.
Thank you.
Hello everyone, I'm Tarun Kohli. I'm currently Managing Director and Head of New Propositions at Swiss Re, the global reinsurer. The accountability is to drive digital transformation across the group. And additionally, I've taken on the role of Chairman of the Board of Directors for Swiss Re Solutions Limited, the entity we have established to sell non-risk transfer solutions. Really looking forward to the panel.
Thank you so much. So I want to make this as interactive as possible. I have an iPad where people can submit questions who are with us remotely, but that we also have the ability for you just to raise your hand and put a question to these executive leaders of our sector. I'm going to be looking around the room as we go through for those hands up. So you don't have to wait. You can do it now, or I can kick off with a few questions of my own. Okay, stony silence, but I know it's going to change very soon. So let's hear from each of you. What issues are at the top of the agenda for leaders of successful insurance firms?
So, I mean, I guess the most important thing is keeping us relevant. And in post sort of COVID, our sort of core purpose at Vitality is to make people healthy and enhance and protect their lives, and making sure that we actually continue to do that. And very importantly, ensuring that the customer is at the core of everything we do. Now, this may sound a bit unusual coming from an insurance company, but ultimately that is what we certainly believe, is that the customer is going to drive behavioral change. Customers need to get engagement, and that then they need to have a easy access to actually interface with ourselves. And that is what keeps us awake at night, is making sure that we are continuously delivering products that are relevant, that we are personalizing products to their needs. We're not selling products that we think they want. We are selling products that are actually adding value to them over and above the core basics of insurance, which is covering them for the risk. And ultimately, at the end of the day, we believe if we can get that right, our shared value model of making members healthier, unlocking some of what, excuse me, what we call the actuarial surpluses, and we can give that back to members, excuse me, in the form of rewards. It's good for us as an insurer. We underwrite and attract better risk. It's good for the members, they get more value, and it's good for society. So there are no losers in our model. And we continuously challenge ourselves. How can we get customers more engaged? And obviously at the heart of that is technology and digital transformation across our business in every single aspect.
Thank you very much. And I'm going to pause there and just take a quick straw poll, if I may, of people in the room. How many of you have engaged with a Vitality product before? Okay, so you've got a lot of customers in the room there, Neville. Okay, so let's hear next. I'm going to mix things up a little bit. So I'm going to go to Taran next and ask him about his issues at the top of his agenda.
So I think as a reinsurer, if you look into our client base, our clients are navigating through very uncertain times. You know, there is rising interest rate, rising inflation, pandemic is still there, and then the after effects of pandemic, impact of climate change, geopolitical risks, the supply chain disruption. So for us, right at the top of house, it is, you know, what our mission is, to make the world more resilient. And therefore, how can we partner with our clients to go beyond risk transfer? And that is around risk partnerships, that is around risk insights. And that's where the whole digital agenda plays a very, very strong role. How do we balance, you know, digitizing the core as well as enabling growth? And you know, clients always comes first, and it is to understand the changing business context of our clients.
Thank you very much. And I'm going to do the same thing now and ask how many of you have interactions with Swiss Re? There we go. A lot of coverage in this room and on the panel. Thank you. Xavier.
So for me, the number one topic is actually to keep our retail propositions relevant and actually keep the pace in transforming them. We keep saying that a number of retail propositions are broken, meaning the price tend to go down. As traditional insurers, carriers, we may struggle to find profitability, and as a result, we may see that we're actually defocusing from retail to more commercial lines that looks like from external, a more safer space. So I can quote motor, of course, I can quote travel, which is something I know pretty well. And I think it's a matter of pace in transforming ourselves and actually making us at the right cost for the customers. Because for sure, if you look at the long term, I don't think we can expect that motor insurance premiums for a given car can keep increasing. Actually, with less mechanics involved, we can anticipate that at some point, the price of fixing a car may be reduced. So I think for me, just how quickly can we transform ourselves to keep us relevant and keep us actually the right cost and keep making profit from those retail products, because they stay absolutely central to customer engagement. It's very hard to think that, from where we're coming at AXA, say, can we give up on the retail space? It's hard to think that way. So I think that's probably number one. And it goes with the scalability of what we do. What fascinates me, and you heard from me that I've actually worked in different countries, different geographies. It's fascinating for me to say that when we do a big effort in one particular country, how quickly can we translate that to the next country? It's actually very hard. We keep using the same technology, but have just national projects every time, and in a sense keep reinventing the wheel locally every time. So those are my typical issues.
Great, thank you very much, Xavier. And I'll do the same now for AXA. Who's had interactions with AXA? Wow, I think you got the biggest vote.
Okay, in all fairness, they've been around 100 years longer than us.
Exactly, that's what legacy, right?
That is fair enough. But I'll make that narrower in scope, because you're an expert in travel, Xavier, and you're really into the retail line. So travel, who's interacted on travel?
I'd like to see more ends then.
Some of you. So yeah, that's still a big, I mean, that's quite a niche thing. And I don't see a lot of travel when I go to InsurTech conferences. So that's fascinating. Great. So what I want to do now is I want to invite your questions. But if you're still feeling shy, we'll keep going with the straw polls. And I want to look into the future, do a bit of crystal ball gazing now with our panel, and look at the insurance marketplace of 2030. So I think we're in 2022. So I think we're looking sort of 8 to 10 year time horizon. And you probably all have your own views of what the world's going to look like then. Very interested to hear that. Let's hear from our panel what they think the future looks like.
Well, I think, with the developments that are taking place so rapidly around the metaverse, around all of these aspects, the interface with the insurance, the technology innovations out there, whether it's in healthcare, whether it's in motor insurance, whether it's in life insurance, it sort of straddles across the board. If you look at today in the health space, the connectivity from virtual GP consultations to online physiotherapy sessions, mental well-being sessions, interfacing with consultants, interfacing with hospitals, and there's so many digital startups in the health tech area. And how do you connect that ecosystem to make sure that the customer gets one view of it? And that's the big challenge, because you've got all these disparate people or companies or startups coming to the market with brilliant stuff. But how do you actually translate that? And we see ourselves very much as that translation layer. So I see that accelerating going into the future. I mean, we're already measuring everyone in terms of their wellness, their fitness. What's next in terms of understanding behavior, understanding how people are behaving, how motor vehicles are behaving, how anything that you actually insure. So there's a huge amount. You just talk about the motor vehicle industry. Who knows in 2030? Will there be insurance companies? Or will the manufacturers simply, in their driverless cars, embed it? So those are the type of things that we're thinking about for the future. And I really think, if anything, we need to be able to adapt and to make sure that we are ready for this, because you can't predict what's going to happen in 8 years' time. It's very fluid in that regard.
Can I ask you a question, Neville, actually?
Well, you're the moderator now.
It's my job. Hold on a second. Go ahead, Xavier.
Is it about insurance companies becoming coordinators in a way, and especially in the health space?
Well, we've always seen ourselves as playing that role. I think it is quite a dramatic move for insurers to actually start becoming, the platform rather than just the risk taker. So we see ourselves doing both, but I don't think you can in isolation continue with all this technology developments, just ignoring that. It's the connected ecosystem, and that is absolutely critical. If you don't embrace that, I don't believe that you're going to survive going forward.
So just to build on Neville's point, I think the future will be moving from what I would call as detect and repair to predict and prevent. And people will be getting insurance without even realizing. And it will be very, very tailored to your user habits, with the IIoTs, with IoTs, and with AI, you will actually get what you need. And the biggest challenge today is people not knowing whether they are overinsured or underinsured. And especially when you get into some very, very niche, like we have got some very innovative projects in the agro space. In some countries, like farmers have got no clue, and therefore they try not to take insurance. The other thing will be the automation that will play an increasing role. So whether it is underwriting, whether it is claims management, most of the critical processes in the value chain will be automated, and people will probably go with machines having the right of first refusal rather than what we start on the other side today. And then lastly, I would probably see blockchain being a very, very mature technology in the next couple of years. So the smart contracts that currently most or select organizations will be doing POCs, I think that will be quite a game changer in terms of them being ubiquitous in the industry.
I agree with you, Tarun. I think there's no doubt for me that insurance market will be bigger, because as you say, there's underinsurance all over the world. At some points, they're also overinsurance. But as insurers, I don't think we should read that as just a nice journey, a comfortable journey that we're going to make us successful and profitable. I think the big trend that I anticipate for myself is actually its dissemination all across the board, and dissemination in distribution, because if I just look at the number of insurtechs, it's always the same model, isn't it? It's an MGA, so actually you've got the dissemination and the underwriting, dissemination of the distribution. And for traditional carriers, and AXA is one of them, the challenge is if you don't do enough, you'll end up being just a balance sheet, and the rest of the people doing the job for you. So having those MGAs underwriting for you, and having potentially other people handling the claims or automated claims in some aspect. And you may end up being in a position where it's say, hang on a minute, meaning my balance sheet is being used, and it's actually most of the partnership that I see between fintechs or insurtechs, actually traditional insurers. Can I get access to a balance sheet? This is what it is about. And I think this is I see that as a rocket journey, and certainly a transformation journey. Whether insurance companies need to embrace all the tech by themselves, I'm not sure, because that might be too much to swallow, actually, in addition to the legacy.
Thanks very much, Xavier. And I wanted to pick up on something that Neville said about the future. And will there still be motor insurance in 2030? Let's do a straw poll while we're here. Who thinks there still will be motor insurance in 2030?
But
Oh, you raised your hand. Wait a minute.
No. Saying there will be insurance, but not the way that we potentially know it.
So we're not going to be calling it insurance. We're going to call it something else in 2030. Who thinks that?
No, it's going to be still. It's just who's going to sell it.
We'll call it something. Someone at the back agrees with me. Thank you. Because we got to think about, where's my name tag? We've got to think about changing the name of where I work, Chartered Insurance Institute. So passé. It should be something more like around risk, or what did you say? Coordination Institute. Ooh. Okay. So I'm going to pause and see if our delightful audience has any questions, because they're starting to pour in on the iPad, but you guys are here in person. So I've got the final say, by the way, to put those to the panel. So better be good. There you go.
The same question about whether motor insurance will exist, but in 2050 instead of 2030. 2030 is only 8 years away.
8 years away, but I mean, that's a long time in our world, right? 2050, I don't even know where I'm going to be there.
It is, but motor manufacturing, but not in
Yeah,
motor
Mike.
manufacturing. We're still selling cars today that are not automated, that are not even connected vehicles, and they're still going to be in the road in 8 years' time. And so what we need to talk about is whether the vehicles will be ready to change in 10 years, in 20 years, and what will happen with the existing vehicles that are on the road now that aren't connected.
Okay, so we've got a transitional period to think about before we all start using electric, or all of us using electric cars. I think that's the point of your question. Any
I think
thoughts?
it probably won't be, it won't be the way we are saying electric cars. It will be autonomous vehicles, and the insurance for an autonomous vehicles will be will be of a very different flavor, and the groundwork of that has already started. So last year we announced a partnership, for example, with Baidu, around how we can start measuring the risk lens on the autonomous vehicle in China. I think one of the key component of the future will be platform and ecosystems, because no one player will be able to solve the problems that are going to face the industry, and that will be critical. How does the different players, some not part of the insurance industry, how does the different players come together and try to make it so seamless that I certainly believe it won't be called insurance, because it will just be the way of things. If you're buying a car, yes, absolutely, you are covered. If you are traveling, absolutely you are covered. If the flight is delayed, absolutely, with smart contracts, you'll probably, get the claim if there is any kind of delay before you reach your kind of destination. So I'm a firm believer that and it probably won't be 2050. It will be much sooner. I think the way, if you just look in the last 5 years, the kind of disruption that has happened, I think the next 10 years will be quite big change that will come through.
I must say, I'm actually intrigued that you think that things are going to take long. You've got a short memory, eh? In 2020, within months, we had to change the way things happened around digitization, through that period. I think things are going to move a lot faster. You get to that critical point, and it's just going to streamline ahead.
And I believe on the motor insurance discussions, just look at Tesla. I think the discussion point is already a lot about product and liability. What happens is if the Tesla car fails, it's going to be less and less about the driver, because there might be no driver, and more, but what if my car actually misbehaves against all odds, against all schedule, against everything that the car was designed for? Whether that's going to take over to other spaces, I'm not sure, but I agree with you. If we think that every single car sold in the UK in 2030 will be an electric car, probably with autonomous capacity, it might go quicker than we thought, I think.
And I guess if they're autonomous cars, why would you own a vehicle? So,
Absolutely.
Maybe the whole ownership of vehicles is going to change.
I had a question over there, but before I do, I just wondered if we're still on the motor autonomous vehicles point. Are you asking about autonomous vehicles? Health. Okay, let's come to you in a moment. Let's hear from this gentleman here.
So the question is, to what extent do you believe that the insured individuals will still buy the insurance? I don't think that's the right discussion to ask the question whether we own the car or whether we don't own the car. Is the question, is it already fully included? I mean, we see Tesla insurance coming right now up, and this might be the same for all other things. If I do travel insurance, probably I have the insurance as part of it. We might be completely disconnected as consumers from the insurance buying process. What do you think about that?
I'm not sure about that, because you've got two models, basically, and I'll take travel just an example, but maybe as a reflection for other sectors. Is the insurance provided as a commodity by the provider? So let's say an airline or an hotel chain or tour operators, or do we still leave that to the individuals to get covered? And at the moment, we don't like, and regulators don't like, that we bundle products too much. So the bundling is actually really favorable to the customer. And on the other end, the providers or distributors they don't like necessarily paying for the cost of insurance by themselves, because at the moment insurance is a source of revenue rather than a source of costs. So the choice of insurance, you may still, and I think you'll still get strongly the option to say, do I want to get covered, or don't I want to get no covered because I actually don't need it? So I don't think that's going to disappear. We've looked at models in Asia where every time you would use a Grab, because it's Grab that's popular over there, are you getting covered? But at the beginning of the year, or at the beginning of your, at some point, you still need to decide whether you want to get covered or not.
Okay, great. So this gentleman wants to change topic to health. Thank you.
Hi. With all the information and data that we're getting about individuals' health and looking at predicting the types of illnesses they may have in future, is there a danger that health will become an exclusive club and that the regulator will get involved and say, you just can't do all this?
Yeah, it's so interesting. So I think well, I'm going to put this to the panel.
I think when you get into the world of genetic testing and the likes thereof and predictability, it does become quite controversial. But I do believe that with all the information, the key for the future is understanding data, and understanding data from various sources. So it's clinical data, exercise data, behavioral data, all of that data
What data?
collected is going to definitely allow us as insurers to, I believe, design better products, more appropriate products, and this concept of personalization for healthcare, I think, is going to have a significant impact. When we talk about personalization, is feeding intelligent data to our members around what their next best action should be, what they should be doing, giving people access to information, which has not been that easy in terms of disseminating that information about which providers to go to, the referrals of providers. We've launched recently, as an example, a consultant finder that we've used NHS data and our data and patient feedback to actually give members, give our purchasers, the consumer, more visual sort of understanding of what their consultant has done, specialties, etc., and also some form of rating in terms of, we have so much data around, the re-referrals, the mortality, morbidity effects of whatever the case may be. So there's a massive amount of data that is needed, I think, to personalize, and I think that is where the future is going to be. I think when you get into, as you said, from a regulatory perspective, I think everything needs to be based on consent of the members, of the consumers. And I think when there's a benefit to the consumer, they'll give you consent.
Anyone else want to come in there?
I would say the big shift that has happened for the health space is, the insurers trying to optimize claims to prevent claims. And in my last role at Prudential, we tied up with, for example, Babylon, and that was a big hit, especially in the Asian geographies, where you actually wanted people not to become sick. And there was so much education that you could actually do using technology that they will not be sick, and that was the right thing. And it generated kind of more sales as well, and there's a business side to it as well. But that would not have happened a couple of years ago. So and that is true for motor insurance as well, where now you're trying to have the sensors, and if the drivers are ready to share the data, the good drivers will pay far less insurance. And you have now come up with products that are pay per mile. So I think, and all of this is being enabled by technology. And it's interesting how, and again, back to the previous theme, the time is changing very, very quickly. And I think we will see probably in a matter of a couple of years how it is so tailored to the user behaviors through the power of data.
I'm wondering if there's not a shift. I agree with you guys, but I'd like to maybe challenge it a little bit. I'm wondering if there's not a shift that we need to consider as an insurance industry, where basically, as of today, insurance companies tend to be data rich and the customer tends to be data poor, which is an anomaly because actually that's customers' data. And if I just elaborate on motor, we know that the OEMs, so the car manufacturers, won't be able to sell by themselves and trade by themselves the car coming from the data and from the driving of that particular car, and just to trade it with insurers. That's not going to happen that way. We know that the data will be extracted from the car, will be stored in a space where it actually belongs to the customer, and the customer will decide how he wants to handle that data and trade that data with insurance companies. And I'm wondering if on the health space, to your question, we don't have a similar challenge whereby actually as an individual, my medical history belongs to me, my genetics belongs to me. That's the decision that I made to actually try to predict what my health condition can be and keep a better control of actually that data and trade that data with insurers. So at the moment, that's not exactly how we think, isn't it? The way we think is, I'm taking from you your data, I'm matching with many other people's data, maybe static data, and then I make my prices, which leads to the core of an insurance issue, which is, I don't understand your black box. I understand how you're pricing. I understand how I come to that particular point for me. So I'm wondering if we don't need to make a shift on that.
No, I think customer is definitely rich with data. I think what they don't have is the insight, and just on its own, just having the data is not that beneficial. And I think that's where the InsurTechs, that's where some of the fintechs will come into play, because as long as you can translate that data into insights, a lot of customers will be happy to share because they will know what the next kind of action is, what the remedial action is. And I think that's a big shift. And what do we do with the data?
I'm not sure that I agree that insurers have all the data. I think traditional insurers have very little data. They think they've got a lot of data, but they don't have data around behavioral change, buying patterns, exercise, understanding all of that. They've got claims data, which is, yes, it is predictable.
Moment in time, you agree. Yeah.
I want to bring in a question from the floor here.
Oh, yes. Neville mentioned personalisation, and do you think that personalisation is actually a risk to our customers? Because the concept of insurance being a shared risk among a group of people, the more that we identify high-risk people, is that a detriment to them?
No, I think personalisation is not about splitting of risk pools. I think personalisation is about giving customers actions that they can improve their health. I don't think it's about making products just for young and healthy and then leaving a vulnerable risk pool.
If we identify from data, with using more technology, tracking people's heart rates or something, and that's a genetic cause that someone can't help, that is then preventing them from being able to get the required cover at a reasonable price, is that the more that we understand and fill the gap from our models, as the models become more predictive, you're taking away the ability to share that risk out?
I think in terms of genetic testing and the likes thereof, I think there is a real danger of that. I think it really is the responsibility of the insurers to make sure that they're not, making those risk pools at a personalised level. So typically in health insurance, you're underwriting companies at group level, and you need to make sure that there's enough risk sharing at an individual level. But the personalisation is much more about getting those members engaged in what you think they should be doing, or what their next best action is to mitigate future risks. So if you can stop somebody, if you've underwritten somebody for critical illness, and from preventive screening that particular person, if they did X, Y, and Z now, would stop a claim. That's the type of thing we're talking about in terms of personalisation. Not so much underwriting at the point of sale, because you don't have the data. You typically, and that's the very important thing, is you need to collate the data over many, many years of understanding behavioural change.
Before I bring in other panelists, I wanted to do another straw poll. about this data point and whether you believe more and more customers, let's think about millennials, let's say, will be happy to share their data about their health, their exercise, everything they're doing in that space in return for lower premiums. So would they share their data with insurers for lower premiums? Okay, there you go. You got.
Well, I
your
can tell you that is how our model works.
Well, then why aren't more people going for that model now? That's the question.
Because it's not that simple. I think people underestimate the degree of difficulty of connecting an Apple Watch or connecting a Fitbit, to an ecosystem that gives you enough data to actually incentivize people to change their behavior, and the rewards attached to it. So, our connected ecosystem goes way beyond just in these wearable technologies. It's the rewards, making sure that if you actually do your activity, you can go get your coffee. Now you've got to connect with your partners in that regard. So there's I was pleased to see a lot of people saying they've sort of had some experience with Vitality. We don't always get it right, but it is extremely complex, making sure that you can actually get that whole connected ecosystem working from the health side to the reward side. And that's where technology plays a massive, massive role.
Okay, any more questions? This lady here.
Yes. So,
we need a microphone,
I
please.
don't think so, really. My voice is so loud.
We're bringing you a microphone. There we go. Thank you.
So I think my question.
By your mouth, please.
Okay. My question, are you sure? My question is, I want to go to, because actually your question was, what will insurance look like in 8 years? And I want to ask everybody in the room, what do you think the number one building block of insurance is right now? Is it risk or is it client? And be honest. When we start building, do we start from the risk in the center or do we start with the client? Because everybody talks about client centricity, but I really highly doubt that insurance is client-centric. And unless we really move from risk to client, we're going to keep having the same issues.
Okay, panel, the gauntlet has been thrown. Let's have some answers. I see people nodding over there. Thoughts?
I would agree with you. I think at the moment it's still a risk because one of the illusions I think insurance have is to actually have that customer across all lines. And how can I take my customer from motor to health and then to life and then into retirement and then to travel and whatever. When you look at the end of the day, your upsell, your cross-sell rates is actually pretty poor, right? So just taking example, retail's business I know in continental Europe, after putting like good advice in front of those clients, you get to a point where you've got 2.5 policies per client. That's type of ratios, if you're doing not too bad, that you're getting. Which means that de facto what you're doing is you're hooking a client with a one particular risk, and you take a risk angle actually to acquire this client, and you stand on that, and by many efforts maybe you'll get to a second product. So I tend to agree with you that at the moment this is how the model works. To the point I was making earlier on dissemination, I think the ownership of a client by an insurance company across several lines, I think it's kind of a dream. I think it needs to involve much more parties into the game, parties that are just more relevant. I tend to see insurance as about expressways. And I can take the example of travel again. Is a tied agent in France or in Italy the expressway to buy travel? No, absolutely not. An airline is, a tour operator is, not an agent. So this is just an example of saying, let's be prepared to that dissemination. Let's understand what is the core value that we bring to the table. And I think, despite the fact that you would like to move to a more customer-centric company, maybe the core asset that we have is still the ability to help people doing a better job with their lives and taking care and having the right solutions for the coverage?
I think it's a balance. I think if you're going to get people to say, yes, it's all about the customer, which is absolutely critical, but you don't worry about the risk, I think you've got to look at both. I think it's getting the balance right. But I think from our perspective, you know, our core purpose is making people healthier. Now, that is good for people. I think if something is good for your customer, it will be a very different mindset that you take into your product development process. So we certainly do put the customer at the heart of what we do, but very, very importantly, have very strong risk management capabilities and understanding to be able to price correctly, to be able to renew correctly. And I think the real test is, you know, from our perspective, the renewal rate, the number of people who renew with you, is a good indicator of how customer-centric you are. Because if they don't value you as an organization and what you're doing, they'll simply shop around and it will be a race to the bottom on price. So
I have a follow-up thing. But where do we lose the client? Do we lose him in the underwriting, or in what is the most important part of the client journey? Because again, we're talking client journey. Is it when we sign him up, or when we pay his claim?
okay, so I'm glad you asked that question, because it's
Because I think we're not good at the second part.
What we focus on is the date from when they become a member of ours to their first engagement and earning a vitality point. That is our barometer. So the sign-up process and onboarding, and yes, we're all going to get good at that, and we're all got to be more efficient, and we're going to get efficiencies coming out of it. But we are obsessed with making sure that when you actually do engage, when you have signed up, that welcome call, and using technology, interesting technology that actually allows us to actually get into the customer's computer screen and actually navigate for them, with them. Once they do that activity for the first time and the second and the third time, and we know that if people use X number of reward partners and they engage in a certain period of time, their propensity for renewal, their propensity for behavioral change, it's all linked. It's all data driven. But I think it's an excellent, excellent point. You know, we are trying to transform insurance from, you know, not just signing up and putting it in the drawer and hoping that if something happens, it will help you.
I think that
Well, we're gonna just take one more question, running out of time, and then we're gonna have a fast question for each of the panelists. Okay.
Thanks for giving the opportunity. First of all, thank you for the very insightful sharing and being an ex-Swiss Re and ex-Vitality, and now venturing into InsurTech segment, trying to focus on insurance distribution. I've been fortunate to get a bit of brief glimpse about the different activities happening in the insurance value chain. My question is around recent years. You know, we've seen how data and technology has been leveraged to transform insurance, how insurance is sold and purchased, especially around the what and the how. You know, how we do customer profiling, how we do risk assessment, how we do insurance underwriting and claims process, etc. Do you see data and tech will gradually to play a role in the why question? What I mean by why is the awareness generation.
We've got to come to the end of the question.
Yeah.
Thank
So
you.
do you think technology will help to create contextuality to convince people there's underlying risk they need to buy insurance to protect themselves from? Okay, thank you.
Okay, who wants to come in on that? It's a sort of...
I think it's a given, right? I mean, data and tech, as we have discussed all along, is going to play an increasing role. And for us, you know, we have been highlighting, you know, how we want to transform ourselves to a risk and tech-enabled organization. And data and analytics will play a role in every part of the value chain, in every critical process.
Okay, so what I want to do, because I'm conscious of time and I've got a light flashing at me, and you all want to go get your coffee and your networking, so I'm going to take a quick tour around the panel. What's the biggest change we're going to see in the next 5 years?
I think future is sooner than we think. So it will be automation. It will be insurance without realizing insurance. People will be insured whatever they buy, whether it's motor, whether it is travel, and it will be part of the purchase process of the product.
Thank you.
I would say automation, but more on the claim side. I think automation of claims is going to be a very driving trend.
Automation of claims. Neville?
I think it's around customer centricity and customer engagement and using technology to actually drive that.
Well, that has been a fantastic panel. Please put your hands together.
Indeed, Melissa, that was a fantastic panel. Thank you for your fantastic chairing, and thank you, Melissa, and to all of you gentlemen for sharing your insights. It was a brilliant way to start the day. It was a shame we can't go on for a few more hours. You seem to touch all the challenges, all the innovation, and talked about all the things that will transform this industry all in such a short session. So thank you very much for doing that. And hopefully the discussions with our panelists will continue during the networking sessions throughout the day. But you can't network yet. The agenda continues. Thank you. Thank you. We now will go on to a keynote presentation entitled DA 3.0 Standards-Free Data Exchange. It's my pleasure to be introducing very shortly Dave Connors, who is CEO of Distribind. Dave has over 20 years of experience working for insurers, brokers, consultants and software vendors in technology and innovation roles. And for those of you who aren't aware, Distribind is an industry leader in next generation delegated authority management. So an important industry development that we're delighted to be able to talk to you about today by inviting Dave to the stage. Is Dave here? There you are. Okay, I should recognise you. Dave, welcome.
Hi everyone. So yeah, I'm Dave Connors. I'm the CEO of Distribind. Distribind is an automated data exchange for delegated authority. We get data through the value chain from distribution to capacity in very automated fashion, complete data transparency for all parties at every point, and minimal manual touch points. So I'm here to kind of talk about what we call DA 3.0 and standards-free data exchange. So I'll be touching a little bit on one of my pet peeves, which is the idea of common data standards and how we consider those a crutch for bad engineers. So I promise I haven't just put this in for topicality with all the news about Twitter and stuff. But if you've heard me speak before or spent much time with me or follow me on LinkedIn, and if you don't, you really should. This quote lives rent-free in my head. I think about it all the time. And I remember talking to someone about Distribind in the early days. And what I said to them was, if I get this right, Distribind would be a system you hardly even use. And they looked at me like I was mad. But what I meant was, you're just looking at it and you know if things were good, if things were bad, and you take some action, but you wouldn't be working in Distribind. And Elon Musk obviously said it a lot more snappily and a lot more pithily. And that's why he's the richest man in the world and I'm not, yet. But today, in the world of what we would call DA 2.0, you're touching 100% of the data all the time, good or bad. We worked with a MGA. They would take an average of 14 submissions for a single bordereau before it could get agreed. You know, so you go through all these multiple iterations, you have to touch the data constantly. DA 3.0, that is about just getting the data through the value chain seamlessly, without any manual touch point, zero manual touch point for good data. Even errors can get resolved automatically at a lot of points, and input is always the last resort. So if we explain a little about what we mean by DA 3.0, DA 2.0, etc. You know, at the beginning, in a kind of pre-PC pre-computerized world, granularity was very expensive. So all that really mattered was the aggregate position, monthly, often quarterly. It's all anyone really cared about. And this is what we call kind of DA 1.0. But as sort of PCs came around and spreadsheets came around, you get this kind of increased interest in granularity because data processing, data storage is much cheaper. But obviously then people are jumbling around with different types of spreadsheet, different formats. And this is kind of what led to the idea of a common standard. This idea that, you know, if only everyone sent the same spreadsheet in, wouldn't life be great? You know, and so insurers and MGAs would argue about what the approved format is, what a data field should be called, what the data type is. And it hasn't really worked, has it? You know, it's still the biggest pain point really today for anyone working in delegated authority is that spreadsheet. So what we mean by DA 3.0 is standards free, standards agnostic. So it allows any company, group, or market to have their own internal standard while receiving data in any format, and especially data outside of that standard. So it means that the insurers and the MGAs aren't fighting about spreadsheets, about code sets, about field names. Data just flows in and is visible by any party in the chain in the manner and in the format that is suitable for them to achieve what they need. But there is no requirement for any one of their business partners to follow their same standard. So the bordereau, and you know, I don't know how familiar everyone here would be with delegated authority, but the bordereau is kind of the standard bearer and the bête noire of DA 2.0. It's just the kind of monthly record of policies written, premium paid, claims incurred, whatever, usually in a spreadsheet format. But a spreadsheet is inherently uncontrolled and inherently uncontrollable. So one of the biggest pain points for producers or receivers of data is the manual production and the manual processing of that bordereau. And that can come down to, you know, different formats. It might not be able to see very clearly, but you should be able to tell that all three of those spreadsheets look a bit different. They're all supposed to be the Lloyd's v5.2 standard. So everything would look a little bit different. You have people who don't know how to wrap text, so they split a header across 2 rows. You have different names, you have different punctuation, you have typos. And what that means is everyone is touching that data. Everyone is having to manually pre-process data. And there has been this big idea that you should have the common standard. Now that may be operated at a market level, like Lloyd's with the v5.2, or it may be an individual insurer going around arguing with their MGAs, you must send me data that looks like this. Pretty much everyone has had that plan. But again, if you've ever spent any time with me, you will know this is another one of my favorite quotes, lives rent-free in my head. We once spoke with an insurer that had spent 6 months internally agreeing what their bordereau standard should be, and then 18 months going around to their MGAs, trying to get them to send it in that manner. And the words to me was, we may as well not have bothered. They had about 5% take-up. The Lloyd's v5.2 has been a failure. There's been, the premium is static, the take-up has been poor. We were working in the Lloyd's lab last year with a managing agent, and we had the bordereau technician talk us through everything she would have to do from receiving a bordereau to getting it loaded into their previous generation legacy bordereau system. And she talked us through it, deleting duplicate columns, deleting rows that didn't have real data in them, total rows, subtotal rows, how it would handle, because the bordereau started on row 7 this month, not row 9. And she said a good bordereau would take her 15 to 20 minutes just to get into their system, and a bad one could take up to 40 or 45 minutes. We just took it, we processed it. We didn't touch it before, we just processed it and told them, this is what the data is. These are the things that are right, these are the things that are wrong, this is what you need to do. her words was it would take me twice as long as that to delete one column. And we achieved that by ignoring what the supposed standard was and just looking at what the data was. And I've already kind of said this, but the common data standard approach is a failure and has already failed. So since the introduction of the Lloyd's v5.2 standard, the London market premium has basically remained static. Whereas if you look at other markets, the US market was already bigger, US program business, and it's growing rapidly. So we look at common data standards as the failed answer to yesterday's problem, and the real answer is to move to what we call DA 3.0, standards-free data exchange. But what do we mean by that? So I'd like to start with a little thought experiment of which of those two pairs has more in common, the mouse and the whale, or the biplane and the jumbo jet? And the answer is the mouse and the whale, because they have the same internal structure of the mammalian skeleton. And that same internal structure can be used. It can create the mouse, it can create the whale, it can create a dog, a cat, every single person in this room. You will never, ever, ever take a biplane and scale it up into a jumbo jet. That is something that the market keeps trying to do. But actually, it is the taxonomy or the structure that really matters. So standards-free data exchange is not a free-for-all. It's just that focus on structure and behavior and not format or label or even value in cases. So if you think of the mammalian limb, it can be optimized for grasping, for flying, for running, for jumping, throwing. It doesn't have to look the same. It doesn't have to be called the same thing, each individual part. They don't have to do the exact same thing, but their relation to each other is obvious. And people have said to me, well, you're just semantic nitpicking here, you still have a standard. And my answer to that is not really, because there's an implied structure, because there's a similarity in what they do. But so same way, if you're talking about an insurance policy, an insurance premium, an insurance claim, yes, there's an implied structure there, but you don't actually need to agree on anything else. So two companies who don't agree on a single field name, a single code set, how they're going to identify classes of business, what the layout should be, they should still be able to share data very easily. Even, they may not agree on whether multiple locations on a property risk should be in repeating columns or repeating rows. They should still be able to share data. In the world of DA 2.0, that's impossible without one of them either changing their standard or one or both doing a lot of manual pre-processing. In DA 3.0 and in DistroMind, the data just flows. But to be clear, this is not just an intellectual flex. This is exactly what DistroMind does. So some of the practical applications and use cases of what we're doing, we've taken a v5.2 compliant risk bordereau. We've taken a premium statement with 8 data points in French. We've reconciled it to the risk, pulled the risk data across, and output a v5.2 compliant premium bordereau. We're using OCR to process marine cargo declarations and XML messaging to process Dutch financial crime. And we're able to put all that into a single platform, single process for a global insurer and not a bordereau in sight, completely bordereau free. We have an MGA who has data they need to send to their carrier that they do not receive from their retail broker. We generate that data for them based on the other data, and we send it out to the carrier. No fighting with their retail broker, no banging the table saying, why aren't you giving me this or that? Just worrying about whether the business is good. We are facilitating the entire creation, submission, error handling, and reporting of data entirely via API without touching our UI once. We are receiving 2 completely separate transaction code sets and transforming them into the insurer's internal code set, while simultaneously converting 2 wildly different bordereau formats in different languages into a single consistent internal format for their EDW. And we're taking an EDW from an MGA and turning that into the bordereau that their various different insurers need. And not a single one of those things needs any producer of data to change what they're doing today. And it doesn't need any single receiver of the data to do any manual pre-processing on that data. We're also amusing ourselves internally by trying to find the very worst possible bordereau that we can still turn into a compliant London Market CDR. That's not for a client, it's just because we can, so that one is a flex. But so it's clear, really, that when I'm talking about DA 3.0 and standards-free data exchange, it's not a description of a future state. It is the description of what we do today. It is how we are changing the paradigm of delegated authority for our clients, and how we would love to do it for everyone else. This is the way it should be. So if you would like to find out more, my details are up there. Please reach out, or I and some of my colleagues are going to be around for most of the day, so please come and say hello, book a meeting. Thank you very much for listening. See you. Thank you.
Dave, thank you very much for a very insightful presentation on a very important industry development. I very much appreciate your insights on structure and its impact. Please do follow up with Dave during the networking breaks, the first of which is now. You have earned your coffee, so please do enjoy some coffee and biscuits. After you've networked for half an hour, you have a choice. You will probably need to clone yourself because we've got fantastic panel discussion here about insurance fraud and security and how you can protect your business. But we also have, starting after the break, the demos. We've got innovative new solution providers next door. So please choose which room you'd like to be in, or split yourself in half, or send your colleagues to the other one. And we'll see you in half an hour, either here or next door. Thank you. Welcome back. Welcome back, ladies and gentlemen. I'm going to start to try and bring people in when they hear that we've started on this fantastic session. And it's very hard to drag away from your coffees and your networking because it's almost a new thing after the last couple of years. But please do that. It's my pleasure to welcome you to the next panel discussion, which is all about insurance fraud and security and how to prevent and prepare your business. And it's my pleasure to welcome as our chair, Andrea Garcia Beltran. I hope I've pronounced that correctly. Delighted to have Andrea here to chair this session. Andrea is head of cyber underwriting UK specialty lines at RSA, with a lot of extensive senior level experience from time at RSA, Aon, and BBVA, and also a Women in Tech Excellence Award finalist last year, I understand. So
thank you.
Well done that. But it's a pleasure to welcome you, and please do introduce your session and your panelists. Welcome.
Okay. Thank you, everyone, and welcome also to everyone that is that is also listening to us virtually. So today's sessions, I guess we're going to start with a poll, just to introduce the topic. And I guess I would like to understand from the audience if you actually think that the pandemic has actually changed the behavior of criminals. 100%. Yes? Okay. And now, 2 years down the line, do you actually think that companies are prepared to fight the new ways of fraud? No? No? Yes? Okay, and what about in terms of cybersecurity? Do you think companies are well prepared? They do have a robust cyber hygiene? No? Okay, you're very quiet, but I hoped with this topic today, after the session, you will feel more comfortable talking about that. So I guess that will help us to introduce the first question. And I guess it's also very important to highlight that with the digital economy, this topic has actually become very important. And as you are going to hear here today, there's been an alarming spike in claims, not just in the insurance industry, but as well in terms of malicious scams. And also there's been a lot of fraudulent notifications. And I guess this is highlighting the fact that with digitalization, companies are still not prepared, and there are very sophisticated scams and tactics. Fraud has actually become the best source of income, and there is a need for companies to start looking into that, tackle that, and also increase their cybersecurity. So the first question, I guess, is how has remote working changed the threat scenario? Are there any new vulnerabilities out there? Are companies prepared? Who would like to take this question? Maybe Tom?
Yeah, well, I think obviously with the move to remote working, I think that means that there has been generally a shift of the risk towards remote access protocols, towards cloud infrastructure. And I think it's an interesting that you raised the question to the audience, are people prepared? And I think one of the things that I took away from just talking to other people in the industry is that a lot of companies, some companies were already doing remote working. Some industries were a lot better at remote working before. I would say that London Market Insurance is not one of them. So I think quite a lot of companies had to fast track their plans to move to remote working. They had to bring in systems, bring in new softwares, develop new processes that maybe they didn't have before. And unfortunately, as we all know, generally when you hurry something, things get missed. You might miss a certain vulnerability. You might not do as much research into whether that software fits your current system and your security. So I would say that it's definitely created new avenues for fraudsters to attack with that, and all of the additional endpoints that people using their own devices at home, maybe not updating their software and when they're supposed to. So yeah, I would say it's definitely, whether it's increased it is hard to say, but I think it's definitely created new avenues and made it a little bit easier in some cases for fraudsters.
And in terms of the notifications, perhaps have you actually seen an increase in fraud notifications?
Well, touching on Tom's point, we've all had to adapt in the pandemic and during the periods of lockdown that we've been through. Anybody who says they haven't had to make those adaptations probably isn't telling you the truth. We've Allianz Global. We're a global company providing international insurance solutions for multinational companies, and in that respect, we've always worked across multiple jurisdictions, multiple territories. Our project teams are global teams, so there has always been an element of working in virtual teams remotely and harnessing the technology to still be efficient and effective in our jobs across the different territories that we operate in. So to a certain extent, we were ready for the move to working from home, but there have been adaptations that we've had to make. And just as we've adapted, we've seen fraudsters and bad actors in society also make those adaptations, because a lot of the traditional avenues for committing fraud that were previously available to them have been closed off also by the move to remote working and society really coming to a stop. So there have been challenges from a fraud perspective in that fraud has moved and evolved and looks different today to how it looked pre-pandemic. And there are several reasons behind that shift in fraudulent behaviour. But in terms of where we are as a fraud fighting community, the move to working remotely, really, the point I would stress here is that you cannot underestimate the value in being present. So pre-pandemic, some of my best fraud detection happened in the lift, because I was there and people saw me and they were going about their business and they'd mention to you in the lift, oh, I've got this thing that I need to refer to you. There's this thing that I've seen that's suspicious. And seeing you here is the reminder that we have a fraud process and that we need to adhere to that and comply with it. And I would say silo mentality is the enemy of effective fraud detection strategies. And it's difficult enough working in insurance where we all have specialist silos. When we went to home working, those silos increased in number and reduced dramatically in size. So we've had to be more proactive in our approach to finding fraud. We've had to reach out more, we've needed to carry out more audits, and when it comes to fraud detection, we've had to go and look for it and not be reliant on what people bring to us. So there have been dramatic shifts as a result of the pandemic, and certainly the behaviour of fraudsters has adapted just as the behaviour of everybody in this room has changed.
Okay, that's very interesting, because I actually thought the opposite. I thought that the remote working increased the ability of carriers to be able to manage the incidents, and also, I guess, from the cost-saving perspective, it was also much better. I don't know if there is anything that would you like to add in terms of that. Do you believe that it has been cost-saving for carriers? The fact that now everything is done remotely, perhaps now with cyber incidents. I don't know what are your thoughts about that.
I think, so for cyber incidents, it's definitely, if there's one positive that's come out of this whole situation, is that there's more of an acceptance that things can be done remotely. So for your incident response service providers, they previously, insureds would be very much like, I want boots on the ground, I want those technicians in my building, working on my computers, using my keyboards. But there's a lot more acceptance of remote working, so it's a lot quicker for incident response teams to get involved, ramp up, and deal with urgent situations. So I think that has been one. It's easy to kind of sit here and scaremonger and kind of it's all doom, but I think there are definitely some positives that have resulted probably in some cost savings and efficiency.
Okay.
I would just add to that in terms of kind of insurers adopting kind of new technologies and working with third parties. So I work at Anthemis, we're an early stage venture capital fund that focuses on insurance and risk management, and what we're seeing in the industry is actually an acceleration in insurers being willing to work with new technology providers to solve some of these issues that traditionally they would try and handle in-house. If you take cyber startup venture funding, for example, in Q1 of this year, it amounted to 5 billion globally, which is a 50% increase on last year. And that means that this year is on track to beat the 20 billion that was invested into cyber security startups last year. And so while, it is definitely still a problem, and I think we are very much at the start of using technology to tackle this problem, we have seen this acceleration in both adoption and also kind of insurers willing to work with third parties to tackle some of these problems.
That's actually a very good point, and can actually help us move nicely to the next question, which will be how can insurers integrate anti-fraud systems into the underwriting tools and processes that we currently have available?
I think for me, turning to the underwriting, I think what we're seeing in the cyber world, and it's something that a lot of insurers are beginning to offer, is pre-incident services and consultancy. So I would say up until fairly recently, and this is certainly something that we'd seen at Taker Marine Kiln as a London market insurer, we'd kind of seen that we have the offering out there, but insureds weren't particularly looking to engage with that. They were like, I think uptake was relatively low, but what we're seeing now is increased uptake on that, and that is one way in which businesses can absolutely improve their protections against fraud, because you have the opportunity to interact with expert consultants that can help you not only look at your systems, so have you got end-of-life software that's still in place that presents a vulnerability, and is there a way that that can be moved? Have you got certain processes, so is the way that your business operates, is there some vulnerabilities in there, not necessarily in these systems themselves, but just how you interact, how the humans in your business interact with your technology. So I think that's one way in which cyber insurers can integrate a little bit more anti-fraud, more of an anti-fraud approach, is really getting in at the beginning before an incident happens, before you have the panic and the stress of being in the midst of a cyber attack, and trying to close some of those gaps early.
And maybe from the claims process point of view.
In terms of claims, I would echo what Sophie has said about the need for investment in anti-fraud tech in claims. And it's because we have had this shift from being a reactive function of the business to being more proactive and looking for fraud before it occurs, trying to predict where pockets of fraud may emerge. We have also made those investments in anti-fraud tech in claims to assist us in and to really augment our anti-fraud proposition. And I think there has been a general change in insurance claims across the industry. That tech was always a wish list item. It was always something that would be nice. It would be a nice bolt-on to have if we could have that tech sort of 5 years ago. Post-pandemic, it's a prerequisite. It's your ticket to the game. If you want to do business with an insurer, you need to demonstrate that you're harnessing the best tech to mitigate the fraud risk. So there has been this shift in attitude towards fraud detection technologies, and certainly that's echoed in the investment that the insurance industry is making in that space.
Yeah, and I think what's interesting is that I feel like the claims process historically was just seen as a kind of back-end sort of table stakes, whereas now it's actually a real differentiator in terms of customer experience, and the more investment in tech and in sort of that experience for consumers means that consumers are like choosing insurers because of that process, which I think is an interesting sort of repositioning of how important the claims process is.
Yeah, I think I would echo that entirely. I think claims over the years, it was always something that was looked at as money out the door, isn't it? So it's always been looked at in a slightly negative way. But now I think it's really emerging as a profession, as something that you can make a full career out. It's not just a job; it's a profession, and there are certain skills that are very key for proper claims management, particularly when you get to some of the things that I'm seeing at Tokyo Marine Kiln, where it's large global companies, and they're looking for that expertise, and just that opportunity to really engage with someone that has experience of what happens when things go wrong.
So talking about the shift in fraud post-pandemic, I would like to do a poll and see if the audience knows, in terms of these three lines of business, which one do you believe that nowadays is the one that has more fraud claims or notifications? So cyber insurance, anyone? No? No fraud? Okay. Motor insurance? The vast majority of the audience, okay. And what about liability insurance? Just one person? Okay, right. So I think this will open very nicely to our next question, and is what are the major sources of fraud, and if there are any emerging threats, and then perhaps just to give them the answer from your perspective of what you're currently seeing in the notification landscape in the insurance industry.
Yes, I don't think there are any safe areas. I don't think there are any areas that are free from fraud. I would say that as a head of fraud. It's self-preservation to a certain extent. Traditionally we have seen fraud migrate. Fraud moves around, it doesn't stay in one place. Historically, motor was always a place where fraud gravitated to, but fraudsters, as a general rule, are motivated by three things. That's the risk of getting caught, it's how lucrative the fraudulent endeavour is, and so we've got the risk of getting caught, how lucrative it is, and also the amount of effort that's required on their part. And for that reason, given those fundamental motivations of the fraudster, motor doesn't actually look that attractive anymore. You know, you have to own a car, you have to find somebody else to have an accident with, you have to actually bend metal, you have to crash cars into each other, and that has to get through all the levels of scrutiny that insurers apply to that. They know that there's a high risk of getting caught in the motor space. Motor does still attract high levels of fraud, but pre-pandemic we were seeing the migration of fraud into the casualty liability space, where actually you don't have to have an accident at all, you can just say that you did. And you know, if you could say that you were in a supermarket on a given day and you slipped on a wet floor, or that you tripped on a defect in the pavement, and you didn't really have to provide a huge amount of evidence. So the returns were more lucrative, the risk of getting caught was lower in the casualty space because it was in our blind spot, and yes, it required a lot less effort on the part of the fraudster. Post-pandemic, where we are now, is the fraudster, there is a concern that fraudsters are removing themselves another step back from the loss event, from the peril, from that bent metal. They're taking a further step back. And actually, what are the avenues that are easiest for fraudsters and the most lucrative at the moment? It's to hijack a legitimate claim. So to insert yourself into an email exchange and re-divert settlement funds into your own bank account, or to take advantage of somebody else's legitimate policy. You hijack the identity of your insured and use that identity to bring a claim against a legitimate policy that looks legitimate. So post-pandemic, what we've seen is the advent of fraud as a service industry. The real bad actors in society at the moment aren't crashing cars into each other. They're selling the know-how and the expertise, not even on the dark web anymore. It hides in plain sight. It's on social media. I was having a conversation with the heads of fraud at two very well-known delivery companies, we'll say that much. And they were pointing to adverts that are out there on Facebook offering discounts on delivery services. You know, do you want 20% off your next order. And these adverts look, for all intents and purposes, to be legitimate, but it's criminal enterprise. It's people harnessing stolen credentials and credit cards, using mule accounts to just hijack a little bit off every transaction that goes through those companies. So we have seen the rise of fraud as a service industry. It's out there, previously hidden away in the dark corners of the dark web, but now out there in hiding in plain sight. And we have these bad actors in society who are facilitating fraud. They're selling the bots, they're selling the know-how, they're selling their knowledge of our weaknesses, and actually not involving themselves in the fraud at all, just transacting and benefiting from selling that know-how onto others.
Yeah, and I think in the cyberspace, I pick up on your point, Gareth, where about inserting themselves into the process, and that's absolutely something that we're seeing. So I think when you talk about cyber insurance, everyone talks about ransomware generally, and that's the big sexy thing that everyone's always talking about, and it's quite right, because it is a bit of a scourge at the moment, and it's really, hit insurers very hard. But what you've also got is business email compromises, which is you have these situations where the bad actors, again, insert themselves into the middle of a transaction. And I was reading an article earlier this week about the Australian property market, and this goes to the point about fraudsters shifting to what options they have available to them. The Australian property market it's hotting up again after the pandemic. It's got relatively light controls, and you've got big sums of money moving around. And more's the point, you've got vulnerable people in terms of SMEs and individuals having their money taken. So it's a big problem, and that's exactly what we're seeing. We're seeing fraudsters and hackers inserting themselves into that process and redirecting the money. It is something that is definitely on the up. Hidden underneath the massive tide of ransomware, there are other issues out there for sure.
Yeah, and I think there's definitely an education gap in terms of consumers and understanding these risks, because we've also seen acceleration because these fraudsters are playing on the fears of consumers, and we saw a lot of kind of COVID sort of phishing emails at the start, and then kind of vaccine, etc. So and it always feels like it's a bit, consumers will know when something's gone wrong, and then it's reported and then it's dealt with. And I do understand that it's very difficult to educate people before it happens, and that I don't know if that's the insurance industry's or it's the government, or whose problem is that? But I do feel like there needs to be some more investment into that. Absolutely.
And when it comes to talking about emerging threats, I'm always slightly reticent about predicting the future and what may happen. I was at a talk with the IFB. I delivered a talk to the IFB just as we were going into lockdown, I think. And I was talking about how businesses were going to get hit hard by lockdown, and how there was the potential for huge amounts of business interruption fraud. And I was briefing the industry on that topic and that potential threat. I didn't foresee the Chancellor stepping in and putting £11 billion into the economy, sort of no questions asked. So we never really got that hit from fraud the way we thought we may be hit by it. But I think what I would say for the future is that talking again about silos and silo mentality, we've always handled issues of information security as separate to fraud. And those lines, those distinctions are becoming more and more blurred. In the last 2 or 3 years, I've learnt more about machine learning and AI and predictive modelling than I ever thought I'd have to do in my job as a preventer of fraud. And I think the fraud fighters of tomorrow, and the real threat is that we don't keep pace with the knowledge of the fraudsters in this space. We need to be ahead of the curve and training our fraud fighters about the technology and joining those two ways of thinking about things together. We need to get better at recognising IP addresses and identifying bad actors so that we can shut them out of the insurance ecosystem altogether.
Yeah, and I think just adding to that, this is where kind of collaboration really comes into play with the insurance industry, because of, when you have industry-wide databases of bad actors, or when you're sharing information to ensure that on a whole it's protected. I think that's a kind of a really important part of it. And I know like things are happening, but I know insurers need to compete to win, but like this feels like a real point where collaboration could be really positive.
You mentioned artificial intelligence. So what do you think is going to be the impact of artificial intelligence in the future of the insurance industry?
I think it's integral and almost inevitable that we will rely more on automated fraud detection processes, that AI will play an increasing role in our lives. I think the caveat I would add is that I haven't come across in the marketplace a silver bullet that means that I don't need a fraud team, that I don't need human intelligence and human judgment. I think everything in the AI space serves to augment and facilitate fraud detection. It doesn't replace human endeavour or human thought. I think there are challenges about integrating AI into your fraud detection processes. One of the things I've encountered in the last 2 years is that the people almost need to have an empathy with the logic, and they need to understand why the machine makes the decision it does. Where there is this disconnect between what the machine says is suspicious and what they in themselves, that intuitive sense of something not being right, and those things don't marry up. There is a mistrust of the AI. So there is a lot of education to be done, and people need to understand their role in retraining AI and these predictive modelling processes, and that you need to build these virtuous feedback, smart circles into your business, so you're constantly educating the AI to reduce the generation of false positives. But in terms of the future, it's inevitable that there will be these integration of technologies. We will need to do that as fraudsters become ever increasingly more sophisticated in their attempts to commit fraud against us. But it's not without its challenges.
And what about in the cyber claims environment?
I think it's certainly, so the use of AI I think certainly depends on, it's going to differ depending on what your business is like. So, you know, a large firm like Allianz may be very different to something that like a Lloyd's syndicate might do in terms of the players that are in the chain and what their books of business look like. But I think in terms of cyber claims, the thing that I see, it's already happening to be honest, where AI can have a big impact is when you're dealing with a situation where you might have a compromise of data, it's using AI to basically look at that large block of data and use that to try and work out what information may have been impacted, what type of information, is it personal, is it notifiable, and that we're already seeing certain companies develop their own AI, and it's already starting again to just reduce, particularly with business email compromises, it's really starting to reduce that cost, because the cost of so you've got to find all the data. So if you imagine like an email inbox compromise, you've got to, or multiple inboxes, so you say you've got 5 inboxes, you've got to check all of those folders, find all the emails that may identify which ones might have personally identifiable information in there. You've got to deduplicate that, which again is quite an intensive process actually, is working out how many individuals you actually have to notify. And I think AI can definitely have an impact there because it brings that ability to more quickly and efficiently analyse large amounts of data. And I think that's where the strength lies.
And just picking up on something that Gareth said, one of the emerging sectors that we're seeing in venture at the moment is around audits and controls around AI and models, because you know, like you said, you can't just sort of plug it in and go. You need to have this kind of feedback loop. But actually, you know, we've seen a lot of instances where you let AI kind of run wild and it goes wrong, and it kind of will predict the wrong thing because you're not checking it and tweaking it and make sure that it's staying. And I think the more that kind of regulators get on top of this and are holding insurers accountable to their AI models, the more that this will become important. And so kind of having controls, having an audit system, so you can really kind of explain, one, the choices that are made, but two, kind of any kind of changes or kind of shifts in the way that AI is working, I think it's going to be really important and kind of emerging piece of the industry.
That's very important. I agree. So how do you believe you can integrate the human process with all the anti-fraud technologies that are now available out there? Not anyone? Maybe, I don't know, Tom?
I think, yeah, picking up on my previous point, I think it's, you use the AI, so in my view it would be, at the end of the day, like, and I think Gareth has pointed this out, is that you still, certainly on these larger, more complex cases, you're still going to need human people to make those judgment calls about, is this something we take forward? Because, as I'm sure, like Gareth knows, you know, fraud is you have to make sure that it's very well evidenced, and it can be it's quite a high bar to prove. So if you're going to go with it, you need to make sure you've got a good case. So, you know, it would mean, for me, integrating anti-fraud systems, AI, that kind of thing, would be that you allow your, you know, the Gareths of the world to spend their time on those cases where they can have the most impact. So the larger, you know, high value, more complex, where is his judgment going to be more efficient, or more effective, I should say, and then utilize the technology to kind of, deal with maybe the lesser aspects of fraud, but also to fuel those anti-fraud teams and give them more power and more ability to pursue those fraud cases.
Absolutely. You know, speaking to the specific challenges of integrating AI into your fraud detection processes, first of all, it can't make people's lives more difficult. If claims handlers work very hard, they're hard-working people, they're professionals, they're experts. We can't add a layer of complexity to what is already a difficult and challenging job. So whatever AI you introduce, it has to make their life easier, and it can't present another hurdle, another barrier to delivering for the customer. And that's really the second point. Whatever AI you introduce, it has to work in the background seamlessly. It cannot interrupt the customer journey. So it's very easy for me to talk about fraud like it's happening everywhere all the time, but it's a very, very small percentage in reality of the claims that we see that actually may be suspicious or may warrant further investigation. The reality is that the vast majority of our claims pass through our business, and what we don't want to do is to put in place any barriers or challenges to that customer journey and that customer experience and frustrate that. We don't want to be generating complaints, and we certainly don't want to fall foul of any regulatory judgment by introducing a technology that interrupts what's a seamless customer journey for the majority of our customers.
Yeah, totally.
Yeah. Oh, sorry.
No, please.
I was going to say, the only thing that I would add is like AI needs to be taught by humans. That's the only way that it's going to get better. And that, I don't think that's ever going to go away, because it's integral that, one, it's taught and that's how it sort of forms, but secondly, kind of there's always going to be exception cases that AIs can't deal with, and that it will require humans, and so there's always going to be humans there. The hope is that you just need less people, so it's kind of augments it so that either you get, you're only looking at the like really complex, fun stuff, or that you can kind of distribute the work more effectively and efficiently.
Yeah, and I think to that point about training the AI and the need for human interactions, it's vitally important that we are constantly re-educating our systems because of the nature of fraud. It moves around, it evolves. So fraudsters are constantly challenging our processes to establish weaknesses, either to exploit themselves or to sell that know-how onto people who will exploit it. And in terms of setting hard and fast business rules of what fraud looks like, that's always going to be changing and shifting. So we're always going to need people to look at the outputs that the AI produces to say whether the fraud has moved on, whether those rules that we put in place on day one are still relevant, or whether we actually need to change our rules and shift our focus as the fraud evolves.
Yeah, just one thing I wanted to add to that as well is I think it's really important that if you integrate these kind of technologies, that you do it in such a way that it isn't siloed within just the claims part of the business. The claims area, yes, that's where the fraud will generally occur, but if you can find a way to harness the data and the outputs that are coming from that, and then feed that into your underwriting process. You know, I appreciate it's very difficult sometimes when you've got layered systems and it's really hard to integrate things, but I think as an ideal, as a best practice, if you can find a way that lots of areas of your business, be that compliance, underwriting, claims, you all have access to that data and the outputs that come from it.
So do you think there will be any value for artificial intelligence power voice bots into the customer service experience?
All I can say is it's not an area that I've looked at. If there are people in the room who can speak to that and their experience of it, I'd happily hear your stories and your experience in that space. But it's not something that I've.
Okay, now I was only asking because I just came across a case where I think, talking about motor insurance, they launched an app basically, and then customers, as soon as they had a car crash or an accident, basically they were able to go into the app and say, you know, there were 5 questions, for example, they will answer the questions very quickly. And we saw that the response was basically immediately. So they knew straight away if the claim was going to be payable or not. And then what we saw with that was that the clients were not really happy. They actually felt very uncomfortable because it was immediate. So this particular company, I know they had to delay the process by a couple of minutes to start giving confidence to clients. So I was just thinking, if it's actually really adding value and, you know, to the point of fraud, the fact that you are just doing 5 questions, would that actually help? Or do you think, you know, I know you've been mentioning that it's very important to have the human aspect involved in that. So I was just thinking, are we actually ready for that? Or we still need to work more on that new technology?
Well, the one thing I would say is, like, it's really interesting to hear that, actually, because one of the things that I think we've seen in the insurance industry generally is, you know, this kind of battle between convenience and security, and that kind of constant war of making sure the customers are happy, but also putting all the right protections in place. And yeah, that's just a very interesting stance. But I suppose it's, you know, we are seeing more and more insurers say you've got the likes of like Lemonade over in the US that are just removing all of these touch points out. And I do think that, you know, convenience is great and getting stuff paid quickly is great. And as a purchaser of insurance in my personal life, obviously, do I want claims paid straight away and without hassle? Yeah, of course I do. But as an insurance professional, yeah, there is. I can see why people might be a little bit squeamish about something just being approved straight away without even having to think about it. But having to build in a minute just to make people feel more comfortable, that's quite funny. That's funny to me.
Yeah, and I'd be interested to see the age breakdown of the respondents and kind of how uncomfortable, because I feel like as we move kind of the new generation coming up and everyone just wanting instant things like that, I can imagine that it's going to be an age thing. Like, maybe we're not there quite yet in terms of the same with banking and financial services. People always want to speak. There's a point where people feel comfortable because they want to speak to a human being and not, you know, a bot or a kind of an app. But we're seeing this shift in healthcare, in telemedicine, and that's already started to happen. And actually, I think healthcare and insurance can sometimes follow a similar path. So I wonder if we're at that point where, you know, we will start to see a bit more of acceptance into those things, especially, as you said, with the kind of the neo insurers like Lemonade sort of changing the game in terms of consumer experience.
Well, thank you. I think, cautious of time, maybe it's time to open the questions to the audience. So I don't know if there are any questions.
General question to all the panel. Where do you see? Sorry, Scott Richardson from Distribuine. So I insure like the digital processes. Where do you see the best use of machine learning and AI in the sort of the fraud prevention or fraud detection value chain? And I like your point, Gareth, about making sure any new tool makes life easier for the people there. So,
who would like to answer that question?
I don't mind jumping in there. For me, I've seen already the technology delivering results in the claims space. So we use we have a multi-layered approach to fraud detection, and the AI and the machine learning and the predictive modelling that we've introduced allows us to be more proactive in spotting stuff earlier. So we don't have to wait until the trigger point that follows in a claim manifests itself. We get the sort of early warning from the technology that we've introduced that there's something there that may require our attention. And actually, a lot of what we do is it facilitates validation. So we can look at something that may at some point come to us as being suspicious and take a proactive look at it and actually green light it and smooth out that customer journey. So we're already seeing a return on investment in that space in claims.
And I think that is also being applied to consumers as well, where Anthemis are invested in a company called Cowbell Cyber, and their whole, they're a cyber insurance company, but it's more about the proactive, like we use external and internal data to identify those weak points, and so that you can fix it before you're actually being attacked. So I think we will see a lot of that machine learning AI in the shift from reactive to proactive insurance.
Yeah, completely agree with that. It's like I mentioned earlier, is that generally prevention is generally better than reaction in terms of reacting to cyber incidents. So if you can stop them at source, then it's going to cause a great deal less disruption to your business. So yeah.
I'm just going to pick one question from the virtual audience, and is what are the common mistakes that you see firms are making when fighting insurance fraud?
Wow. Criticize your colleagues.
Yeah. So what do our competitors do wrong? Is that the question? I wouldn't really like to speculate about what we get wrong. More focus on what we do right, really. I think we're very good at detecting fraud, and we make the right judgment calls, and we promote technical excellence through everything that we do. So we're a customer-centric company, and we put the customer at the heart of everything we do, but we're also technically on it. And sometimes we have to make a difficult call, but it's always technically the right call. So there are traps that you can fall into with any fraud investigation. Historically, there have been tales of people doing surveillance and engaging surveillance agents in perhaps risky ways, certainly not within Allianz, but the stories are out there. I think we appreciate the customer journey more now and better than we ever have, and I think the whole anti-fraud community is perhaps less gung-ho than it was 10 years ago, and I think we're generally very good as an industry at avoiding the pitfalls that you could clumsily stumble into, because we have anti-fraud expertise in-house, and it's done by anti-fraud professionals who know the pitfalls and do what they can to avoid them and get it right.
I think we kind of touched on a few of the things. For me, there's three key ones. It's identify if AI and machine learning is appropriate for your particular business model. 2, integrate it in a way that puts the customer at the heart of everything you do. And 3, don't be complacent. Don't, it would be easy to kind of go, oh, AI, I'm not ready for that yet. But those are the 3 things I would say. That would be mistakes I would say. They are mistakes that I would try and avoid if I was a business looking at anti-fraud.
And I'm just going to add one comment that is coming from our virtual audience, and is that the industry in general considers fraud savings as intangible until it actually hits them. So we are still in a reactive phase. And I guess before we close up, the last question would be, how vital is for small businesses to start buying cyber insurance policies?
That's definitely for you, Tom.
Tee me up. I think, look, it's. I appreciate there are some question marks around the industry at the moment because of the rising rates that are being seen in cyber insurance, but that is a correction because we have just come out of a soft market where rates and policies were being pushed out a lot. Is it important? Yes. I don't like to play that doomsday card of, oh, it's not if you get hit, it's when. But at the end of the day, cybercrime is very prevalent because, and touching on one of the points Gareth made, it's comparably quite easy. You've got ransomware as a service. You don't necessarily have to be able to develop a ransomware strain to be able to use it. You can just purchase it as ransomware as a service online. So it is very prevalent, and unfortunately for SME businesses, they are the ones that are less likely to have financial reserves or any kind of other protection, that if they have an incident, and I've seen this firsthand many times, it's not always just necessarily if you have a ransomware attack, it's not just the immediate, like the ransom, if that's decided that has to be paid. The businesses can be down for up to a week, 2 weeks longer, because even if you purchase the decryption key, it's not like suddenly it lifts away and everything is as it was. Your data is all over the place. So I think cyber insurance is a vital purchase for any SME.
Thank you. I think it's time for us to finish the session. So I would like to thank you for your participation today and to everyone that is here and is listening to us. Thank you.
Thank you.
Thank you very much for a very informative discussion. Thank you for chairing, Andrea. Thank you for your contributions, Gareth, Sophie, Tom. It's my pleasure now to introduce the next keynote presentation, which is all about speeding up the claim resolution and underwriting process in your business. We're very fortunate to have two experts come and talk to us today about this. In a moment, we'll be introducing Ant Gosman, who is co-founder and CEO of Digital. Ant is a recognised expert in transformations, insurance, liability and claims portfolio management, and has been the turnaround CEO of a number of insurance companies, I understand. And I think we've been joined by your colleague Richard, is that right? Who is head of data science at Digital and an industry expert in applied machine learning with over 20 years of experience. So I'm delighted to hand over to you.
Thank you so much. Well, first of all, this is my third live event this year, and I can tell you I still like it. Are you going to join also in that? Yeah, thanks for the introduction. We speak a little bit about claims. Let me, before again, introduce you to myself, or introduce me to yourself. So we are, we're a complete new company. I myself had been CEO of an insurance company until about 28 days ago. We're moving right now towards digitization, and we'll give you a little bit of an insight how digitization can help to shape the claims process. I'm here with Richard. Richard, would you like to introduce yourself for a second? It works.
Does it work?
Yes, it works, yeah.
It's on. Hi, my name is Richard. I'm head of data science at Digital. So I focus on making the most out of the data that we get from our customers, and I'll be talking a bit more about exactly how we do that.
Fantastic. Where do I move this to, right? This is the... Okay, so first a little quiz. Any idea what this is? Of course not, you can't. I tell you first what the first two bubbles are about. The upper bubble is the amount of data that you usually find within a large insurance company. So this morning we had an introduction from AXA, so that's pretty much the amount of data that AXA has in their, everywhere in their both systems and in their files. The second bubble, and you see it's mostly the same size, it's the amount of data that you can find with Google, Facebook, or Amazon's database. So why am I showing this? Well, first of all, this is actually a great message for all of you who are still have the ambition to become an insurance CEO. Why that? Because this is the potential actually that we're speaking about. You see, AXA Allianz, the amount of data, the same like for big tech companies. The revenues, pretty much the same as well. But now look on the valuation, look on the market situation. The valuation is revenues to market cap. It's 50% for large insurance companies. Tech companies, it's 10 times the revenues. So, great message, because that's actually the potential. Speaking as an insurer, that's the potential that we have to tap. That's our job as CEOs of insurance companies. We need to leverage on the data that we have, because everybody tells us at the moment that data is the oil of the century. Oil is probably not a good example these days, but anyway, you know what I mean, gold, whatever. So that's the key element to look forward. So the question first is, why is it like this? I mean, has the market not understood what insurance has as terms of data? Well, the answer is pretty simple. As insurers use only 2% of the data. If you compare the amount of data which is structured, we heard this word in the morning, which is structured and which is within the systems and which we proactively use, it's just 2%. 98% we have in files, PDFs, photos, in the heads of our claims handlers, wherever. But we don't have it, we don't work with it. We just concentrate, very professionally we do, but we just concentrate on the 2%. So when we're speaking about untapping the data, when we speak about the path to bring insurance companies into different valuation and to fully explore the possibilities, then it has to start with drilling down to the amount of untapped potential, drilling down to the data, to the unstructured information that we have. And actually, before we come to the technicalities, and Rich is much better than me on this one, how do we do this? What is the backbone of this? It's about to digitize the data, make it machine readable. It's about extraction of relevant information, and it's about combining the formerly unstructured information to the structured information in order to be able to do better analysis, to optimize our work procedures, and of course also then to predict and to develop algorithms. And now the magic guy comes who tells us how this works exactly.
All right, so part of the problem, if you look at the input space, right, of all of this data, as Ant mentioned, it's captured in scans, and what we do at the moment is we have human beings who have to read literally millions of pages of documents and process this manually and do the data entry into capital management system, adjust reserves, make payments, and that sort of thing. And if you think about it, human beings are really, really not good at this, right? We suck at data processing. We have limited attention span, we forget things constantly, and we read really, really slowly, right? So this is really a problem of scalability. And the way we solve this currently is that we just throw lots of people at the problem, right? So we scale out, right? And what we're looking for is a way to increase the effectiveness of an individual, right? And for us to be able to do this, for us to be able to make faster, better decisions and better judgments during the claims handling process, as well as the auditing process, requires us to have the information at our fingertips and the insights that we need to reach these decisions more quickly, right? So you can't just take your unstructured data and your structured data and sprinkle a little bit of machine learning on it, and profit comes out at the end. We've got to look a little bit more at specifically how we add value, right? You people make me nervous. So what we've built is a modular data science platform, right? So we know that we're going to have a lot of challenges dealing with the various data that we get at the input level, and we're going to have to run a lot of different analyses and processing on this data, and then aggregate it and make it available to build business applications on top of this, right? So So the story starts with first turning the pixels of millions of scanned pages into text to unlock it, right? We need to do this because at the data level, a scan is really just the digital equivalent of ink on a page, right? So there's not text that is useful for performing computations. And this is mostly why so much of this data remains unleveraged, right? But once you do this, once you convert your data into text, a lot of things become possible. For instance, you can search, right? And search is a solved problem, right? We can index all of this data, again, millions of pages, and you can find results in milliseconds, right? So a claim comes in, it's a medical report, mentions spinal injury. You can search for spinal injury or various medical keywords. You can see from the historical data how other claims have evolved and what the outcome was, right? Now, what if you could also, if you didn't have to actually proactively search, but you could have a system that as your claims come in would tag the claims with relevant concepts that are interesting to you, right? So for instance, you get a letter from a lawyer that mentions annuity payments for a client because somebody is disabled due to a medical condition, right? You could have your documents already, or your claims already be pre-tagged with the concepts of legal, medical, annuity, and disability, and you could use that to triage your cases. And it basically provides context at a glance when dealing with a claim, so that it doesn't force you to read 400 lines of text to understand what a claim is about, right? So what natural language processing also lets you do is to not only figure out what a claim is about, but also spot entities which are mentioned, right? So there's something called entity recognition. And so we can understand the structure of language, and we can identify proper nouns. And this lets us extract organizations, places, people, and so on. And so you could automatically link your data to both internal and external data sources. And for instance, one use case would be to benchmark your suppliers, right? If you want to know which repair shop has a quicker turnaround time or is cheaper, it's trivial to then go, from the entities that were recognized with and associated with a claim, to doing aggregate statistics that will let you discover this sort of information, right?
Can you give an example for that?
For the benchmarking?
No, only for one of the other things. What are our typical requests? I mean, so we're first clients right now looking at that. But out of your experience with the clients, can you give us an example?
Yeah, so we had a client specifically who had lots of different suppliers. It was the automotive portfolio, right? And they were interested in who's cheaper and faster for windscreen repairs, right? And the problem they had in their data was, a lot of it was free-form entry. There were typing variations and spelling mistakes and this sort of thing. And we needed to aggregate this and spot and basically reduce the data to these individual client accounts that they had with their suppliers, so that they could do this benchmarking. So this is the unstructured information, right? So we're extracting structure from the documents that come in. The real power comes when we link this to your unstructured information, right? So we pull in the reserves, we pull in the payments, and now you can find correlations between the truth, the topics and the entities that are present in the source documentation, and how this correlates to your capital management, right? So one thing we've discovered, for instance, is that annuity payments they fall in the top so claims which mention annuity payments in their documents tend to fall into the top 5th percentile of the data. So they tend to settle at between 30 and 35,000 euros, right? And this now lets us make better reserve adjustments, right? We can find our cases which are under reserved because we can compute the expected value. And so we have a tool which is really geared towards this kind of explorative analytics, where you don't necessarily know the question you want to ask of your data, but it's prepared in a way which links the topics and the entities to your structured information, right? And that lets you run metric aggregations, lets you segment your data, and you could, for instance, you could look at just a section that deals with annuities, right? And you can discover new insights. And then finally, you might want to keep an eye on this, right? You might want to say, okay, I want to snapshot this, and as new data comes in, we want to be able to incrementally update an aggregate statistic of just the claims which mention annuities, for instance. And so we do this with pivots, and what this essentially gives you a kind of continuous assurance or continuous auditing on a continuous basis, right? But the resulting data can also be exported and integrated into your system, right? You already probably have business intelligence systems or an actuarial tools, that kind of thing. And we can export this data and allow you to integrate that into your decision-making process, right? So in conclusion, I think it's important to get to where we want to be, we have to look at where we are now, right? We have to look at the state of the data that we currently have, right? And see specifically how machine learning can help, right?
Yeah, and probably to resume, start with me. It's really about the starting of claims handling procedures, anticipating all the relevant data. So it's what we just spoke about, what Richard introduced. It's about making the link to the 2% of available structured data and to combine it with the 98% which is in the files, and to have everything available at the same time in real time. So that allows, and that actually was for me when I saw it the first time that things like this are possible, as an insurance guy, was enthusing. Because all of a sudden you can fly like in a three-dimensional room in your claims portfolio. You can much better understand it, what's going to happen. So requests like, I wouldn't understand, simply number things. How many of the claims are with a lawyer? Sometimes you have it in a structured system, sometimes you don't. How many claims do you have in your portfolio which are with a lawyer, but which have a low reserving? Probably you have a problem there. How many of the claims files do you have that are with a lawyer that are low reserved, but there's already high amounts which are dated? Well, you just type it in like in a Google research, and that of course makes it much more easier. You will ask yourself the question right now, okay, complex process. No, it isn't anymore. So the timing, Richard, last weekend, 14 million documents your team transferred into 5 days. Right, so we needed 5 days, and it's not optimized to translate 14 million documents into machine-readable text, having it in a machine-readable format, and then using it. So again, what can we do with it? It's of course great for due diligence, right? Because you can do actually a full claims due diligence within 2 weeks, all included. You can do your claims audit, what you usually would do in 2-3 months, involving everybody. You can do it with 3 people in 2 weeks. You can work with it on specific cases because you can proactively allocate things. I don't know how many of you are insurers, but I can tell you the way we dealt with claims handling so far is pretty much the same than we did 150 years ago. We just use email and Excel and these kind of things. But still, we are reactive. We are only doing something if there's an incoming element, a letter from a lawyer, doctor, whatsoever, invoice, and so on, and then we deal with it. Having a portfolio fully understood and fully digitized, you can proactively search for fraud cases, specific cases, and so on and so forth. And let me just say and reflect it to the beginning of this conference and to the first panel. We spoke about client centricity. Why aren't insurers client centric or not client centric enough? Because we got stuck with our back office work. of course, everything is so human intense and still so manual. How can we provide better service if we don't have even understood our portfolios? So getting to the ground of this data helps not only to make our life easier, to reduce cost. No, we should use the money that we save in order to invest it actually to people who are going outside to provide a better service. I would prefer that a claims handler has more time to listen to the client and how they can help them in order to mediate and to deal with the client and with the situation which is around, than to spend up on the claims handling and to spend on finding documents and relevant information. Thank you so much. Is there any questions? I think we still have 1 minute 30 for questions. Any questions or comments? Disagreement?
Yeah, when you're doing your automated machine learning, how do you work with it?
Can you repeat?
Sorry, when you're using your machine learning, how do you try and mitigate the risks of biases in your data? So gender, race, that sort of thing.
Richard, would you like to answer?
Yeah, so the bias. Sorry, I don't think those kind of biases are actually an issue, because we're just modeling topics for starters, right? Look, eventually down the line, we'll be able to automate processes. Like, we'll be able to do critical claims analysis. We'll be able to, predict whether or not a claim will end up being in the top 5th percentile, or we'll be doing sentiment analysis, that kind of thing. But at this point, the topics are either inherent in the document or they're not, right?
But it's the basis,
so
actually, right?
The bias, yeah, it doesn't feature in this case, right?
So this is the basis. It's not machine learning what we apply yet, but it's of course the grounding. Without, and look, not to forget, it's the treasure. All the data that we have in the cellars of insurance companies, that's the treasure. But in order to use machine readable in a useful way and to take out the learnings out of it, you need to have it fully machine readable and semi-understood by the system. We wouldn't call this to be already artificial intelligence. That's then really the next step. But it's much closer to that step when you have digitized data. And easier, actually. Any other questions? Yeah.
Thanks. So I'm quite interested about whether you guys have got a hypothesis on whether you're improving the speed of claims or changing the outcomes of claims because of the extra data that you're adding in.
Drastically. Drastically. I mean, one of our clients, starting with the proceeding of it. One of our clients that extremely well prepared on these things. So they briefed us and they said, look, we need 25 minutes to work on the file. And they know that half of the time they use just to get an understanding about the file. Of course, because they have to go through papers and so on, and what was the last letter of the hand, if you have it available at your fingertip, even the content of it and the because also each new document can be already categorized in this way. The machine understands whether this is an invoice or a letter, or whether it's an aggressive letter or not. So it can be pre-classified. So that's the saving on the proceeding. The other thing, which is even more important as an insurer, is of course, how can we shorten the overall processing time? Because all this stuff hangs around in our balance sheet. This costs capital when we have it on balance sheet. Look, I cannot tell you where this will end, but just the fact that being able to do a claims audit every month, if I would like to, or if the situation allows for it, will definitely improve that, because you can be proactive, looking for specific problems and to identify certain areas. Like another client which was affected by the floods in Germany earlier last year, they came back to us and said, just look at this, right? We just want to understand what we have. And there was even thin paper files. On the midterm, my expectation and my suspicion is that we can automatize large parts of the claims handling, if technically, not all. We shouldn't do that, but technically, I would say in 5 years it's possible to have full automation. Technically, we shouldn't do it. We should keep the human element in it. but we should reorganize that. And I'm absolutely sure if there's a system that can rely on the entire experience of whatever the last 5 years of claims handling, because it's machine readable, that's all about it, then it is possible to improve the process and also the time and the speed to handle it by whatever, at least 10 to 20%. You want to know what this number then would make? In Europe, just P&C claims payments every year, 250 billion euros. So if we improve that altogether, as we're here, if we improve that by 10%, we made a great job. Any further questions? Thank you so much.
Thank you very much indeed for a very high impact presentation and discussion, which obviously addresses a critical issue for every CEO of every insurance company. We're continuing now with the concept of applying technology to create better and more effective products. And we're going to have a panel discussion, which is entitled Integrating AI, IoT and Telematics to Create Superior Insurance Products. So as we rearrange the stage, I'd like to, once it's rearranged, welcome our panelists. And I have the pleasure to hand over to the chair, Kevin McLaughlin, who is a partner and co-founder at MTech Capital. Kevin has 28 years of experience in insurance and finance, 7 of those at AIG and 21 years in insurance investment banking at very senior levels, global head of insurance banking at BofA Merrill Lynch and at Citigroup, and head of European insurance at UBS. So I'm delighted to be able to hand over to you to take us through our next session. Welcome.
Excellent, thank you. Yeah, there's an order.
I was thinking.
I think so. Excellent. Good morning, everyone. Kevin McLaughlin, MTech Capital. I'm pleased to be moderating this discussion this morning. Topic is how AI, IoT, telematics data are, as a practical matter, integrated into insurance. Could be through new products, underwriting, claims. What is actually the value that's being extracted today from AI? What can we expect from the future? So let me first start by having each panelist introduce themselves. Bhatar, you want to begin?
Sure, absolutely. My name is Bhaskar Kalita. I manage the insurance and financial services business at Quantify. We are a AI-first digital engineering firm focused on helping customers reimagine and realize transformational opportunities at the heart of the business. We believe we have defined this new category called AI-first digital engineering, which is basically using AI and data across the value chain of a transformation, starting from experience, automation, insights, and then data and infrastructure. Happy to be here and excited to, answer all the questions that you might have.
Sue?
Hi, I'm Sue Hearns. I am the Director of Data Governance and the lead of the data management community for the insights and data practice of Capgemini. We work primarily in financial services in the UK. Been 26 odd years in data, so I really am that proverbial data geek, and it's really great to have some data questions to answer today.
I'm Neil Kempston. Nice to be on the panel. Thank you for having me. Nice to meet you all. I'm an incubation underwriter at Beazley. Beazley's a specialty insurance company. Incubation underwriting is a fairly new function. We've been around for about 2 years. Our role is to discover, design, and develop brand new insurance propositions. We sit external of any of our sort of product-specific divisions. We sit within corporate development. There are kind of 2 channels to which we normally look at new product opportunities. One of which is Beazley branded products, where it says Beazley on the tin. We do the underwriting. It's brokered, intermediated in the sort of typical way. And the other angle is working with InsurTech partners to develop new product opportunities in new markets, whatever that may be. we're part of the Lloyd's Product Launchpad and contributors towards the Lloyd's Lab.
Hi, my name is Ashok. I look after digital data and analytics for AXA XL globally. AXA XL is the specialty commercial insurance division of AXA Group. And again, here I'm super excited to, one, learn from my fellow panelists and also from some of the questions that I would expect from the audience here, and would be happy to share whatever insights we have.
I really like the mix of panelists we have. I guess firstly, because so many of us think about the applications of IoT, telematics as being personal lines oriented. It's good to have representatives of two commercial lines insurers here to just expose what's going on more in that space. And then of course we have two people who are operating kind of at a higher level, working across insurers, have kind of that helicopter view of what's happening across the industry in terms of implementation of AI. All right, let me start with the first question. And so the idea would be we go through a number of questions here, and we'll leave about 10 minutes in the end for you folks to send us questions. I can look at them here, or you can just wave for the microphone. So maybe, Bhaskar, we'll start with you. In what respects is the collection of all of this data, the cleansing of it, and the analysis of it actually resulting in improved insurance products?
Yeah, so I'll take a step back in terms of the topic, which is telematics, IoT, and the data that it provides. Carriers who are using them effectively, and first to your specific point in terms of cleansed data, they're definitely getting real value out of it, right? Whether it is trying to underwrite risks better, that's from an underwriting standpoint, but prior to that, also identifying customers, knowing what kind of needs they have. You are getting a lot of lift there in terms of, narrowing down the funnel, understanding which customers to target, and then obviously you go down the path of, looking at how to write risks. And then further down the value chain, when you look at servicing these customers and on potentially, responding to claims, these additional data points are providing the much needed lift in terms of serving your end customers end to end holistically. So there has been a lot of lift, but you're absolutely right. You need the right data to service those customers appropriately. Without the right set of data, without the right set of profiling that you need to do upfront, having the right business knowledge to know what data to target to effectively build these solutions, you may not, get the lift that you are looking for.
Yeah.
Sue, what do you think?
He just stole my words. I mean, how unfair is that? But yeah, I actually have to agree with you. I think there's a massive amount of data coming in, and I like the fact that I'm seeing it as becoming cleansed, because when you bring it in as this big dump of stuff, if you don't take care and look after it properly and make it cleansed and make it useful, nothing you do in the insurance industry is going to actually make the difference to what we have already got today. So for me, seeing it happen and seeing it getting clean and seeing it getting used and seeing it getting used ethically is really my big thing at the moment. I think we're going the right way.
Just from my previous life in investment banking, I think of a meeting I had. It was down in Latin America with the CEO of a very large P&C company. And I remember him telling me that the big motor insurer, all of the cars that they insure have telematics boxes. And I thought this is 5-6 years ago. I thought that was quite advanced. And I said, so tell me about the data and what you're doing with it. Has it actually resulted in improved loss ratios? He said, well, we're not really using the data. And he said, it's mainly the behavioral impact. And he said, in any case, our kind of rating and pricing systems really can't accommodate all of this new data. So, Neil, what do you think?
Yeah, it's tricky because, I'd probably be told off if I didn't use the word legacy at one point today. So as insurers, we have a lot of legacy challenge in terms of our systems. So part of the difficulty is what we'd love to do is take on all data all the time and be able to do everything with it. Now, realistically, that's a difficult thing to do, and a lot of the points that you guys have made around having it put up into a structure that we can understand and react to is really important and really helpful for us. So it's being able to see where the value add in terms of the effort to return. Now, if we were doing something more, detailed and build on an existing portfolio, which is not typically where I look, then there's a different sort of value case to sort of take on that large volume of data through direct connection. But we're quite lucky as an industry to have a lot of data experts in actuaries that help us work through lots of different things, take packets of data, work with partners that can package them in the right way so that they can understand them and look at different opportunities. So we have sort of some challenges, but we also have some real advantages.
In that respect, Ashok, at AXA XL, are you actually seeing improved loss ratios from IoT telematics data?
Oh, absolutely. So, and I think earlier you touched on this point about is IoT and telematics only for personal lines, and what is the space for commercial insurance? And maybe just to kind of on also behalf of my friends at Beasley, just let you know, think about it, right? So we insure lots and lots of ships. We insure lots and lots of airplanes. We write a lot of cyber business. If you think about it, all of it is data. And if you're, let's say, a kind of shipping company, and currently in Shanghai, there is a big kind of logjam of all the shipping containers waiting there. What if you're able to understand actually this particular container has this, let's say, perishable good or whatever, and we're able to kind of tell you, this is the current state of your kind of goods there in that particular kind of transshipment point at this point in time. It's great for the client. Of course, it's also important for us because that's a material risk for us then and there. And we have a live kind of update on what's happening to our risk real time. And I think that's a very, very simple way to think about it. And I think that's where probably sometimes commercial insurance may not necessarily be the first when it comes to mind of people, right? Because usually you're thinking about, oh, motor insurance, and can I plug this device and will my insurance premiums go up or down? But I think there's a lot more broader applications of this.
And what are some of those broader applications in commercial lines? In other words, what are some of the new products that you can imagine, by virtue of having AI and available to analyze a lot of new data?
So the marine example I gave is actually not a random one because it's a live one where we actually have a product in the shelf today where actually we can kind of support our end clients with one, tracking their real assets in real time, and what does it mean from one, an insurability standpoint, and also what happens with the risk. So that's one example. I'd probably, should I give it to Neil for, I think, because I think you guys are doing a really interesting piece of work.
Yeah, I mean, there's lots of different things out there. I mean, one of the challenges we see in our team with IoT specifically, not necessarily the sort of AI machine learning side of things, but on IoT is scalability. So, and sort of multiple applicability of whatever the device is doing. So if there is a device, if there is a sensor, if there is a data point, wherever it's coming from, satellite, whatever, or a sensor in a thing, it has to have more utility for commercial buyers than just the insurance. So for them, it has to provide sort of risk management expertise for the example you gave around understanding where their things are so they can communicate with their onwards customers and challenges within that. So that's a bit of a challenge we've seen from a technology perspective. The kind of things that we have seen where there are companies implementing sensors within their overall infrastructure, things like renewable energy, so they can keep an eye on their turbines, things like manufacturers, so they can see the sort of the quality of the bearings that they have within their equipment, so they can replace and repair as they need. So that has sort of multiple utility. One of the things where we see that in a very sort of short term making a difference for typical insurers is that as a risk presentation and risk understanding is really helpful because it can differentiate risks as they come to us, which helps our underwriters do risk selection. But yeah, so lots of things out there.
I'll add one example to that. It's a company in the MTech Capital's portfolio, actually. It's called Voxel. It's based in the US on the West Coast. What they've done is through computer vision, they've developed software that can just plug into pre-existing security cameras, for example, in warehouses and in manufacturing plants. and they have trained the software to identify risky situations. So it could be a forklift operator operating outside the lines, in the warehouse. It could be, just a worker lifting up heavy packages, right, with the wrong posture. And it then flags these situations, actually produces an email, shoots it to the warehouse manager, and then he or she is able to go to the employee and say, here's a video clip. This is the kind of thing that we need to change. And it's all about reducing workers' compensation injury claims.
Yeah, just to add to it, we solved one problem for one of the largest amusement parks where we put computer vision models in the security cameras to track, safety measures when somebody is taking a ride. There are risks out there, the organization is Disney. So, tracking safety measures, and that helps you kind of reduce your risks drastically. So that's one example, just to add to it.
Yeah, and one we've seen as well that was really interesting is implementation of a wide range of sensor technology within like a shopping mall, for example. And through putting that technology in, they were able to see that safety-related potential issues were being remedied within minutes rather than within hours. So from a public liability perspective, that's really sort of interesting. If only Beazley was in that space. Damn it, can't get to everything. But that's a really sort of interesting application. That some of the challenges that come with these things is to actually deploy that kind of capability across a portfolio is difficult. So to then have in an ideal world, everyone would have it. It'd all be completely integrated. We'd be able to do live risk assessment.
But it does raise an important dimension here with respect to privacy.
Yeah.
Mm-hmm.
So the idea that you've got cameras in shopping malls, you've got cameras in warehouses. Sue, what do you think about the data privacy, and is it a potential obstacle to developing AI applications on this data?
I'm actually on the side of it being not an obstacle, but an opportunity. And I think that being able to get out to individuals, organizations, about how the data that you're getting, even though it's related to a person, for example, can improve things such as your chances of falling off a Disney wheel thing, and I'll never go on one of them because I'm scared of them, or in a shopping mall handling risky situations. I think it's about changing the communication around and saying, yes, your data is private to you, but it's also secure with us. We're looking after it. We're making it work for you. So changing the communication and saying there's regulations about data privacy, but we can use them for the good. Currently, there's a very big feel that a regulation about data privacy is a negative. Have to change that. When you change that, you're going to change everything, the way the insurers think about things, because it's become a value add rather than a deficit.
I do wonder, though, for example, how do you create that environment of trust? So if you now go to personal lines and you think about some of the applications of IoT, it can be on, home security systems. It can be on, obviously, appliances, plumbing, monitoring broken pipes, that kind of thing. So that's your house, and there's constantly information being fed from your home to an insurer. How do you create an environment of trust so we just say we're not getting that because it's a little bit too much Big Brother, a little too intrusive?
Oh, good. I get to answer that as well? Great, okay. It's communication. It's putting yourself in that person's shoes. I'm a data person. All I do all day is data, but I walk in the other person's shoes. If I can do that and understand from their perspective what their concerns, their issues are, things like, oh my God, my house is suddenly talking to everyone. I mean, if you've got Google or Siri or what's the other one, Alexa, they listen to you. I don't know if you've noticed it, but all of a sudden you go onto Facebook and you've suddenly got a whole bunch of adverts that you can't possibly have dealt with, and then you go, oh, Google was listening. So if we're already getting that far, What we have to do is, again, it's about changing the way people perceive. It's perception, nothing else but perception. I look at this and I turn my Google off because I don't want to get those adverts. But that's because I'm quite sort of irritated about things like that. But a lot of people don't mind it. And it's about turning it into a value add, a benefit.
I think as well there's a part to play with articulating what the value of that data point really represents.
Yeah, exactly. Oh, your fridge is going to break down in 5 weeks. That's a real value add because now you know you've got to get out and buy a new fridge, that you can save money on the food that's going to go off because your fridge broke and you weren't there. Things like that. That's the kind of value that you've got to show. And you've got to make it simple, visible, very visible, because people respond to the visual. You know, when you put a report there and it's a whole bunch of words, people don't watch, they don't listen. Like behind us, I don't know how many people have actually gone and had a look at that without going, oh, that's lots of words. But what if you'd made it pictures? People would go, oh.
Right.
Challenge to everyone there, come and take a picture of this today.
And turn it into pictures.
Bhaskar, what do you think? You know, by the way, you're based in Chicago, right?
Yeah.
You see kind of a difference between what we have in Europe with GDPR and those now legal protections around data and the US approach?
Again, I echo and concur to what both of our panelists said. One thing I want to add is bring the right level of transparency. Make customers aware of how are you using the data, right? I mean, to your original question, is it an obstacle? Some use cases probably yes, but in most I would say that there are techniques involved in terms of how you anonymize data, how you train models, etc., which makes it much more simpler. But making it transparent to the broader group, to your end customers, is extremely important here, so that you bring the level of trust. And I think that's what Sue was referring to, right? Making it as visible as possible.
Let's talk a minute about partnerships and how working with the right partner can actually advance the usage of AI. Ashok?
Yeah, so I mean, first and foremost, I would say, at least for AXA XL, we are very clear. We are good at some things. There are a lot of things where somebody else is good at. And we recognize that. That's absolutely fine. Because we are insurance experts, we are risk experts. We are not necessarily, let's say, a AI digital first expert. That's not our space. And equally, for example, do I trust a Microsoft or an Amazon to do kind of infrastructure better than us? For sure, right? From a tech infrastructure standpoint. So that acceptance is the first and foremost thing. And then it's a question of how do we collaborate and how do we make 2 and 2 11 rather than thinking about, oh, this is my space and why are you kind of in this space? I think that's the kind of fundamental mindset shift that we have kind of gone through. And that's something we are kind of very comfortable with. So whether we are talking about partnerships with a startup, whether we are talking about a partnership with a huge company like a Microsoft or an Amazon, or whether we are talking about kind of working together with our broker partners, I mean, all of this, we are very, very comfortable because we recognize that's the only way for us to actually succeed in making meaningful difference for our clients. Because if we want to do everything ourselves, I'm not sure how good we'll be at the things which traditionally we've not been good at.
And how would that, for example, work if you were, XXL were looking to partner with a, let's say, a commercial vehicle manufacturer, an OEM, okay? They're bringing the data. They don't have the AI expertise. You've got the insurance expertise. Where do you get the technology component of that?
Yeah, so for example, today we are talking about motor insurance in the sense of individuals, as pretty much, I guess most of you here drive a car and you have your own insurance. Now, this is today, and we are already there at the cusp of a technology change where how much of the car is driven by you versus by the software itself. So in that sense, let's say if you're in an accident, is it the driver's fault or is it the software's fault? And how do we kind of draw the lines between where does the liability lie? Mm-hmm. And I think those are the points where we're thinking about, one, collaborating with the car manufacturers, and more importantly also with the software provider, because not necessarily the car manufacturer is the one who provides the self-driving software. Some cases yes, some cases no. And for us, it's about working with this kind of value chain of partners to say, one, how do we ensure that first and foremost the car is safer? That's the fundamental number one point. We want the car to be safer. We want people who are in the car to be safe. How do we achieve that? Once we kind of get that sorted, then the next question is, if and when something goes wrong, which is where obviously insurance comes into picture, are we going to talk to the individual driver? Are we going to talk to the car manufacturer? Are we going to talk to the software provider? And that's the kind of piece we are looking at when we're talking about collaboration with, let's say, OEM players.
I think to build on that as well, in my team, we're very small. There's only 2 of us, so 50% attendance here today. And part of that challenge that we have is often we'll have organizations approach us that are kind of solutions looking for a problem. So a really good thing for us, and we see it, is where sometimes that partnership between a technology expert and someone like an OEM has already happened. So they've already partnered on delivering a solution for that OEM that is specific to the challenges that they have, but then they also have discovered some risk application. So then they come prepared with the challenge, with the problem, looking for an insurer to, like you also mentioned previously, apply our expertise, because we're not necessarily always software companies, are we? And that is something that we really look for when we're looking for new opportunities.
Bhaskar, in terms of who is leading in this space, the application of using AI for underwriting, for marketing insights, etc., are the legacy insurers at a real disadvantage here? Is it mainly the insurtechs that you see leading in this space?
Generally, you will see the Lemonades of the world coming and kind of disrupting the market, if I may give one example. But on the legacy side also, there are a lot of firms who have really progressed, Geico being one of them from a North America perspective. But I would definitely like to call out, piggybacking on what Ashok just said, Tesla. Now they are writing car insurance in 4 states in North America. They are probably at the topmost level, getting all real-time data, knowing when the car is driving and the machine is driving it versus when the human is driving it. They will probably be the gold standard here in terms of using IoT and telematics. That's one new kid in the block, if I may use that term, and I'm sure everybody else will be chasing them at this moment.
So what do you think? Can the incumbents, compete here?
Well, first of all, I've turned all my telematics and stuff off my car. I drive my car, not my car drive me. Okay, sorry, a bit old-fashioned that way. But I do think that the smaller, sort of more flexible, agile organizations are ahead of the game. But I think the more traditional organizations are seeing this and very fast going, hang on a sec, this is good, I could use this. So I think over the next couple of years, you're going to see a massive explosion of this. I think it's almost going to overtake the ability of insurers to manage it, because it's going to just mean more and more and more data. And they still have to go back to their customers, whether they are individuals or commercial properties or enterprise, whatever person or organization that you're insuring. You're going to have to start going back to them and getting them to buy into this as well. I mean, let's talk about telematics as a thing. Okay, so on fleet management, telematics is a big thing. However, when you're thinking about personal, the guys using telematics, it's the people who've got teenagers and they're getting their first car. So you're hitting 17, 18 and suddenly you're getting a car, and you get great insurance rates if you've got telematics working to stop your teenager going over 50 miles an hour, to stop your teenager from swerving, or to stop your teenager from doing all sorts of things. So taking that, you need to just change that slightly more and get more people to be involved in saying, well, I could turn my telematics on and let my car drive me.
Neil, what do you think? You've done something really innovative at Beazley to create this incubator.
Yeah, so I mean, one of the things that we also have at Beazley, which we're quite lucky to have, and we've been on a bit of a journey with data science, is we have actuaries, but we've also got a separate data science team who is headed up by the fantastic Ben Postance. If you don't know him, you should, he's amazing. And they look at lots of different things, and there's lots of different applications that they've done. part of what they've built up within that team is expertise to look at partnerships, which helps us understand different companies when they come to us. They've also been able to implement their own expertise. So we created a ESG-focused syndicate, Syndicate 4321, which enables us to offer additional insurance capacity for specific lines of business where the organizations have an ESG score that meets the standard. And a large part of us being able to do that was taking an external data set and attaching it to our own, which sounds really simple, but it isn't. Because when I'm going to say legacy again, when we have legacy data, connecting that to different data sets is challenging. But we've been able to do that. We're also implementing some of the capabilities they have for risk screening, which helps us too. Lots of different applications as well in terms of looking at additional data sets out there, identifying opportunities beyond our existing portfolios, looking at clusters of risk opportunities, each end of the spectrum. So there's lots of things that having an internal team does, but we're not a data science company in our sort of core. We're an insurance company. So we recognize that there is growing capability out there. You have the agile InsurTechs, which my team interacts with, and we have to because we're small. And as an organization, Beazley, we kind of punch above our employee capacity, or at least we try to. So being able to partner with the agile ones helps, but making sure that they're at a position where they can stick with us for a long time is really important.
Ashok, in terms of where we see IoT and telematics today, where it's being used, there are definitely applications we've talked about for commercial lines. But what I'm wondering is, because you get lines of business like motor, home, high frequency, low severity, you get tons of data points around claims. Does that imply that the application of AI to more complex commercial lines is limited by virtue of the fact it's just you get lower frequency of claims and hence less data?
Not really. In fact, far from it. One, it's lower frequency, but then if you start thinking about the value question, right? So let's say a typical personal lines insurance, again, I'm just making this number up here. Let's say it's a £5,000 or $5,000 claim. You're probably talking 50x, 100x higher claim when you're talking about commercial insurance. So the value question becomes completely different. And just because the number of claims is lower doesn't mean the value at stake is not, it's kind of probably an even bigger scale. Right? And so it actually makes much more sense for us to invest in kind of things like IoT and telematics to understand what drives a potential loss and of course try to prevent it. One, it's great for an insurer if we can prevent a loss even from happening, but even more important is ultimately the client should not be suffering. Because one thing is, if I am concerned about the client has, let's say, a machine breakdown or his factory is flooded, it's bad for me, but it's even more worse for my client. So I would rather the client doesn't have to go through that in the first place. So from that standpoint, absolutely, I would say you don't necessarily hear a lot about IoT and telematics in the commercial line space just because it does not necessarily touch each and every one of you as an individual, but from a B2B standpoint, there's massive, massive applications.
Yeah, I think as well, there's different angles to the use of AI. So one of the products my team underwrites is reputational risk, and we've partnered with a company called Polcat, and what they do is they use AI and natural language processing to look at everything that's out in the digital ecosphere for organizations. So what are people saying about your company? So for them, being able to sort of scan the horizon for the challenges that are coming to them, that means that they can understand and react to different kinds of sentiment. Now, that's not a direct, will have a direct implication on our claims numbers in terms of that number comes in, that allows us to do this. But it's a service that we've partnered with an expert, which we are not an expert in, to make sure our clients have additional expertise they may not have had otherwise. And that enables that risk to sort of be more of a solution-oriented design rather than just a reactive indemnity product.
Yeah, just to add to it, I think on the commercial space, the more data you have, you drive more insights. It also enables you to understand newer risks. What's happening in this whole commercial space, general insurance space, in a way, customer behaviors are changing. You have different perils coming in. It's extremely important to know what kind of risks there are outside, right? So it helps organizations like XIXL to see if they can create a new product or a variance of a product once you get more insight. So that's a big application here.
I think if we take COVID, I mean, if somebody sat here, February of 2020 was it? And they'd said, listen, the whole world is going to shut down. We'd have all laughed at them. We've now gone through the whole world shutting down. And I think this has brought amazing opportunities for insurers to take all of that data that's out there and revisit it and actually go, well, how can we use it to the good of not just us, but our customers? Because insurers need to be as much customer-centric as they can be.
So do you see in that regard, I mean, COVID having accelerated things, for example, at, say, Beazley?
I would definitely say so. I mean, one of the things that the adaptation of that we've all had to make during COVID is, virtual meetings, where initially that must have been and can be still quite painful. That means that we're able to communicate with a much more, much larger part of the globe than we would have done previously, which means for us, we get more opportunities to speak to more different types of organizations from lots of different backgrounds. The other thing that you pointed to is looking at, misconceptions or preconceptions you have that may or may not have been right, and applying AI and data science and machine learning based approaches to better understand that challenge. Now, one of the things we launched was we worked with a partner company who came through the Lloyd's lab called Gaia. That's IVF insurance. They looked at 30 years worth of fertility data and applied a machine learning approach to that to understand different risk profiles, which means that we can actually look to find a way to ensure, IVF programs that people go through. Now, that's obviously back to the consumer end of the scale, but that's looking at a complex area, but using, innovative techniques and challenging, misconceptions and preconceptions around it so that we can do something for the client.
And in terms of your confidence at Beazley to say, to underwrite a new product like that, new risk, you've got a major focus on cyber insurance. So by definition, that line of business, you're using digital data all the time to assess risk and price it. Do you find that being, a major player in cyber has helped with respect to other lines of business and the adoption of AI?
It certainly helped us sort of put off a good foot forward in terms of innovation as a sort of an approach to Beazley. It's sort of core to our brand. We like to think, and being sort of one of the first out there in cyber really helped sort of cement us. It does open a lot of doors. What it also does is means that we're constantly evolving our perspective. One of the things that we do, and I'm sure lots of other insurers do, is do scans on the sort of external facing ports that our insureds would have, so we can then provide risk guidance on any challenges they may have, which means it isn't necessarily AI, but over time there might be some components to it. But yeah, it's something for us to, being a large cyber insurer means we have to be aware of a lot of challenges, as my colleagues at AXA I'll have.
Bhaskar, one for you. How can companies optimize? Now, this is a question from you folks. Optimize the way they store and analyze data across a customer life cycle.
Good question. I think I'll answer it from an AI-first digital engineering perspective. If you look at the entire value chain, it starts with experience, automation, insights, and then it comes down to data and infrastructure. To have broader implications in an enterprise, it's important that you have standardized data. So I would strongly recommend organizations to think about cloud platforms, where you can bring data together, create lakes, and hubs, warehouses, from where you can serve those use cases better. Obviously, you don't necessarily need to do this exercise first before you start getting the business value through AI. You can parallelly do these activities, if you can design your programs in an efficient manner. But it's important that if you want to have wider implications, you get your data centrally located, structured in a right way, cataloged, so that you know what data resides where, and it can be leveraged better.
I think I'd add to that is to turf out what you don't need. we're all pack rats about data, pack rats. We just keep getting it. Oh, we need this piece of data, bring it in here. We need that piece of data, bring it in here. I would suggest that most organizations have about 40% of data that they never use. You know, and a typical thing, if you move house from one to the other, and you have 100 boxes, and 6 of those boxes, 20 of those boxes go upstairs into your loft until the next time you move and you take them along. Were those boxes useful? And it's the same with data.
But just to follow with your analogy, I mean, maybe you don't realize it at the moment, but there's something in one of those boxes that will be useful.
But you're never going to look because you just keep moving it on and on and on. You know, there is that value.
Well, I did, no, seriously though, there seems to be this conundrum though, where in order to filter data, to cleanse data, you first have to understand what is the important data you want to keep. And it's kind of a paradox because, you know, to answer that question, you actually have to analyze all of the data, looking for correlations, looking for patterns. Is there something in some of that data that you never anticipated that has predictive power? And so how do you manage this deluge of data with the idea that you might find that needle in the haystack that gives you predictive power that, at the bottom line, is ultimately going to drive down your loss ratio?
I think as well you have to look between, you know, the link between correlation and causation with some of this stuff, because sometimes you might find something that looks like it makes a big difference but actually makes none. So I think it's good to have expertise out there that can help us, you know, make that link between a data point and you made a good point earlier around having a black box in a car makes a difference from a psychological perspective, not necessarily from a speed perspective sometimes. So there's challenges that we have to go through to assess that properly. I think holding on to all of our data all the time is a habit that we have, and maybe not necessarily always the right thing to do.
It's about, to your point, making sure that the data that you really need to use, you know where it is, you know where to get to it, and you know that it has value. There is definitely data that has no value at all, ever, and it needs to be gone. Because the more you keep it, the more you proliferate it into the cloud, into this data lake, that data marsh. Oh, did I say that out loud? Oops. At the end of the day, there is a process that you have to take, and it is painful, it is slow, it is fraught with major pain and suffering and anger and frustration.
Like a spring cleaning of your house.
Yeah, it's like spring cleaning, yeah. Who wants to do that? But if you don't do that, we miss the great opportunities that data can give us.
Ashok, one for you. What do you think about the implications of this in terms of, Sue is making the point, you know, the importance of cleansing data on really continuously. For the insurance industry, what is happening to the role of the actuary and the arrival of data scientists? How is that working?
No, I think maybe the first thing I would say is I run actually a team of data scientists, and my best data scientists actually are trained actuaries.
Interesting.
So let me put it that way. That's the first thing, right? This is not actuaries or data scientists. It's actuaries and data scientists. So the once we kind of get that clear, I think a lot of the implications are easier to kind of understand.
Agreed. They're you know, actuaries are pre-specialized data scientists, really.
Exactly.
Yeah.
That's a very good point. All right. Last question, and we'll wrap it up. Do you think a lot of progress has been made in terms of deployment already of AI on IoT telematics data, or is it much more into the future?
No, we've just scratched the surface, in my view. There's a lot that can be done. You know, there are certain carriers who have made a significant progress. You know, Ashok mentioned a couple of examples, but I think a lot to be done. And with technology now providing a lot of possibilities of, you know, using telematics and AI and IoT, and in conjunction with AI, I believe, you know, we'll see a lot more applications as we go forward.
I think we're seeing a lot of examples of where these things unlock opportunities that we may not necessarily have got to before, which is really, really helpful. And I think we're at that kind of cusp point now.
They kind of unfold on a real-time basis, yes. Yeah. Anything to add to that, Ashok or Sue?
I'd agree. I think we've just scratched the surface, and I think there's a massive amount to be done in the future. But I think it's accelerating. I think there's an exponential growth in using these kind of tools and capabilities.
And it's also setting ourselves up to be able to use it, right? So like making sure organizations have the capability to do so. I mean, to sort of name drop Beazley again, we have a Beazley Digital division where we focused on interacting with APIs to connect to sort of external data points from brokers or others to do the right thing. And that's a new journey for us that we've just started on. And recognizing that those opportunities are coming is what we've got to do.
Absolutely. I kind of agree with all of it, and probably as a closing thing, I'll just say it's a great time to be in the insurance industry, regardless of whether you're with AXA XL or Beazley or anybody else. And especially if you're a digital talent, data science talent, actuarial talent, you should be in insurance.
Yeah. Well said. Excellent. Thank you, everyone. Thank you. Thank you.
That was a punch for people who want to.
Thank you. That was a great way to come up to the lunchtime slot. Thank you, Sue and gentlemen, for a value-packed discussion. And it was great to get such a range of perspectives. We now have lunch. You have an hour to network, to eat, to meet new business contacts, to reconnect with people that you haven't seen for a little while. You have a choice to come back in here in an hour where we'll be talking about rethinking the next generation of customer, or you're very welcome to join the demo discussions, which will the demos, which will continue in the room next door. So I look forward to seeing you here or there in an hour. Thank you. Welcome back, ladies and gentlemen. We're starting again, so those of you networking can't pull yourself away from each other. Please note that we are just about to start. Welcome back. Hope you had a very good networking lunch. For those of you who want to see a demo, you're in the wrong room. For those of you that want to see a fantastic panel discussion, you're in the right room. So now we're going to talk about rethinking the next generation of customer, and it's my pleasure to hand over to the chair of this panel, Mr. Ben Fletcher, who is Chief Customs Officer at the Motor Insurance Bureau and an Executive Director of the Insurance Fraud Bureau. Ben's been in the insurance industry for over 20 years and has had a range of senior roles spanning claims and counter fraud. So it's my pleasure, Ben, to welcome you. Thank you.
Thanks very much. Good afternoon, everybody. Welcome back from lunch. Hope everyone's had enough sugar and carbs to keep them going for the afternoon. Yeah, I wear a couple of hats. The note there says I'm work at the Insurance Fraud Bureau. I'm the Chief Customer Officer. For those of you that heard Chief Customs, I'm not here for tax and revenue. The MIB is probably well known for a lot of the work it does in managing uninsured driving, but we also do a lot of work to manage a white labelled service for a number of client companies and also a number of databases and services for the general insurance market. So data technology and customer is something close to my heart, so I'm hoping it's going to be a really good panel this afternoon. Just going to start by introducing the panel. David, do you want to introduce yourself and then pass on?
Sure. Hello everybody, my name is Dave Priestley. I'm the Chief Digital Officer for Vitality Group in the UK. I imagine most people are probably aware of Vitality as a brand. For my kind of history there is really, I joined Vitality when in its previous iteration, when it was launched as a business back in 2004. It was called Pru Health at the time, and I think I was employee number 3 or 4, part of a little project group that founded the business, and obviously we've now built that up through health insurance, life insurance. We've got an investment business now, and most recently launched a car insurance business as well. And I guess just the kind of key differentiator, if you like, for Vitality is that we operate what we call a shared value insurance model, where we try and create a virtuous circle of generating positive value for members and wider, I guess, society at large, as well as driving improved underwriting margins for ourselves and shareholders. That's what we're about. So over to Andrew.
Thank you. So Andrew Pedler from Liberty Specialty Markets. I head up our client relationship team and claims innovation globally. So predominantly that means I spend a lot of time with our customers and our brokers, making sure that our claims service delivers as it's supposed to, and also to use our claims team to differentiate ourselves from other insurers. From an innovation perspective, I'm responsible for looking after our data, or working with our data scientist teams, and also partnering externally with InsurTechs to improve our tech capabilities, with always the view of working more closely with our clients. Just quickly, just to set some of the framework for how I'm going to answer questions. Liberty Specialty Markets, if you don't know us, we are a global specialty insurer, writing both insurance and reinsurance products across 60 offices worldwide. We do write all the specialty lines, but in total we write over 50 different insurance products. And that means when we're talking about rethinking the next generation of customer, we have to be quite clear in terms of who we're talking about, because we have many different customers in many different areas. So looking forward to today, and especially being back in person. On to you.
Hi, I'm Wendy Williamson. I am a client delivery partner working for Capgemini. What that means in real terms is I work directly with insurers doing transformations, a lot of digital transformations at this point in time. And so that means that we look at the whole technology stack, that end-to-end life cycle, policy, claims, everything. And we work with a lot of insurers, InsurTechs, because you know, as part of those end-to-end solutions, we will tend to be integrating with with quite a number of those as part of those transformations.
And I'm Jeremy Owenson.
I've been in the insurance space for a very long time. To give you an idea, I started off in a company called Eagle Star, and my job was to collect the rating cards from our competitors, type them onto a spreadsheet and use that to work out what our rates were going to be. I got the job because I could type, and that's because I learned to type on a typewriter rather than a computer. So that's my claim to fame. I've joined Luxoft 6 months ago. Luxoft is an analytics and engineering business. It's very big in banking and capital markets. But what we've discovered is that a lot of the things that we do in banking and capital markets, particularly in the analytics space, are directly transferable across into the insurance sector. So I joined 6 months ago to help build out that insurance practice, to start taking those banking and capital markets tools and see how we can deploy them in the insurance space. So that's me.
Brilliant. Thank you all. So I've got a bunch of questions that we're going to start with. If you want to ask questions a little bit later, there'll be plenty, so feel free to ask those and log those via the app, or we'll also be making time to do it the old-fashioned way. So thinking caps on for those questions that you want. I think coming back out of, for those of you that were in the panel before, looking at technology and how much has accelerated and changed during the pandemic, I think for me, one of the things that's really interesting is it's accelerated the digital and technology journey that a lot of companies and individuals have been on. And therefore, as a consumer, I now no longer benchmark products specific to the vertical that they're in. I look at all products, and therefore you have the likes of Amazon and these digital providers that are setting the benchmark. So I think this is going to be an interesting discussion for us all in terms of next generation is not only future customers, but also how our customers' needs are changing. So David, if I could start with you, I mean, obviously Vitality have got a great market presence. How do you create products that are innovative and are driven and respond to customer insight?
I mean, first thing I guess I would say is obviously Vitality is somewhat unique in its kind of approach to insurance. So I certainly wouldn't want to suggest that the way we approach it might necessarily work for everybody. But I mean, to share some insight into how we go about it. I mean, there's probably, I would say, maybe kind of 3 or 4 key kind of principles or key kind of elements to the approach. I think the first thing that's certainly very, very important from a Vitality point of view is that innovation, so product innovation, and putting the customer at the center of that innovation is part of our overall business strategy and our organizational culture. So from the top of the organization, there's an absolute commitment to a high cadence of product innovation. And because of the nature of our kind of business, I suppose, we have a proposition that's more purpose-driven. So, you know, what we're trying to do is deliver a different kind of value to our customers. So in the context of health or life insurance, our purpose is to try and make people healthier. In the context of our car insurance, it's to try and help people to be better drivers. So those aren't traditional insurance kind of goals, if you like, but what they do is they give us a purpose that is there to drive innovation on behalf of the customer. And that in turn gives us the opportunity to create an organizational culture that galvanizes around those purposes. So that's kind of almost like a strategic and cultural sort of context. I think then from a more practical point of view, I guess the second principle is just commitment in practical terms. So accountability at an executive level for innovation, dedication of the right kind of resources and skills to the process, and an investment in those resources and skills. So we have, you know, dedicated R&D teams whose job is purely to look for those product innovation and market opportunities. And increasingly, I'd say, as part of that process, we've been through a bit of a transformation over the last probably 3 to 4 years, where customer experience and insight around customer experience is now as important a part of the R&D and innovation process as the product idea itself. I think you wind the clock back 3 or 4 years, people were dreaming up different sort of insurance mechanisms or different benefits or features for products, and that's not enough from our perspective anymore. You have to you have to develop those concepts in parallel with how you're going to execute the experience in a brilliant way as well. And so that requires the right skill set. So a lot of CX, obviously digital experience design being actually, the way I would put it is we've infiltrated our R&D teams with the right skill sets from a customer insight and an experience design point of view. And then final quick point, I think, is just having the right tools to make that possible. So, good technology, both from a customer experience insight point of view. So we've got various platforms that help us get VOC insight, very rapidly, both online, offline, feed that into the process, have good mechanisms for ensuring that senior stakeholders get regular visibility of that insight, and then have the ability to iterate experiences once they're live. You never get this stuff right first time, as everyone will know. You've got to be able to respond to the feedback when you get stuff out in the market, and so having that kind of agile, having those kind of agile platforms that allow you to iterate is super critical as well. So I guess those are some of the kind of key insights from a vitality point of view.
Great, thank you. And obviously that's very frontward focused, understandably. Andy, I know from your perspective that as a specialist insurer, the claims process is also considered part of products. So how and where does the claims process factor in from a product innovation perspective?
I think the first thing to point out is, claims has always been part of the product. I think particularly in a specialty area, we tend to get that confused, and we separate what the policy is, i.e. its wording, and it tells you what you're covered for and the premium that's afforded. And then we kind of treat claims separately. And I think there's a couple of reasons for that. One is a misunderstanding of terminology in terms of what the product is. And I think we're moving away from something that was just a pure indemnity risk transfer from the insurer to the insurer. And actually we're looking at a product which does a whole bunch of other things, like offers additional value-add services. So particularly, and I was interested to hear from you guys in terms of what you're doing, because that will continue to transfer into the specialty space. The other thing from tech and innovation, in my view, is it's made the claim service a lot more relevant, because you can then really easily differentiate between what is good claim service, what is an appropriate claim service, and what is not good. And the way we've done that is through advances in certain types of artificial intelligence, particularly natural language programming, where we can automate certain types of claims, particularly those low complexity, high frequency claims. And what that does is it allows you to sell the product in a different way. So a good example would be, say, earthquake insurance. If we can sell a product to cover you for earthquake that also pays out within 30 minutes, that's a much different sell to just selling earthquake insurance. So it makes you a lot more relevant, and we're only going to continue to see that more often. Parametric is a great idea, I think, which will explain kind of what I'm trying to get at between the difference of a policy and a product. You talk about parametric insurance, and that is innovative in itself, right? You've changed a policy from an indemnity-based policy to something else, something that responds to an external trigger. But if you try to sell that without a claim service that was automated, i.e. you say, okay, we will cover you for your crop, your whatever you might be growing, and we'll cover you for a lack of rainfall. If in the event there was a lack of rainfall, you then required the insured to find a data set to prove that to you, rather than holding the data set yourself, that's a difficult sell for a product, right? So actually what you're looking at is, what does that claims service do? What does the product do? And I think the more we can integrate tech capabilities into the product, we'll start to realize that actually claim service is not separate at all from the actual product that you're offering.
Thanks, Andy. Wendy, Jeremy, any views on innovation you wanted to add at this point?
The only thing I would kind of add to this is a recognition that the technology that insurers have has to be able to adapt to this. So a lot of the new products that are being brought to market don't necessarily fit a standard insurance platform. So we need to start thinking about what is the future platform, but we also need to think in terms of product development cycles, how do we get things out there quickly to marketplace? So where we've got new propositions and new products, how are you developing those on a proof of concept basis, getting them out to your customer, testing it with the expectation that you might have to dump it if it doesn't catch, or you have to industrialize it if it does catch. So having the full suite, I think, is important.
And I think in order to retain that ability to be quickly to the market, which is, can't be underestimated, A lot of the time when we're looking at the technology and the end-to-end solution, we're spending a lot of time actually simplifying it, simplifying how the technology is used, what the components are actually within those products. We find lots and lots of duplication, lots and lots of superfluous stuff when we actually start to go through, the legacy products, as it were, and shape up what the product looks for the future. When you get, typically we get told there's hundreds of products that we sell, but when you actually go into it and you actually look, you map it all out, actually there isn't, right? And when you actually then have that understanding of the product and how it works and how you sell it, then you can be much cleaner and simpler about your technology, about your product and how you offer it to market.
Yeah, thank you. And Wendy, I mean, inevitably at the moment you can't have a conversation about customer experience or in this marketplace without talking about digitization, automation, transformation. What's your view in terms of can you digitize and automate everything, or is there some stuff that's just too complicated, and how do you make those decisions, or how do you place your bets in the right way, I guess?
Well, I guess if we were talking about 2 years ago, some people might have said, some things can't be sold digital. I think that would be a hard sell now, given the last 2 years that we have just been through. And I think it's also important when we talk about digital channels is to understand that actually we don't just have sort of say one digital channel. When we are launching products out, we have multiple digital channels that we're normally launching on. So that can, that could be your normal web, that can be your self-service, it could be your affinity partner website that you've given them, your broker or your agent website. So in actual fact, there's multiple digital channels that are actually going on that we launch out to. So what we find is that when we're dealing with something more complex, it's not the case that something never touches digital. Actually, there's quite a high demand to mix across the digital channels, and where it's more complex, there will be that human interaction, but it's a value-add human interaction. Self-service is very popular as we've been rolling out, particularly at renewal, to be able to go in and do some things on those renewing policies, but then to have the interaction about the more complicated aspect of that. And that still gets you those benefits there. And it's a similar concept then when you look at claims, because even if you've got a very complicated claim, not every part of that claims process then has to be manually handled, right? And that isn't necessarily to the benefit of the customer either, right? Actually, if they can access some of that information digitally at their own convenience, that is a much better customer experience, in that respect. And what we're spending quite a bit of time with our clients doing is actually harnessing data to work out, even in those more complex claims, where are the value add points, right? What interaction actually makes a difference in the outcome of the claim, or the fairness and consistency with the way that you deal with the claims. And we're looking at building those models in, so it's learning, and we've got decision engines there that are directing, this is what we should automate, and this is where it should be handed off. And we've even got some insurers that are being really radical and saying, look, we're going to start from the mindset of it's automate first, and you only take it off the automation route if there is a real value-add reason to hand it to a person.
I mean, I think it kind of depends a little bit how you define complexity. I think you kind of touched on it a bit earlier. I mean, I think consumer expectation certainly is now for more, let's just say, more sophisticated products, more kind of sort of flexible products where they can tailor benefits and features. That is kind of inherently complex from a delivery point of view. But I think the challenge is to demystify that and simplify it in the experience, right? So it kind of on the face, something can look complex on paper, but that's the challenge, And I think I completely agree with Wendy about the kind of value point, which is, I think one of the key things that we're trying to do there is rather think a bit less about when we're trying to say, channel shift or move things digital in that sense, but look at the insight from the customer to see at what points in the experience are we either creating value with a human intervention or destroying value with a human intervention, and then use that as the sort of guide for where to deploy a kind of human interaction. So it could be a point of complexity in the product. I think a lot of the kind of research now is talking about trust and empathy being one of those key determining criteria. So if you've got an experience or a moment in an experience where trust or empathy with the customer is super critical, then maybe that's a point at which you need to think about going into a sort of contact center environment, or even demographics or preference. So certain customers might just prefer to interact in a certain way, and I think that might be a defining characteristic or defining criteria in when to push people online versus offline. So I think for me, it's about having the sort of tools to give you that insight around, what points in the experience you're either creating positive sentiment or negative sentiment, and then design experiences with that in mind.
I agree. You don't always have to have digital and automation together either. So say we look at a complex product, a directors and officers product, for example. You may not be able to automate yet the policy wording, and that's how, when I think of complexity, I think of complex clauses in insurance contracts, because they are hard to automate at the moment. But what you can do is you can still provide a digital experience for that customer or the risk manager. So you can give them online access, to what is happening with that claim at any one time, who they can speak to. So that's why we at Liberty have developed online portals to allow them to do that, because then it creates that digital experience. Even at the back end, nothing's being automated at the moment. I think you're going to expect that more. Our customers certainly are. I think the pandemic supercharged that kind of trend, where that expectation is to be able to see things in real time. Everyone can now track their dominoes when it's outside their door and expectantly wait for it to get to their door. Let's not get confused that those risk managers who are in high profile roles, they still have the same personal line services at home, and therefore they still have that same expectation to be able to see what's happening with their claim, regardless of its complexity, in real time. I think that the more the market comes around to that acceptance that you don't actually have to digitalize and automate everything, you can just automate the bits and digitalize the elements that really provide that improved customer service.
And Jeremy, from your perspective, obviously with the conversation of digital versus people, what's your view on the balance between digital versus human interaction, and what does that then mean for insurance professionals in the future, do you think?
So interestingly, we talk a lot about machine learning. The term AI and machine learning are often interchangeable, but machine learning is basically learning from a human intervening in the process that the machine doesn't understand. So I think that is going to play a bigger influence as technology gets better. So as the machines are understanding the process by determining a claim or determining the choice around selecting a product, the human intervention will help keep the machine on track, but more and more will be done by machines rather than by humans. That doesn't alter the fact that there are certain circumstances and certain classes of customer that do want that human intervention. When we're getting into injury claims as an example, you don't want a machine just saying we're not going to pay your claim because you want somebody to be empathetic and understanding. So it's about getting the right balance between automating the tasks that provide better service, reduce cost, and provide a better customer experience, but retaining people for the tasks that people are best to deal with.
So do you think what does the workforce look like in the future? That feels like a different workforce for the insurance professional versus what the markets historically had.
This is one of the reasons why I've switched more to analytics. I never really understood why insurance is analytics. At the end of the day, rating, even if I've just got all those paper rate cards, is somebody's doing some analytics in there. I think that the claims departments are going to start recruiting more and more data analysts. Rating and pricing departments are going to have more data analysts. Fraud is going to be led by data scientists, not necessarily by fraud investigators. So it's a bit late for me, but if I was going into this career 20, 30 years ago, I would be concentrating on understanding data, because that is definitely the future.
Yeah, I think I'd add to that. I think from a contact centre point of view, I think one of the things it might be a gradual change, but I think ultimately potentially quite profound. The skill set needed to support that human intervention over the telephone, I think, is going to change considerably. From we've been through that process of kind of enabling quite transactional contact center interactions, and I think increasingly those simple transactions will be taken out of the contact center, and it'll be you'll need individuals have a much broader knowledge of the overall products and services that you offer, and have a skill set to handle lots of kind of non-standard, multifaceted kind of queries. And I think that's going to be quite a significant change in how we approach resourcing for those kind of business models.
I think we need to play, as humans, we need to play in the areas where artificial intelligence doesn't do it so well. So those areas of nuance, the grey areas, the empathy, it's just not good enough at the moment. So we can really play in that area. The other slight bit I wanted to point out, because I always try and see if I can disagree with people on the panel to make it more exciting. I don't really. But the only bit that I disagree with a lot of people when they say that claims handlers are going to need to have more tech skills, data skills, analytical skills than ever before. I'm not necessarily sure that's true, because what we usually see with the advent of new technology is people specialise into different areas, and they do that because things get more complex. But I can run a pivot table, I can write a macro, I can't write code. Now, I didn't need to write code to do that role previously, but now you do. That would take me a long time to learn. So actually what I think we'll see is a split of a claims department, a traditional claims department, into your operational side, your technical, analytical, and then your client facing. Whereas I think even within now or in the last kind of 5 years, we've expected our claims handlers to be a little bit of everything. And I think we'll see more of a divergence of that skill set as we go forward. Just kind of not really disagreeing, but taking it down a little different way.
I think what people don't want to do when they phone up then is get to the end of that and think, well, why couldn't I just have accessed that online, and that, that's where it has to be different. And if you've gone to the trouble of making that phone call, it should be because it is something a little bit more complicated, nuanced, a scenario. You're not quite sure whether you've interpreted things correctly, whether you're covered. And therefore, that person, if the very first thing they do is say, I don't know, I'll have to go and ask somebody, that's not going to be a great experience. So I think that's where the kind of, it can't just be somebody that's reading the script or ticking boxes, right? It really does need to be a different experience. It needs to be worth the call, right?
So we've got a couple of questions come in, which I'll come to. Inevitably, there's a big focus on claims. It's such a big part of the process. There's two questions. I'll kind of wrap them into one, actually. So the first question is, should improving the claims customer experience be the priority? And the second is it possible to automate a claims service process? Somebody mentioned in the previous panel, I know, about Lemonade, and they're kind of the poster child of automation, but interested in views from the panel of should the claims experience be a priority, and how realistic is it to automate the entire process?
I mean, I'll give you a good example, a practical example from the floods in 2007. And I was talking to a claims manager in an insurance company, and he said, it's really interesting. We've got customers, Cheltenham and Gloucestershire was particularly badly affected. And he said, we've got customers who have come to the end of their alternative accommodation, because the alternative accommodation only lasted 12 months. And we haven't managed to dry out their properties. And they're kind of left hanging. And I said to them, well, why didn't you just write the house off? You write a car off if it's beyond economic repair. Why are you letting this customer live or have a house that's a year old in an uninhabitable state? So I think we need to look at the claims process with a new light and come up with better ways to handle those sorts of claims going forward. And if in that circumstance, if the automatic tool said, actually, we work out that it's going to take more than 12 months to dry your house out and get you back in it, then give them a total loss settlement, pay the value of the house on day one, and let them get on with the rest of their lives.
I think so. I think we also need to be realistic in terms of, so I agree, yes, we should be focused on the claims experience and the customer experience, but we also have to be realistic about what we're selling and the market we're in. So even in your personal experience, when you buy insurance, for the most part, what people do is you look on your aggregator website, you don't buy the cheapest because you don't trust that, you go down until you recognise a brand that you know, and you assume the claim service will be okay. Now the professionals in the room might look into it in a little bit more detail, but a lot of people don't. And again, in the specialist market, when you're looking to place a risk, the first question is coverage, price, capacity, maybe aggregate if it's a cat exposure, then claims comes after that. So I think what we need to do is look at, okay, if that is the case, how do we bring claims and other ancillary services, to your point earlier, to the forefront, to make it very much then it is actually part of the product. It's not just something that they might or may not happen afterwards. I think we as an industry need to get better at explaining that to the customer in terms of why it is so important and why we should really focus on the customer experience.
Yeah, I mean, I think that's probably fair in terms of acquisition, but I would say that in terms of customer retention, I mean, claims is like the ultimate moment of truth, right? That's when it all matters. So now, obviously, only a percentage of customers are going to go through that experience, but if you fail at the point at which that product matters most of all, you're not going to keep that customer. So I think for me, that's where the kind of real strategic focus on, continuous improvement or innovation in the claims journey comes through. Yes, there's opportunities potentially to drive more acquisition, but actually it's really about building that reputation and delivering on your promises for your customers. And I think from an automation point of view, I mean, I can kind of come back to what I was saying earlier. I think it's, should you automate or not? I mean, what you should do is be understanding, what your customers are looking for from that claims experience and where the opportunities are to enhance it, which may mean automation in some aspects, and it may not in others, but be kind of more insight and customer-led in those decisions, rather than, I think, historically the approach has been more of a kind of operational efficiency-led kind of mindset. And I think that's the kind of change we're going through now, is leveraging more of that customer insight to identify these kind of opportunities to deploy technology to help with the claims process.
Yeah, I mean, I think you always get to a point where, in terms of complete and utter end-to-end automation, there are only so many types of claims that are actually going to fit completely into that mold, right? And I don't know what the comment about Lemonade was, but I imagine it's the fact that it plateaued. It was very rapid how many were automatically settled, and then it plateaued for the last few years. And that's what you would kind of naturally expect. And we do a lot of the simple claims where, it's just one loss and it's very simple to do the fulfillment. We're pretty much there in terms of automating those end-to-end, really. It's where it's more complicated, and the fulfillment, it requires a number of third parties and scheduling, and some of that scheduling shifts. So it becomes more complicated than actually the execution of the claim and what the different communications are. However, that said, when we look at an actual claims process, I do believe there's a lot of activities that occur in claims processes that really just don't add value, and you can't get into that and understand that properly unless you actually pull the data out of your system and see what you actually do with those claims. I see all these beautifully drawn up end-to-end claims processes, but how many actually follow that beautiful happy path? Probably not that many. And how do you know that happy path is the happy path? That there could be a better way of doing it. And actually, I think becoming much more data-driven, looking at the data and let the data telling you what was a good experience, because you can map out customer complaints and moments of delight from the customer as well. Sentiments can be mapped into that data, and I think that's where you can actually really get real value and add automation into the process, automate or even eliminate steps in the process where you're not going to change the outcome, why would you continue that claim for much longer? Why wouldn't you find a quicker settlement? And that's what we, using data a lot for now, is to actually say, based on this pattern of behaviour, is anything we're going to do next going to change this outcome? If it's not, then we should be getting to settlement as quickly as possible.
I agree. I think the exciting part actually is the bits that you can automate rather than trying to automate everything.
Yeah.
So there are some instances, say, look at a large commercial property that's been flooded, for example. You may not wish to automate everything because there's going to be a lot of question around the value of things like the contents of the buildings and the actual claim. But what you can do, and what we try and do, is we have a relationship with a number of different providers for satellite and aerial imagery, for example. So in the event of a hurricane or a catastrophe, we'll have access quite quickly, within 24 hours, of an image of that property. Now, if we can see that there has been damage or there has been a flood, and we have a claim made of X amount, then we should be able to release an early interim payment to that customer. And that's an automation of part of the process, even though the rest isn't automated. But that's an example where we can tap into that wider insurance ecosystem of providers. We often say that we're not a tech company. We're experts in taking risk and managing risk. So if we can partner and make sure that actually now our product does a lot of different things, then we can automate bits that really matter. So we can get payment to the customer very quickly, ultimately in the end game, without someone having to make a claim at all. The full automation is maybe not something that we want to get to too soon, if ever.
Great. I'm going to pause there for a second and see if there's anybody that wants to ask any questions the old-fashioned way by putting a hand up. There's a couple. I think they've got some microphones. I think the lady at the front here was first. Oh.
Thank you. First of all, I thoroughly enjoyed it. It was quite insightful. The question I have is, when we think of the next generation of the customers with all the telemetrics data, with AI and IoT, what do you think of preventative measures for insurance companies? For example, health insurance, somebody who has cancer, rather than paying when the claim comes, maybe we can monitor his or her health. And same with flood or marine insurance with geometric geolocation and all those data. So just curious about it.
You don't work for Vitality, do you? I'll take that. I think it's a great point. I think that's obviously a big part of what we're trying to do with our proposition is be preventative, kind of with the holistic product as it exists. So help people to get and stay healthy, help people to be better drivers in the context of car insurance. And one of the things we're working on at the moment is, you picked up on an example there around cancer, and we're doing a lot of work at the moment looking at how we can leverage all the data insight we've got, putting together the kind of wellness data around people's lifestyle choices with the kind of assessment and screening data that we get as people, our customers, use those parts of the product, and then the claims data that we have when people obviously have to make health insurance claims, stitching all those things together. And we do this obviously in around 30 different markets all over the world. So we've got a global data set, millions of life years that we can use to, in the not too distant future, start predicting where it's most valuable to offer a particular customer a certain intervention that is potentially going to be very beneficial in terms of their health. So a simple example would be, we're in a position now in the data to be able to identify when it is most valuable to offer a full health screen to an individual because they're in a particular risk category for cancer, for example. And obviously the next phase for us is to translate that data analytics into an experience and a proposition. And going right back to the start, that's the kind of thing that we're doing at Vitality from a product innovation perspective, which has that sort of customer kind of purpose and focus at the heart of it. And I think Similarly, we'll be, we're kind of much more recently into the car insurance marketplace, but it's the same principles are going to be applying there. We're going to be trawling through all the data we have from a telematics point of view to understand, what are the patterns in people's driving which lead to then accidents, and how can we use that insight within the product to help people be better drivers so that they are less likely to have those accidents. And I think it's a superb point and a real opportunity, not just for Vitality, but for lots of other insurers in different markets.
Thanks, David. I'm conscious of time, so the chap who's we stole the microphone from him.
Thanks very much. Apologies, it's another question for David. It does actually link, I think, a little bit to the question that was previously asked. You mentioned infiltrating R&D teams.
Yeah.
So what does a good R&D team look like? And if you're willing, what sort of data do you expect the R&D teams to provide you with?
What does a good R&D team look like?
Or even R&D model?
Yeah, I'm just scanning the room to make sure none of my colleagues look, I think, so the model that we have is, we kind of, I think is quite unique. It's sort of difficult perhaps to sort of translate it to other businesses, but we have essentially we employ very, very smart people. We employ actuaries as our R&D function, but they're commercial people, as opposed to, like your classic sort of stereotypical kind of pensions. These guys are super smart and they have no other accountability other than to, kind of spend their time thinking of how to improve our propositions, how to disrupt new markets. But, it sounds a bit kind of simplistic, but super smart people with dedicated time and, a clear sort of empowered to come up with ideas that are going to disrupt marketplaces. And we just give, when we align our teams to our product verticals, and a combination of product verticals and our customer journey segments. So we break our customer life cycle up into acquisition, onboarding, servicing, etc. So we've got a bit of a matrix where you've got R&D leads for product verticals and customer journey segments. And so they're working with a group of stakeholders in those cells, if you like. And in terms of the data, mostly it's us providing them with data, actually. So we're kind of feeding those guys with a lot of data from our VOC platforms, from the performance of our products and experiences. So digital experience data, VOC data in terms of, kind of sentiment and kind of comments from customers. And then product engagement data, I suppose, is how I would describe it. So to what extent are our customers engaging with different features and benefits within the product suite? And we're really giving them that insight and allowing them to create based on that. I hope that answers the question.
Thank you. I'm very conscious of time. We've got literally 2 minutes left. So I think I'm going to ask each of the panel members one simple question. If we can try and keep it to like 30-second answers. And I think the question is, what's the one most important thing to impress the customer and make sure that we become more customer-centric in the future? Maybe if I just start with you, Jeremy, and we just work down the panel.
Sure, it's give them a good personalised digital experience. We have enough information about customer segmentation to be able to personalise our offering to them, and we just need to make sure that we can deliver on that.
Great, thank you. Wendy?
Wow, it's pretty much what I was. Yeah, it is about the relevant communications, right? And I think the one thing I'd add on to that is understanding that time's a commodity to people, and the last 2 years has only heightened that. So actually people want to be communicated in the most efficient way possible.
Great.
I think for me, this is where it really does come into from a claims perspective. The quickest way to lose a customer is to give them a poor claims experience. That's just an absolute fact. It's called a promise to pay, for a reason. So try and keep your promise. And if you can keep innovating as well to make that experience quicker, better, and more enjoyable for the customer, with them in mind. I think that's probably the most important thing.
Final word to you, David.
Yeah, I mean, I think all those points, obviously, I agree with. I think the only other thing I guess I'd say is really work hard at coming up with brilliant products that deliver value to customers all the way through the life cycle, not leaving it till renewal or whatever it may be in the traditional kind of insurance model, and executing them brilliantly. You made the point at the start, the bar has been set high by companies outside of insurance, but that's what customer expectation is now. So come up with brilliant ideas and then execute them brilliantly as well.
Brilliant. We're out of time. I don't know about all of you, but that time flew by for me. I think we could have carried on for a bit, which is hopefully a sign of a good discussion. So if you could just join me in thanking the panellists, Jeremy, Wendy, Andy and David.
That was great, thank you. Yes, that could certainly have gone on for longer, and I'm sure there'll be people who want to pick up with you during networking sessions. It was great to hear about the innovation that's required to meet customer experience demands, and it was great to hear how you thought about the next generation of customer needed a rethink. We're going to carry on the rethinking now, this time with health and life insurance. It's my pleasure to welcome to the stage Eric Fulweiler, who will be chairing this. Eric is co-founder and CEO of a company called Rival. He's an entrepreneur who builds businesses through modern marketing and management practices, a well-known speaker and thought leader in all things growth, including marketing, sales, management and innovation. You're Chief Marketing Officer at 11FS and also Group Director at Vayner Media, which has got me thinking we're going to have a very unorthodox and exciting panel discussion. So I'm looking forward to that. Welcome.
I hope so. That was the brief, so I'm going to try to deliver on it. We might even talk about NFTs if we get there. Has that been dropped yet today? Has anybody talked about NFTs? No? All right. We'll see. So thanks for sticking around. We got a really exciting group of people to speak to you today. We're going to talk about rethinking health and life insurance. We're going to talk about a bunch of different things. We're going to talk about trends. We're going to talk about technology. We're going to talk about how to reach a younger audience and customer base. To be honest, I've got 4 questions and we have 45 minutes. We could certainly fill the 45 minutes with these 4 questions, but what I'm really hoping is that we can get a lot of questions from the audience coming in and make this as conversational and engaging as possible. So please, from the very beginning, I've been told that if you put questions in, they will show up on my iPad. Sounds like magic, but we'll see if it works. So yeah, we'd love to hear from you as we go through it. So as I was introduced, just to give you a little bit of context on kind of how I'm approaching this topic and this conversation. So my background is in the startup world. I worked at a bunch of different startups in the US, mostly in kind of like the Web 2.0 world. I spent a decade in advertising agencies, including 7 with Gary Vaynerchuk, and if you have not heard of him, you should definitely check him out. He's an interesting guy. But it was all around kind of digital marketing and media. How do you build brands? How do you reach customers? How do you deliver business results through modern marketing? I spent the last almost 3 years at 11FS as the Chief Marketing Officer at 11FS. So I see a couple nods. People might have heard of 11FS. Basically, what that company does is they build greenfield digital ventures for traditional financial service organizations, more in banking than insurance, but a little bit in insurance as well. And then as of 6 months ago, I launched Rival. So we're a marketing consultancy. We build challenger brands, challenger go-to-market strategies, and capabilities within existing marketing functions. But that's quite enough about me. Let me turn it over to the panel to introduce themselves. So Samesh, why don't you go first?
Sure. So hi, everyone. I don't know if you can hear me. No. Can you hear me now? Yeah, perfect. Okay, sorry. So my name is Somesh Chandra. I am the Chief Health Officer for AXA in Europe and Latin America. I have another hat which I wear is the head of business head for digital health for the AXA group, which spans across all the geographies we operate in. I have been in this role for 3.5 years. I joined AXA 6 years back as the COO for health globally, and my job was to set up the health business line at that point of time in 2016. It's been a great journey because, of course, we are a large company, but we wanted health to be the pillar of our strategy going forward. So that's something that I worked on quite a bit in the last few years. Before that, I was the acting CEO for Bupa in India. So I was running the Bupa business. I've also had an experience of opening up a new company in India, on health insurance. And before that, I've worked in McKinsey. I was the head of the outsourcing and offshoring practice. And then I've done tech for the 10, 12 years before that in McKinsey. So experience around tech, worked on a lot of health, insurance, and consulting in the meanwhile.
Great. Jim?
Okay, hi, Jim Searle. I'm the Chief Operating Officer at WPA Health Insurance. We're a single line health insurer based over in Taunton in the West Country. I've been at WPA for just over 5 years. I was CIO for a year and then Chief Operating Officer since then. Before that, I worked in defence technology and things like that, and before that, the Army.
Afternoon, everyone. I'm Will Wood. I head up the Life and Health Business Unit for Instander. Instander is a software as a service policy administration system and works across P&C and the life and health market. Prior to Instander, I was at Aviva for 15 years. An eclectic mix of roles, so I won't sit here and go through them all, but ended up in a digital transformation role which spanned pensions over into general insurance and into life and health as well.
Cool. Yeah, I think it's really interesting hearing you guys introduce yourself, because not only is there such a breadth of experience, but you've all held roles that required you to kind of think about how to change an existing business. So literally digital transformation or setting up a new business in a new market. And I think that's going to be really an interesting perspective as we talk about some of the questions today. So first question, what are the major trends reshaping the health and life insurance markets? We can go in any direction with that. Why don't we go back in the other direction? If we want to start with you, Will.
Yeah, sure. So I mean, if I think about the experiences that I'm seeing within Instander at the moment from a technology point of view, I think some of the subjects have been touched on a bit today. So you've got the new influx of wearable devices that are just getting better with the data that can be collected. I think that's certainly a trend, not across all markets. I look across Asia and into Africa and into the US as well as Europe, and I think they're all at very different stages. Well-being is a big one. I think the big winner, and I think it was in the Swiss Re report recently, is digital GP. Digital GP comes with a lot of products now. It's a really good service. I can testify to that myself. And I think in markets like Germany, it's now mandated as certain health products have got to have digital GP within the proposition. So that will continue to be something that sticks within the market. So I think, yeah, wearables, definitely well-being, and then I think the other one is around embedded insurance. I think even in the life and health space, there's certainly some new distribution channels that can be looked at to be able to place the products in the right place for customers at the right time for the right reasons. So they're probably the three I would focus on.
Jim, can you build on that?
I won't repeat, kind of cover that ground, but certainly from the health space, I think it's because we've all spent the last 2 years at home, people are thinking about how do we service our customers kind of far more remotely. So digital GP, but also kind of genetic testing, fingerprick tests, definitely wearables, and I think we're just getting started in that space. I think the amount of information we're going to be able to pull in to support customers in the future to kind of help them make daily decisions about how they live. We're just at the start of that journey. And I think there's basically a tidal wave of demand and awareness about health insurance at the moment. And I think trying to cope with that as a how do we as a supplier kind of meet that demand, keep the customer engaged, but also kind of help them to understand how they can help themselves. And that's where I think we come back to the self-serve, the digital, the genetics as we go into the future, and the wearable technology. And integrating all of that into one place that's easy and intuitive to use is actually pretty difficult.
And I think just building on that word intuitive, and you also mentioned expectations, which is something that we were talking about in the speaker room before we came on stage. Do we want to talk about that real quick? I mean, I know it's not a separate question, but within this conversation around trends, the shifting nature and landscape of consumer expectation, both within the category of health and life insurance and outside the category of health and life insurance.
Yeah.
As consumers don't, humans, let's forget the word consumer, human beings, we don't only interact with a product, a service, or a brand within that category. We interact with the world of products, services, and brands, and expectations can get set by other categories as well. Do you want to expand on that a little bit?
So I would say that I've sat in most of the talks, and actually a lot of this has been discussed already, that people want to treat their health insurance as they treat their Netflix experience or their Domino's experience. So they want to know, they want to be able to claim on their phone, they want to be able to understand their policy on their phone, they want to be able to access GP on their phone, they want to be able to upload their, at least part of the journey on their phone. So if they want to book a GP appointment, they want to be able to do that on their phone. If they've got to do a pre-authorization, then to go and see a consultant, they want to be able to do that on the phone. They want to find the consultant on their phone. So everything is now really for a certain segment. And again, we've heard a lot today about, knowing your customer. There's an omni-channel experience. Not all of our customers want to do this, but probably 50 to 60% do. So we have to be able to offer up a large part of that experience, whether it's the initial consultation, the diagnostics, et cetera, or understanding where you are in the claims process. And I don't want to describe them as hurdles, but what things you need to overcome to get to where you as a consumer want to be. We need to be able to kind of offer that up for those customers that want it on a phone or a tablet, and make it easy to understand and pleasurable and not stressful. Try and take the stress out of it. A health insurance claim is probably one of the most stressful things you'll do for obvious reasons, and we need to actually help that journey become stressless, not put stress in the way.
Yeah, and I think we got a question coming up later on about personalization, so I'm sure that we'll talk more about that. Samesh, how about from you? Major trends reshaping the landscape.
I'll talk about health insurance, but health in general. If I just zoom out for a minute and think about where are the needs, because that is where the trends should come from ideally. So if you think about the needs today, there's been the innovation in the health space has been quite significant in the last 2-3 years, but actually it has started long before that as well. So I think we are building on that. There are 3 things that I think people are facing today which you have to solve for. The first one is the cost of care. I think that's becoming a reality. Insurance and even healthcare is becoming more and more expensive. GDP growth is at 1 to 2%. Inflation is at 8-9% in terms of medical inflation. We will hit a wall. So let's be real, we have to find a way to do things better, reduce the cost of care. The second one is more around this whole ecosystem is very complex. And as you were saying earlier, people are used to shopping on Amazon and watching Netflix. Health, which is something so critical for our lives, why can't that be something similar, right? So I think it's more about just the complexity will be there because health is not an easy subject, but for the consumer, it needs to be simple. And we'll talk more about it. And the third one is around the quality of care, which is, we've talked about healthcare more as a fee for service, but actually we need to move towards outcomes. And there's a lot of talk that's happened about it, but we haven't done much about it. So if somebody goes to see a doctor and they don't feel well, if they don't recover in 5 days, they still go to a doctor again and they have to pay the fees again. So I think I'm not saying it's hospital or insurance or whatever it is, it's actually that whole problem that needs to be sorted out. So I think if you think about the trends, all the trends that we're looking at, and we'll talk about it in the next few minutes, are around cost of care, quality of care and accessibility, and simplifying this whole complicated healthcare ecosystem.
Yeah, it's really about getting to the job that the customer needs done in their life as opposed to the product that you sell. So moving on, and please continue to send questions in. We'll start to weave them into the conversation as we go. So second question from us, what are the possible positive and negative side effects of rapid digitalization in life and health? And I will throw that up as a jump ball for whoever wants to jump in first.
Yeah, I think one of the things that comes to mind, which is critical, and someone's just mentioned it, is definitely around the claims experience. So I think everyone wants to get digitization right, but if you push too hard and take out some of the pieces of the value chain for the customer, which are really important and at an emotive time, that could be a consequence of this. So making sure that claim journey has still got a person at the end of the phone to be able to speak to at a time when they're going to embark on this new process that they've never been through before, I think will continue to be really important. So making sure that we digitize the right parts is just as important as thinking about when an actual person is needed as well.
Maybe I'll just go next. I think building on what Will just mentioned. So I think we sometimes go from completely physical to completely digital. And at least in healthcare, it cannot be either of them. It can't be completely physical because we don't have those many doctors and we'll never have a situation where supply will become more than demand. And on the other side, if everything is digital and we don't get that touch and feel, it's a problem. At least we have been offering teleconsultation services for a long time now. I think more than 10 years, in some countries even more than that, for example in the UK. And the question is, teleconsultation is great, but it's never helped us reduce claims cost and things like that. And the reason for that is that when people are digitally interacting with you, they don't feel the same comfort that they would feel going to a doctor. So people who have gone for teleconsultation maybe in the evening might end up going to a doctor because they feel they're not recovering, but you can't recover in 2-3 hours. So it's a lot of change that needs to happen. So in my mind, we have to think about a phygital world, which is a combination of digital and physical. And the question is, how can we digitize things which can solve the problem? And where we need to be physical, we seamlessly migrate from that digital experience to a physical experience. So if, for example, we've done symptom checkers and things like that, and the output of the symptom checker tells us to go to a doctor, I don't have to go to a doctor and explain everything again. It should be just seamlessly flowing through that journey. So that's what we're used to in our day-to-day lives. And I think for us, at least in the healthcare space, that phygital experience is going to be very critical, and smooth transition to customers to physical and digital and vice versa.
I think just to draw a line under one of the things you said, it needs to solve the problem. I think oftentimes digital or any new technology, oftentimes we can go looking for a problem for it to solve, as opposed to have a problem and then use it to actually solve that problem, and that's what's going to lead you in the right direction.
Absolutely, yes.
Jim, what about from you?
I think they've talked about the sexy stuff, so I'm going to talk about the boring stuff. I think digitalization can take out some of the costs. So instead of having people looking up medical records, a computer can do that faster. It can look at the claims experience and tell you when you're trying to manage the business a bit more about what you're seeing, so you can make better decisions which can reduce the cost. Why is that important? As Samesh said, with medical inflation running at 8, 9, 10, probably 11%, we need to drive down those costs so that we can still offer our customers good value. And as we kind of head into a cost of living crisis, that's what people want to see. I think, so that's an advantage. Another advantage is that, and again, it's largely been covered, but through kind of digital services, you can sometimes help people make better decisions about the care that they're going to that they're seeking. So there's no point in sending somebody that's showing symptoms of back pain to a GP if the kind of AI diagnostics tool says just go straight to a physio, and that's cheaper for us, it's cheaper for them. Again, it drives down the cost. I think the dangers are that we leave some customers behind. So we definitely saw during the pandemic, so we wrote to all of our customers, well, digitally, and said, you can't send us mail at the moment because there's nobody in the office. And there were 10, 20% of our customers that were deeply uncomfortable with that, and for good reasons. And I think there is that segment of customers still that don't want to go on an app. They don't want to upload receipts via a smartphone. They don't want to do that. And we still have to cater for them. Number one, because the FCA and the PRA say we have to. But also, they're good customers, and we need to care about them too.
So on that, why don't I there's a couple questions coming in from the audience. So first one that I have is, how can insurers get UK customers interested in buying health or life insurance? There's all these trends, all these things going on, all these potential positive and negative side effects. As an insurer, how do you actually think about reaching and starting to change perception and behavior within a UK consumer base?
I think rewards certainly come into that. So I think if you can bring an element of reward to create engagement and nudge people, and that can be prior to the takeout of the product, it can be within as well. I think if you can bring that sort of engagement in, and it's a continual problem within insurance, right? I mean, life insurance is probably the worst example of engagement, because you usually take the product out and you hear nothing until they want more money off you, or you've got to go through a renewal cycle. So creating the engagement and doing it in a meaningful way at the right point is key. When that is and how that happens, $1 million question.
So there's another question that I'm actually very interested in hearing your answers on. On the topic of wearables, which we were discussing in the trends segment, do you ever envision a time when they are required for health or life insurance coverage?
I don't envisage a time when, not in the medium term, when they'll be required. I think people will, so there was a big conversation about telematics earlier on in cars, and obviously nudging people to drive more safely helps everybody. And I think where wearables are going, so if we can understand your heart rate, your blood oxygen level, probably glucose levels, movement, so your physical activity, sleep, we can understand a lot about you, and we can help you understand about you, which is the most important thing. And that's going to have an impact on premiums and on customer selection and all sorts of stuff. Not because we're going to say, right, we're going to put everybody in a big database and rate everybody, but simply because the people that will uptake those kind of policies, where you have to have some kind of behavioural change, will get a better deal, and they will self-select into those policies. So, and it kind of touches on the engagement with different market segments and how do we get people interested. I think there was a time when health and life kind of fitted in certain stages in people's kind of, right, okay, you know, you get health insurance probably when you get to a certain stage of management with a company. You get life insurance when your mortgage starts to get scary and you've got children and you think, oh my God, what's going to happen to them if I die? Now I think there's just a spectrum. And I think we're all everybody's starting to think much earlier about their health. You know, the gamification of these kind of things, the rewards, all of that kind of stuff is building so that people are much more aware of their kind of health status and health experience from younger to much older, and they think about managing it more because we're told to, and it's like subliminal messaging all the time about what we eat, how we look, and that kind of stuff. So I think people are naturally starting to engage with that. It's kind of our challenge to help people understand that just as you kind of make a deal with Google Maps, that they're going to know a hell of a lot about you, but you're never going to get lost again. And most people are happy to give up that privacy for the help of never being lost or being able to find sushi whenever they want it. And we're going to have to kind of persuade people that allowing us to help them know about themselves in probably an anonymized, safe way, but that's going to be good for them and it's going to be good for us. And I think we're only just getting started with wearables, and they won't be wearable for long. They'll be under the skin.
If I just go back to the previous question, if that's okay for you,
Sure.
just build on, Will. I think, you know, though I have a role which is Europe and LATAM, I live in the UK, so I'm quite passionate about increasing insurance penetration here because it will be good for everyone. So I think if I just go back to that question, which I think is a very important one, because NHS is great and we all kind of love the services we get, but also there is a lot of pressure on the system. So the question is, if we improve insurance penetration here, it will help a lot in general. The reason why, and in spite of that, we have only 10 to 15% penetration in insurance, so there is certainly a problem we need to solve. And I think there are two things that needs to be looked at in that. The number one is the nature of the products. Right? Today we have a completely comprehensive product which is quite expensive, but we'll have to think about products which are simple, affordable, which can cater to the 90% in addition to the 10% of the market. So I think there's a lot of product innovation that can be done in the UK to be able to increase that penetration. And to be honest, I think compared to, because I do see all the different markets, UK is one of the most open markets in terms of adoption of digital, in terms of being very reasonable of what is possible with data. So I think we have a long way to go in terms of creating products which are more, I would say, accepted across the population. The second thing is about services. So I think the magic will happen when you combine insurance with the right services, because a young person is not thinking 20 years from now and saying, oh, if I get a heart attack, what will I do? That's not how we think as humans. We think about now and maybe 2, 3, 4, 5 years. The question is, what do you have to offer to different segments of people at that point of time? So if you're covering maternity cover for somebody who is 15, 20 years old versus somebody who's 70, 80 years old, they don't need that cover. So the question is, how do we cater to people in that segment for them to feel excited about saying, I have insurance and I know it takes care of me. To your earlier point, how does it really solve a need rather than a standard product that's given to everyone to use? So I think those are the two things in my mind which can help.
I think the other thing I would throw in, and I would because this is the world that I know, but even just from personal experience trying to buy life insurance in the UK, which by the way is incredibly complicated as an American taxpayer, but separate conversation, the role of brand. Yeah. I think of kind of the major insurance companies, and no offense, it's tough for me as a consumer to understand what they stand for that's different. The product, the price, sure, but the brand, not as much. And then you look at the challengers coming into the space, the dead happies of the world, and they just stand out in a completely different way. So I would also, add my 2 cents of how can insurers get UK consumers interested in buying health and life insurance. Part of it is brand, trying to differentiate. So to Jim's point about embeddable wearables, let's move on to the next question. How are technologies, new technologies, I think we can talk about new technologies in general, but also specifically RPA, AI, advanced analytics, how are they addressing business challenges? Who wants to take that one?
Yeah, I think there's a combination of different services out there. So you've got services that can plug in now and allow you to take information very quickly into a quote and an application form. So simple robotics. You've then got underwriting tools which allow you to underwrite customers a lot quicker and make the experience a lot more seamless for customers as well. And then I think the whole kind of data piece that's all wedded within that which is probably the bigger question around how do you get all of that interconnectivity and working together to make sure that that customer experience can be really brought to life and it can be really seamless for a customer. But it also, to Jim's point, it then brings the operational efficiencies and benefits with it as well. So I think there are already tools out there that can be used and different technologies. I think one of the things the industry's only really starting to get its head around and try to understand is how do you get them all connected together? I work with customers at the moment where you are taking different data points from different tools and technologies, and they can be sat on different technologies, and therefore it's different ways of getting the integrations to work. So I'd hope that in the next few years all of that starts to collect together and you see the emergence of the tools that are doing really well and they've got the real slickness and the proper data sat behind them. So I think it's out there. I think there's plenty of technology to be looked at. We will all be well aware of the well-known companies, but there are certainly new InsurTech companies that are coming out and really disrupting the market.
So I'm not a tech guy, but love to have an opinion on something I don't know very well. But I'll try and bring a business angle to it. So if you think about, so there is no doubt that digital and tech have a big role to play. If we don't accept that now, I think we'll never will. But it's going to be a big thing. But 3 things in my mind which will really help accelerate that journey. The number one is the whole health systems, the data exchange and everything else that we do is not simple. So if you go and tell a hospital, I want data from you, they'll say, this is not my job. I can treat patients. That's not what I will do. So we have to have a way to collect data and information, of course, in a compliant way, which is simple to take in and make sense out of it. The second thing is, I was saying earlier, how do you connect these different things together? Services, insurance, claims, everything else, this needs to be connected. But unless you have standardized data, you can't do much about it. And the last point is, once you have standardized data, once the services are all interconnected with insurance, then the last step is, how do you personalize the journey? How do you make that seamless? So I think there's a big role of digital ecosystems to play. And that is where AI can play a big role, because then we know what kind of movies we like to watch, and Amazon Prime or Netflix tells us that. But based on all the data we have, if we can't predict that we are becoming diabetic or we might have a heart condition, well, we can watch Netflix for a long time, but we need to live for that. So I think it's very important that we start to bring things in perspective and use AI and data for, of course, claims processing and others, but also to predict what's going to happen to us to live a better life.
Jim, do you have anything you want to add to that question? Because otherwise Samesh has teed up the next one very well.
No, Samesh covered that perfectly, and I would just echo what he said.
So, jumping off of what you said, you mentioned personalization. It's almost as if you knew what the next question was. How should personalization versus flexibility versus reinventing skill sets be prioritized in the context of rethinking health and life insurance? Maybe we'll just let you keep rolling.
Well, so I'll be short. So I think because I've said a lot already in the previous point, but in my view, the way we have to think about personalization is, as you were saying in the beginning, it needs to solve a specific problem.
Yeah.
Right? It can't be that there's a product and I want you to buy. I think those times are gone, right? There needs to be a product that is meeting a need, and that's why it needs to be done. So if we put that in the same perspective, I would say that the whole personalization bit is, we cannot be operating in our own silos. As an insurance company, and a large one in the UK and many other countries, we have to think about partnerships, because consumers' lives revolve around everything which is around them, hospitals, insurance companies, GPs, and everything else. So I think there is the whole bit around partnerships, speaking to different stakeholders, and I don't think any of us can solve this problem on our own. So I think there's a big partnership angle that we need to look at. The second thing is about helping customers take decisions that they cannot. So for example, you know, walk 10,000 steps. Yeah, of course, I know I need to walk 10,000 steps, but what do I do? So for example, if I'm sitting in a meeting for the whole day and I've only walked 2,000 steps and my house is 8,000 steps away, can you tell me that I should walk rather than taking the underground home? So it needs to be a bit more, I know it's not that cool, but I'm saying it needs to be a bit more practical for me to do something about it. And in my mind, that is real personalization. The personalization is not about wearing some fancy stuff in your hand and Google Glasses. It's great. I'm not against that, but I'm saying that's a good addition to life. What is personalization is what helps you live a better life on a day-to-day basis. So I think that's where I would bring in a lot of things which are very connected to our day-to-day lives, but that can only happen when you are connected to the consumer's life in general and not only in that small silo that we live in.
Wants to jump in?
I think you have to allow people to personalise in the way they want to personalise. Samesh might want to be told to walk home. I do not want to be told by my insurer what to do. What I want to be able to do is to be able to access the care that I want at the time I want, understand who I'm going to see, understand whether they've got a good record, what the whether there's parking at the hospital, all of these kind of things, and I want that journey to be personalised to me. So I think we're following a trend that is, we want everything served up to us in exactly the way we want it. And I just think we have to buy a ticket and get on that bus. That unfortunately does actually mean quite a lot of expense for the insurer, because we need to be able to accept a WhatsApp, we need to be able to accept a Facebook message, we need to be able to accept a text, an email, a letter, and those don't come for free. It also means that we have to be able to kind of maintain a consultant database, understand where the consultant works many of them work at different hospitals, understand what day they're at different hospitals, and again, that comes at cost to be able to personalise that journey. We're not there yet. I don't think any health insurer in the UK is there yet. But the future I would like to envisage that is, if you do want to go and see somebody, we can help you choose whether you want to see somebody close to where you live, on your journey to work, close to your work, at a time that suits you, whether that's a lunch break, and kind of make the journey as friction-free for you and as pleasurable for you. Not pleasurable, but we want to take the stress out of it for you. So I think that's one way of doing it, that I think we have to accept that we're going to be forced down that road, because that's what our customers expect. Because if everything else works like that, if ordering a pizza is like that, if booking a holiday is like that, booking a hotel, we just have to follow that journey, which is very difficult because of the way that the health architecture of the UK, as you point out, works. And it's not, there's the big Leviathan NHS, and then lots of fragmentation around that, whether it's consultants that work in the NHS or physios or dentists. It is a bit of a nightmare, but it is starting to be tied up, slowly but surely.
And I don't disagree with anything Jim said. I think personalisation needs to be driven by the customer and what they want. I don't think we're there by a long way of being able to personalise a lot of things. I think the only thing that I'd probably touch on as an addition is just around the additional services that are now available as well. So being able to offer up at the right time, and also making sure it's working. I think there's a long way to go before things are actually working anyway, before you get to personalisation. So if you're giving customers the tools to be able to help because they're suffering from depression, or they need to get to a physio because they're starting to get a backache, to try and prevent them coming and using the actual product itself. I think there's more to be done to be able to engage in that space before you even get to the product and start thinking about true personalisation.
That is a good point that I would just jump on the back of, is corporates, because about half of our customers don't buy as an individual policy or a family policy. They're given from their employer. And that and what employers tend to want is very, very different from an individual customer. And that's when you get we want people to stand up every hour, so your app needs to vibrate. We want all of these we want a mental health service, we want GP Online, we want you to pick up the phone within 45 seconds so we have to be able to cater to the individual customer, but they're actually, I think they're just about in the minority in our business, and that the corporate customers are demanding, but in a different way, and they want corporate personalisation rather than individual personalisation, which is just another challenge, really.
But it's the same challenge and same opportunity, because if I can draw a red thread through what you all have said as an answer to this question, there's a huge opportunity in personalization, but it needs to be solving a problem in a way that creates ideally differentiated value for your customer, which comes from understanding what their needs are, whether that's an individual or a company. So it all kind of starts there and then works backwards. How can you use digital? How can you use the technology, the talents, the opportunities available to you to solve those problems and add more value through personalization? And also, Jim doesn't like to walk home. That's the other takeaway. All right.
Well, I work 70 miles from where I live, so it'd be a long walk.
So let's move on. So talking about a more disengaged, younger customer, certainly relevant to this conversation around expectations. How can insurers tap into this segment?
I'll jump in. I mean, so I took my godson out for dinner when I came down to London the other day, and he plays football a lot in London, here in London. And I said to him, right, how could I get you as a 25-year-old to buy insurance? And he just went, I won't. But as the conversation kind of threaded out, he gets concerned about, if I break my shin playing football, if this happens, that happens. And so there are definite threads, and I think we need to be in listening mode to understand what the requirements of that 25 to 30-year-old population is, because they're definitely underinsured. We know that mental health is a big thing for all age groups, but especially that age group. We know accessing primary care is patchy and getting more difficult, and I think that kind of group do have needs that we can cover. Now, obviously, they are digital first. They're the proper digital natives, so we have to worry less about printing letters off and sending to them and that kind of stuff. But cost is they're really cost conscious, and they're very, very conscious about things actually being tailored to them, as we've just discussed. So they're not going to do what we say. They want us to do what they want. So they want everything on their terms. They don't want to spend much on it, and they want it to be easy and intuitive and digital first. There are some kind of insurtechs that are kind of foraying into that market. It's not our market, but we're obviously very interested. So I think it's that differentiator. So it's how do you seemingly create value day to day in their lives? Because although not as remote as life insurance, you don't really want to engage with your health insurer. It's not a fun experience. It means something's gone wrong. So, but should we be relevant in their lives every day? I'm not sure about what I think about that, but I think there is an opportunity to be so. So the chap from Vitality was here earlier. They've done a really good job. It's difficult for me to say that in terms of making themselves relevant with the free watches and the cinema tickets and all that kind of stuff. They definitely appeal to a younger audience. I think that audience wants to feel relevant. It wants to feel as though there's lots of touch points, so it needs to be exciting. So I think the things around the gamification, so it's knowing about, how many steps have I done, how much exercise have I done, is my blood pressure where it should be, is my heart rate where it should be, all of that kind of stuff. They kind of seem to like that as a touch point. They like the mental health stuff, they like the GP online, physio, all of this kind of stuff. But we need to make it more relevant to them day to day to extract that value, and it needs to be really cost effective, because as I said, we understand that prices are going up for everything, and you're asking people to sacrifice one thing to pay 20 quid a month for health insurance, which can seem a lot when you're 25.
Maybe just to build on, Jim, I completely agree with the points. I think there are three simple things that we have to think about the younger generation. The first one is what they love, what they want, and what they don't want. And I'll just talk a little bit about that. So I think what they would love is, today's generation is very health conscious. They love to go to the gym. They like to have good food, healthy food. I think there is that piece which is about the wearables and rewards and everything else that will work for them. The second part is something that they will need, right? So for example, if they're not feeling well, or if they've pulled a muscle, they need things like teleconsultation, which is simple, easy, cost effective, and mostly convenient. Rather than going to a GP and waiting for a couple of hours, they would like to do that. And the third part, which I think Jim mentioned as well, is about mental health. If you talk about mental health, I don't think any, and having 2 boys at home, they will never talk about that saying, oh, this is perfectly fine, it's easy. But actually, we know that in the survey, Mind Health survey that we did across the globe, there are 3 times the general, I would say the adults from 21 to 35 were 3 times more vulnerable than people about that, because they've never seen something like this before. There is pressure of college or work or whatever it is, and they're not used to it. So I think we have to be very careful about that, because as an insurer, I can tell you that none of us have experienced what a mental health issue could cause in terms of claims costs in the next 20 years. There is no model that exists today. So we are working on it. We know that it's very difficult to justify the ROI to say, why am I investing in this with this generation? But we know that mental health is never so obvious like a knee pain or a back pain. It starts with different symptoms and then goes really quite a bit. But by the time you realize it's become a problem, it's already too late. So the question is, how do we solve this, which is something that we've never experienced before?
And I think just to build upon what Jim was talking about, it's definitely to do with segmenting the market in the right way. I mean, if using another example, the e-gamer market's in the hundreds of millions. The average age of the top professional gamers are 16 to 24 years old. They're earning income. They've probably never thought about income protection, and they're sat there all day in chairs and need to make sure they're doing exercise so they're not going to suffer from the ailments that Somesh has just talked about. So I do think you've got to really drill down into that segment if you're going to make something relevant, because it's a tough one to crack in the health and the life space.
So we got another question from the audience, and I'm conscious we only got a few minutes left, but I think this is a good one. So personalization is great, but doesn't it create an underclass of people that are seen as uninsurable?
I think that's a huge challenge, and it's one we're thinking about. I think there is that underinsured caucus that exists already, if you see what I mean. So if you look at the corporate market, you've got the top 10% having really good health insurance, you've got the next 20% having pretty good health insurance, and then often 70% having nothing. And one of the challenges is, how do we deliver something low cost into that space that's easily accessible, but that delivers actual value and benefit to people? And I think there are ways to do that. I don't think the reality is there will always be people where the risk is just not economic to insure them, and that's why the NHS is there, right? To kind of, so that we all pay our taxes and we all kind of put into that bucket, and it's not going to go anywhere. But I think there is definitely an underinsured group of people. They're probably the majority that I think we can do a lot for in terms of clever product design and offering what they need at the life stage that they are.
So I think the concept of insurance is that you need to mix different kind of risks together. Otherwise, it's not insurance, right? So I don't want to tell you that. You all know that very well. So if you start to mix the same kind of pool together, then it's more like a service than insurance. So I think what we have to really think about, and as Jim was mentioning, is create smart products, right? And for example, and Vitality has done a good job in South Africa creating diabetes products and things like that. It takes a lot of hard work, both internally and externally, to do that. But I think however well you underwrite today I have no problems, I'm fine. 20 years down the line, I will have problems, and how do you deal with it? So as an insurance company, we have to build those capabilities anyway, because that problem is not going to get solved on its own. So I think we have to think a little bit more holistically. I don't think we are there as yet as an insurance industry. There have been some good examples, but we have to think about this in the future of how we create those specialized products and able to manage that over a longer period of time. Because if you look at it from a 20, 30-year point of view, you have to build that capability anyway.
I think just the other thing quickly on that as well is, especially if I think about the MGA market within the UK, they're actually quite good at coming up with those types of simpler products for impaired lives. And I think it's maybe that it's the working of the insurers with the MGAs to make sure that sort of market can be served. So I think there are products out there that can help with that. Personalisation might actually, if you flip it on its head, help with those customers as well, because you can then get a really specialised product for them. So I think there can be good that comes out of personalisation too.
So I'm thinking that we can close it. I'd love to hear from each of you. We've covered a lot of ground. There's a lot that we didn't even get a chance to talk about, but if there's one thing that you want to leave people here with as a takeaway, something to think about, something to do differently from everything that you've said that we've discussed, what would it be? And I'll give you a second to collect your thoughts because that was not on the sheet. And I'll share mine, which is what I said before. I think the thing that I'm going to walk out of here, I mean, one, I learned a lot, so thank you. And two, I think this concept of how do you create more value? It's really a lot of what we've been saying in different ways to answer these different questions, but it seems like a lot of roads lead back to that. If you understand what the customer needs are to the best of your ability, financially, commercially, from a regulatory perspective, if you can solve that, then there's more opportunity for you. So I think that's my big takeaway, but why don't we go back this way? Will, do you want to share yours?
Yeah, I think for me it's, and from what I see in the industry and from the tech side is, we just need to start getting it right from the interlinking of the services that are wrapped around the product, as well as then delivering from a claims side as well. So I'd like to think we're moving in that direction. We're definitely not there, but I can see it starting to come together. So seeing more of that in the future, and I think it's backed up by some of the comments that Somesh and Jim have made today as well.
I think overall in 5 years, we're kind of halfway through the revolution. I think the journeys will be smoother. I think access to what you need when you need it will be better. And I think we will have come up with a partnership between us and the customer about how that data benefits us both.
And I think for me, it's the next 5 years will be very different than the last 5 years. Hope so. I'm sure we will. But I think the question here is, one, we have, with all that's happened in the last 3-4 years, digitization is going to be very important. We don't have to go back to the old world, but at the same time, we need to make sure we can build on what we have already. So that's number one, is digital, physical together. And the second thing is, at least in the healthcare industry, we are in a very special position where we don't have to cannibalize and fight with each other. We have to build partnerships. We have to build those ecosystems together. And I think that's going to be very key for us to keep in mind, that we can always partner in spite of being competitors. And there are some markets which I work with. We have seen great examples. Germany, all the private insurers have a similar claims management solution. It's great because it reduces the cost. Everybody shares it. They have huge volumes. So I think there's a lot to learn from other countries as well. And I think there is a big scope for partnerships for us.
Great. With that, we will leave you. Will, Jim, Somesh, thank you so much.
Thank you.
Gentlemen, thank you very much indeed for a very insightful panel discussion and for taking us through the necessities of having to rethink health and life insurance and how to rethink how we create value in the industry. You're obviously all in need for your next caffeine hit. Please go ahead, do have that. We'll be back in 20 minutes. We'll all be back in here. We'll be talking about business-driven innovations. So well done for being here this far. It's well worth staying. It only gets better as we go along. So look forward to seeing you back in here in 20 minutes. Thank you. Ladies and gentlemen, welcome back. Please withdraw yourself from your coffees, get your quick hit, come back in for a high energy final session. It'll give you more energy than your coffee. We've got a fantastic way to round off what has been a great day, in my opinion, and in the opinion of all people who've given me feedback so far. In a moment, it's going to be my pleasure to introduce David Clamp. David is founder and managing director of Merlin Digital Consulting. He's a senior IT professional with over 26 years of experience delivering programs in the banking, investment and insurance industries. David spent 6 years as CIO for Hiscox Insurance, where he led the digital transformation of the UK retail business from strategy through to delivery. So a very experienced person to help us bring everything together at the end of the day. David is going to give us a presentation in a moment, after which he will lead a panel discussion on the rise of embedded insurance in a digital-first world. But first of all, David, I'd like to welcome you to the stage to give us a presentation on business-driven innovation, learning from the leaders. Welcome, David.
Good afternoon, welcome to you all. My name's David Clamp. I'm here as to really challenge your thinking. I invite you to have a slightly different mindset through innovation and making change in insurance. Learning from the leaders. I've got a lot to get through. I make no apologies. There's lots of slides. Take some notes. Hold on to your seats. So I've also, as well as being an independent consultant myself, I've also created a network of other independent consultants. I call it the Camelot Network because we're all equal sitting around King Arthur's round table. And there are quite a few here today. That's what I do and part of what's enriched this conversation, this presentation today. So I love people who think differently. So I sent an email to someone at a big insurance company. I got this reply, this out of office message. Have a quick read. Have you ever read something like this before? Hello, you awesome and good looking person. Ooh, that's nice, I like that. I'm on parental leave, I have no access to my emails, and I will delete them, any that you send me. Ooh, cool. Hugs from Munich, imagine all the people living life in peace. And then at the end, we desperately need some crazy people, look at where the normal has got us, from Mother Teresa. Brilliant, love it. Have you ever received an out of office message like that? Brilliant, love the different thinking. So what we're going to do today, we're going to talk about the context for change, we're going to talk about the compelling case for transformational innovation, transformational change, we're going to have practical examples of where it's happening, and then we are going to be looking at the key lessons for innovation. So just to kick off, what's the context for change? Let's have a look. In the morning, what do you look at first thing in the morning and at last thing at night? And what are most of you playing with at the moment? Your smartphone. So here and now, the technologies that are affecting us, smartphone, IoT devices, not just in cars, but in commercial properties, health, lots of other technologies that are affecting us now. Early adopters, things like blockchain, metaverses, how do we ensure things in the metaverse, new materials, computer interface, what's that? Voice, what would you call it normally? Alexa or Google or Siri, that's coming then, and then emerging on the horizon, home robots, Ensure Me, brain to BC, communication, you'll forget the keyboard, you'll just communicate, quantum computing, flying cars if they ever take off. So all sorts of technologies that are affecting us. These are drivers for change. There are other drivers of change like new risk areas, like the metaverse, cyber insurance, drone insurance, fierce competition, data's everywhere, available capital. Post-COVID hybrid world is a force for change. So what are the resisting forces? Well, success is a big one. If an insurance organization is successful, why change? Why innovate? It's my personal data, but importantly at the bottom, legacy thinking. And it's the legacy thinking I want to challenge today. I love when someone nods. I love it. Right, the compelling case for transformational innovation. People often start with innovation. They go, right, this is what we're going to do. Then they work out how they're going to do it. And then they look at why are we doing it. And so here, the main message, start with a why. And that could be around cost efficiencies, enabling growth, better customer experience. It could be around new business models, automation and enriching, but starting with the why. InsurTechs, we can learn a lot from them. What do they do? Well, they're redefining what insurance means, from enforced purchase to added value service. They're establishing trust with the end consumer. They're making it frictionless to do business. Just to press a button and that's it, it's done, we bought the insurance. They offer a data-rich experience. None of this form-filling business. Very, very data-rich. They can make it mobile, any place, anytime, anywhere, and they make it very, very clever. And it's based on what the customer really wants to do. We can learn a lot from InsurTechs. So here's some practical examples. First off, IoT in commercial property. We all know about IoT in cars, but where do we think that IT can also help with commercial properties? Well, if you install devices around the building or looking at the building externally, then you can help better manage the risk. You could do added value services. You could make a tranquility call to your customer. So the insurer phones the owner of the property and says, we see that your security cameras are down at the moment. They're not working. It's coming up for a bank holiday weekend, and we know that a lot of buildings are broken into over a long weekend. So would you like us to send around an engineer to fix your security cameras? So added value services about, and this is about helping them stop the bad things from happening in the first place. So IoT in commercial property, big opportunity there. Usage-based insurance, where you pay per mile, pay per usage. This is where innovation is taking place, and lots of companies are starting to do it. I love Flock. Who's come across Flock before? Yeah, I love that. They give drone insurance, so you are literally standing in a field, and rather than buying annual insurance, you buy the insurance for the next couple of hours. It does a geospatial lookup on where you are in the field and says, are there any overhead electric wires? Is there any water nearby? Are you near Heathrow Airport? And it gives you a rating, and you say, okay, next 2 hours, 20 quid, done. The next weekend you go out in a different field, and it does the same geospatial lookup, but it gives you a price, but it also gives you a price based on how well you flew your drone the previous weekend. Pretty smart, very, very clever. And in fact, yeah, here it is, pay-as-you-go insurance for drones. Very, very good. But if you can imagine that is monitoring performance of a drone, then actually you can say that's monitoring the performance of anything that moves. So what moves? Well, cars move. So Flock has now gone into vehicle usage-based fleet insurance using the same concept. It's not a drone, it's a car. Love this innovation, bring it on. Parametric insurance, where obviously with life insurance, that's a parameters that set, someone passes away, a predetermined amount of money gets paid as the claim. But there are lots of other people doing this. Parametric insurance, so flood flash. Who's heard of flood flash? A few people there, fantastic. These guys put a device on the side of your wall, on your house or your commercial property. And if that device gets flooded up to a particular level, then you get a predetermined amount of money in your bank account as the claim very, very quickly. No, you can't just put a bucket of water over it. It has to be flooded. So the cost of claims, very, very low. Speed of resolution, very, very high. Great customer experience and some great tech behind it. So that's parametric. What other? Peer-to-peer insurance. Well, that's really how insurance started in the first place with Lloyd's of London. But here we go. Friend Insurance, they set up, they provide a platform so that houses in a village can all get together and insure themselves together, peer-to-peer. If there's anything large that happens, like a house burning down, then they have reinsurance for it. But for the majority of things, they insure themselves. Are you likely to make a fraudulent claim if you know your neighbours are going to be having a look at it? Probably not. So I love peer-to-peer and social enterprise. Some insurance companies are now saying, well, actually, if you tell us which charity you support, we'll give part of our percentage of our profits to that charity at the end of the year. Great. A slight cynic in me says that means that if you make a claim, you're taking away food from children in Africa. But maybe that's me being very, very cynical. I don't know. But there is more social enterprise happening. Are you playing in this space? Embedded insurance, we're going to be talking about in a minute, so I won't talk about that now. So what are the key lessons to be learnt from the leaders who are doing this sorts of innovation? So let's start with the challenges that they are facing. Culture eats strategy for breakfast, this is Peter Drucker. There are often unclear business objectives. I say, well, great innovation program. What's your objective? And they say, well, we've got to have 4 pilots by the end of the year. And I go, cool, we can have 4 pilots this afternoon if you want. Great, job done, tick. Nothing about business value, business benefit, end result, customer perspective, or anything. Lack of perceived customer value in doing this. Why are you innovating? What's the value to me? Oh yeah, there are some shiny things out there, aren't there? Oh, let's innovate with those shiny things. And then you realise actually it's a shiny thing looking for a business problem to solve rather than a business problem that needs some tech or some solutions. Incrementalism is the enemy of innovation. So let's just do a little bit, and the little bit, and the little bit. That probably won't get you very far. I don't think Elon Musk did that with Tesla. Let's just do a little bit at all. Appetite. Yeah, what's your appetite for risk doing innovation? Oh, not a lot. So what's your appetite for risk? Actions beat words. I've often been in innovation programs where they spend a lot of time planning, getting terms of reference, working out what they're doing, getting things, job roles, job descriptions, etc. Well, words are cheap. It's the actions that are really, really important. And legacy, legacy, legacy. And so some organisations have their innovation team separate, or they buy an InsurTech and say, we'll keep you separate. And then there's this gradual sucking sound of the centre as they've got to fill out another form, or they can't recruit someone, or they're affected by the headcount cap, etc., etc. So most people love disruption, but hate change. Let's just do a little quick exercise. For those people who have got a watch on, would you mind just popping it on the other wrist, please? Just very, very quickly. Yes, you as well. Yes, everybody, please. Yes. That's it. Just very quickly, it's change. We love change. We can do change. We love disruption. Okay. Has everybody done that? Very good. How does that feel? You can't even do the change. How does that feel? Sorry? Weird. Look, it's just moving it from here to here. What's the problem? Change. Really, really. Some people love disruption, but they hate change. You've just gone through change and you felt weird. You can put it back on the other wrist now. It's okay. Right. How do you react emotionally? How do you respond to staff who make a suggestion but based on what they've seen at another company? Defensive. Positive, great. Fantastic. Depends who they are. Yeah. Most people's mindset is, oh, not invented here. Oh, no, no, no. Oh, we tried that 10 years ago. It didn't work. Oh, no, no. So how do you respond when someone says, I've got this idea from somewhere else? Next one. When was the last time your organisation embraced a big idea that was not your idea? Tricky, tricky. So think about how you react emotionally to that question. When was the last time you were not sure about an initiative, but you gave it your approval anyway? You took a risk, you went and did it. There's a gentleman smiling. Why are you smiling? Is it wind? Yesterday. Very, very good. When was the last time you were not sure about an initiative, but gave it the go-ahead anyway? That's helping innovation. And when have you asked yourself, what are the questions that the future is asking of you today? Not what the present is asking of you today, but what the future is asking of you today. Interesting exercise to go through. Sorry? Is there an app for it? Well, I'm sure someone could design a nice shiny app for it, but it's more about having the concept. In 5 years' time, what would we wished we had done now in order to prepare for it? So how do you react emotionally to these questions? And then lastly, lessons from the leaders. Innovation. I see lots and lots of companies do innovation, which is about the process, the framework, the approvals process, how we got to do this stuff. Well, actually, successful innovation is about not processes and procedures, is about entrepreneurial freedom. Do you have entrepreneurial freedom in your organization? I'm guessing that's a no there. You assume it anyway. Excellent. Forgiveness, seek forgiveness, not permission. It's about entrepreneurial freedom. So it's a people sport. Innovation is a people sport. And one of the best ways to kill an idea, okay, say you've got a graduate or an intern and say, I've got this great idea. The one way to kill an idea is go, how are you going to do that? Oh, yeah. No, I hadn't thought about that. Rather than saying, how are you going to do something, the great way for innovation is to go, wow, brilliant, tell me more. What's the vision? What's the... Don't go, oh, we can't implement that here. We won't be able to do it here. So, wow, not how. So, biggest enemies, standardization and centralization. Very, very, very... This doesn't engender and thrive with innovation. So I walk into an innovation workshop and everyone is in the same suit and dress code. I'm going, okay, this is going to be tough. There's no free thinkers, there's no radicals, there's nobody there with a pink shirt or who at Instech London yesterday, even there was a guy who came up to the stage, flowery shirt, blue, brilliant, loved it. Walk into an innovation team and they're all wearing the same challenging. Innovation thrives in chaos. Do you have chaos in your organization? Oh no, oh no, 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 not at all. An innovation we agree on, we all agree on, I don't think is innovation. Not real innovation. Real innovation creates resistance. So if you're coming up with ideas that have no resistance, have a little think again. You've got to do something radical, have resistance. If you're not getting resistance, you need to go deeper. Innovation needs money, so give it a budget. Give it some resources. Lack of innovation is seldom due to lack of ideas. You have loads and loads of ideas. The post-its go up and the flip charts get filled. Innovation, the real challenge is around execution. Actions beat words. Words are easy, flip charts are easy, post-its are easy. It's about execution. And seldom is it one big idea. Often it's lots of little ideas that build towards a new direction. Making errors is the breath of innovation. Who likes making errors in your insurance company? Oh, we got two. Very good. Well done. You're not insurers. Very good. Oh no, no. Making errors. We don't make errors in our innovation in our insurance company. So making errors actually means that you're pressing the boundaries. You're trialing stuff out, and you're learning, because your success rate is not on whether you get more GWP. It's whether you learn. An innovation happens when the boss funds ideas they don't believe in. When was the last time your boss funded something they didn't believe in? Interesting. So, I'm part of the Camelot Network. There's 3 people here. We run a Camelot Innovation think tank. Every month we have an hour's innovation session. You're very welcome to join us and talk about innovation. Harvey Wade leads that. Innovation in commercial property, very good partner of mine, a friend of mine, Helene Stanway, is the Sense Consortium. I'm co-foundering, and also Resilient Changing. Mark Simpson's an excellent Camelot member. He's an innovation expert. I offer those for you, and we've covered the context for change, the compelling case for change. You've given you some practical examples, and we've got some key lessons that you've learned. Thank you so much for listening. That was 20 minutes innovation. Embedded insurance. I would like to welcome up the panelists. I haven't. You're here. Fantastic. Very good. Pop there. Very good. Very good indeed. Right. So the next session is all looking at the rise of embedded insurance in a digital-first world. Insurers are seeking out new ways to get their existing products to market through different channels. They're also looking at different products and services with new channels to market. They're trying to meet the needs of the customer where the customer is at the defining points in their journey, be it point of sale or when they exceed a particular threshold. Insurers are increasingly talking about embedded insurance. So it gives me great pleasure to unpack the topic of embedded insurance with our great panel. Valentina, would you like to introduce yourself, please?
Absolutely. So my name is Valentina Smirnova, and I'm with AXA Partners. It feels like today is AXA Day. I've seen quite a few colleagues of mine from different AXA companies. I work for Finance World of Insurance, so it's head of finance operations. And I know a little bit about embedded insurance. Happy to share my knowledge and opinions.
Valentina, thank you very much. Welcome to the panel.
Cheers, thanks.
George, what's your name?
Well, you said it, so I won't cover that ground again. Pleasure to be here. I'm George. I lead incubation underwriting at Beazley. It's not a team name you'll hear very often. I think we're actually the only one at the moment to use that naming protocol. Essentially, our job is to try and do new stuff. So we try and launch new products that are new to the market. So our job is not trying to get into things that others do that we don't do yet. It's about trying to find the protection gap and exploit that protection gap and choose where we want to play. And our main kind of enemy is time. So basically it's not about separating bad from good ideas. It's really hard separating good from great ideas. That's what kind of keeps us up at night. Our work falls into 2 main columns of activity. The first one is InsurTech. So we provide strategic advice on product and market fit. We provide sponsorship and through the cover holder process at Lloyd's. And ultimately, we bring the kind of fusty, boring insurance bit to the table and try and make the magic happen with partners that have passion for their chosen market. So that's InsurTech. The other bit is products that say Beazley on the tin and that we trade in a more traditional sense as underwriters, typically with brokers, typically intermediated products. Larger ticket size and traded with commercial entities. So that's us.
Fantastic, George. Thank you very much. So opening, nice icebreaker question. What exactly is embedded insurance and why is this becoming more and more important? Valentina.
Valentina. But that's okay, I'll accept that. So I think embedded insurance have been there for ages. And maybe just haven't been named that way. At least in the business that where we are, we partner a lot with other different companies, and the AXA Partners comes from the name, sells quite a lot of embedded insurance. So you face itself you face it in your own life, like in your personal circumstances. Most likely you would have at least 1 or 2 insurance companies in your wallet with your credit cards. That's your typical embedded insurance. You probably didn't pay for that insurance. It's just part of the package that you get from your bank. I think it is essential part of the market. And for insurance companies, it's a good part, but there are few icebergs in there. So the good bit is on the top, but not so good is probably under the water. That's my opinion.
Valentina, thank you very much.
That's okay.
George, what is your definition of embedded insurance and why is it becoming more important?
Well, I think Valentina said it really well, but to sort of say the same thing in a slightly different way, I suppose it's about taking insurance products and sticking them into things that aren't insurance. So looking at people's experiences of different products and services and trying to get within the direction they're traveling with something that's going to try and alleviate some kind of pain. So you buy your plane tickets and you're going to get offered travel insurance at the same time. Great example, right? So you're stepping into the line they're already going down, which makes it easy for them to click on it because it's front of mind. So that, in my view, is kind of what we're talking about here. Why is it important? Well, it's growing massively. InsurTech London published a paper, great paper, recommend people read it, that said that the embedded market will be worth 700 billion odd in 2030, so sort of 5 to 7 times bigger than it is right now. So this is a massive opportunity, and essentially, I think we have a lot to learn from actors like AXA, but you could look towards insurance players like Ping An, right, the biggest embedded player in the world, and see what they're doing around how quickly they're launching apps and how close they're trying to get to people. And I think that's really interesting, right? Taking inspiration from different markets, particularly for Beazley as a strong London market player, looking abroad, looking towards the Asia Pac region as a kind of cradle for a lot of this innovation, and trying to work out what role we can play in it.
Fantastic, thank you. And so that sort of set the tone nicely for what embedded insurance is and why it's important. So what's happening in the kind of wider landscape that's changing? In ways that customers are becoming more digital, etc. Can we bring that to life? Maybe George, what's happening in the wider customer space that's driving this opportunity?
Well, I think maybe 5 years ago we would have spoken about demographics. We would have said, younger people want to interact digitally, and I think actually that's quite unfair now, because I think generally across demographics people expect a certain amount of digital interaction, and so digital environments can help to make the purchase of an embedded product easier, right? In line with what I was saying about if an option is put in your way with the route of travel around buying a product or service you were already buying, then it becomes quite easy. A digital interface allows that to happen much faster than in the past, when you'd have a piece of paper and a person trying to sell you something, who knows, on the street or wherever else. Ultimately, I think the environment has changed in that everyone expects a digital experience. I think that digital experience, or that digital mechanism, has provided a foundation for data, and the means of understanding data, increasing all the time. You've got AI in a sort of hyperbolic sense, but really when you look at sort of machine learning and the ability to take different correlated or uncorrelated forms of data and make risk decisions, you've got some really simple but impactful products that can come about, because of that. And so all of these things, I think, are being stitched together. And I think the core reason that embedded insurance is so interesting is it's about alleviating pain and getting out of the way, fundamentally, right? You basically want to solve the problem for the person, and you don't want them to have to think about you again unless the thing you're insuring goes wrong. That's the ideal. And I think it was mentioned by someone earlier on, right? People generally don't want to interact with their insurer any more than they have to. In embedded, it's even more the case that that's important. If it becomes about you as an insurer and your brand and getting in their face, maybe it's something we can debate, but I think you start to lose some of the message.
Valentina, do you agree?
I think there are two types of embedded insurance. The one that you're choosing, all right? So you're paying your money, you're making your choice, you want it or you don't, and you can skip the step. And the one that you're given. So the bank card would be most likely the one that you're given. So the one that you're not choosing, the one that's already part of your Amex card or Visa card or MasterCard. I think both of them are equally important. I think from the insurance company perspective, the second one, the one where you pay money, are probably a little bit easier to deal with, especially in the digital world, in a way that you get quite clear data about your customers. On those embedded free, customer-free, so to say, products, quite often you as insurer do not get access to your insured population. And that creates some issues on actually servicing them and, you know, predicting the frequency and all stuff like that. So it's not that, you know, black and white in some ways. Yeah.
Indeed.
But we spoke about this earlier on.
Sure.
Nothing's really free, right?
But true. I mean, somebody pays for it, yeah, but as a customer, it's free.
Yes, yeah.
So just on that point, that embedded insurance brings insurance products and services much closer to partners, to customers, and embedding them in the customer journey. What's the impact of embedded insurance, therefore, on your own brand?
This is a question I'm going to struggle with, right? Because I feel like a little bit of a, you know, I have to sort of bow down to AXA's more material experience in this space, because I'm at Beazley to do new stuff, and embedded is pretty new to Beazley, right? Beazley is a commercial insurance player. We tackle stuff like cyber generally on a commercial basis around the world, right? So insofar as I'm looking at embedded, it's about the protection gap. And so look, what does it mean for our brand? Well, it means diversification, but it also means relevance. Not that we're always hunting headlines, but you know, it's about having having some kind of bet in an emerging space that's going to be very valuable. What the nature of that bet looks like, it remains to be seen. It would be acceptable for me to do nothing in embedded if I didn't see the right opportunities. So you could argue that's quite a nice place to be. Ultimately, we will do something, but it'll have to be material value add, and it'll have to be something that people haven't seen before. Case in point, my colleague actually was here earlier on in the panel, Neil, and probably kind of spoke about Gaia then, so I'm going to bore you about it more because you're a captive audience. Gaia, for those of you that weren't listening or weren't here, is essentially an enterprise that offers financing for people doing IVF. The proposition is very straightforward from an embedded insurance perspective. When you do IVF, it may not succeed. The traditional approach is that you get left with a big bill and no baby. The insurance proposition is simple. If you don't have a baby as a result of your IVF, we wipe out your treatment fees. So it's really nice, right, because it's in the line of the customer journey, okay? And we selected that specifically because everybody said, and probably may continue to say, that it can't be done profitably, ethically, whatever else. Well, we've solved those problems, and part of that, or a big part of that, is down to the strength of Gaia as a business, and they're going to be a unicorn, by the way, so you know, if you're in VC, you should check them out. But I think that's an example of what it means to Beazley. It's a quite selective process.
George, thank you for that. Coming to Valentina, from an AXA perspective, are you reducing your brand opportunities if you're embedding your products with other people's services?
Well, it depends, right? There is no one answer to this question. So coming back to what I was saying before, the package insurance normally doesn't have a name on it. I mean, insurance company name on it. So if you take a card, you don't know who is behind it. What's the insurance company providing you with a travel cover or your home content cover or whatever else? It would be a Visa, whatever bank insurance type of thing, which doesn't exist. It would be some insurance behind it. On the embedded that you pay for, you normally see the name, so that's no problem in it. I think AXA, I believe, AXA chose quite a specific way on it. AXA is a big federation of companies. AXA Partners is a specific entity built specifically for those things. So we kind of don't mind that we're not that seen because we have other products with other companies that are seen, okay?
So AXA is big enough to not necessarily have that as a big concern. What would you say to a medium-sized or a smaller insurer that's effectively sort of embedding its products, so it's getting its products out to market, but not branded as them?
I think it's a question of choice, of course, and also what do you mean by brand and reputation? Is it reputation within common populace? If you're embedding it invisibly, you don't really care about that. You care about your reputation with your travel agents, with your airlines, with your whomever is packaging the product. And as long as you are able to market it properly, you're okay. Sure, if your choice is to do both, to do the end user sale as well as the packaging with other product handlers, then you're in trouble. So you need to do both equally good. Yeah.
Super. We've had a question come through on the app. Could non-insurers embedding insurance products into their offerings push traditional insurers out of the market? Or could we see greater collaboration? Great question. George?
Yeah, well, to use the example I just used, Gaia, right? Non-insurance entity wanting to put insurance as part of their experience and are doing that successfully. I think you've got to look at the motivations though, right? So the problem with insurance is it's really hard and you have to pay claims, which is annoying. And I think a lot of insurtechs particularly, they come in with a lot to learn on that front, and then when they realize how much pain goes into running products and reserving and everything else, they quite quickly realize that actually it's quite nice to be able to sit in the middle, not to have to deal with the claims yourself, typically in an embedded sense, right? Because you use a TPA or some other format to pay the claims, and they get to take risk-free percentage off the top of the premium, so they can concentrate doing what they do best, and the insurance volume, follows that if it's attractive enough, and that's a great place to be. So if you can take 10 to 20% of the premium volume without having to pay the claims yourself off your balance sheet, then that's great. That's a pretty nice cash generative line of business to
Valentina,
to
do you agree?
Absolutely, but I think this conversation about non-insurers coming into insurance market has been there for at least 5 to 7 years that I can recall. And the biggest threat, so to say, Amazon, everybody referring to Amazon. And from what I understand, they are starting quite successfully but slowly in this area. And maybe that would be a death of some sort to the P&C market of individual policy sale. I don't know. But I mean, the biggest differentiator for me between your typical big insurance company and Amazon, we are very different in our DNAs. I mean, we all come from insurance market, right? So we normally wouldn't have a huge, humongous R&D budgets. We would not be welcoming 90% of failure on the projects, right? So that's normal. Amazon DNA is completely different. They will be welcoming failure on the projects. They will probably fire that person, but they'll hire someone else. But still, it's okay for them. It's completely different culture. They would be quicker in finding right solution on how to make it a very attractable to the customers, and their customer service, I think it's excellent. So
one can argue they're
very difficult to beat. I mean, it's not that great, but it's quick.
I'm just cynical about it, Valentina, because look, if I was to advise Amazon, I'd say just don't bother, right? Don't become an insurer. Because let me give you an example, an obvious example if you go through the maths. A successful insurance product, any type of successful insurance product runs at under 100% combined ratio, right? It means you're saving some money off the back of all your costs, right? You're just there. 99%, right? That can be a good result in the market. So you're looking at maybe a 1% margin, up to a 10% margin. If you're looking at an entity like Amazon, which basically is an intermediary, right? A giant one, it could buy every insurer in London based on current market cap many times over. If you look at their role, their opportunity is saying, well, we're going to take as much of the pie as we want, and we're going to get someone else to pay the claims because we can. That's an infinitely better model for generating money than being the insurer.
I agree, and that's probably why they're not in that market.
Right.
I mean,
because on some products we make less money than our intermediary when you take all of their costs into account, right? Which is often a struggle for the intermediary to understand.
But I think this question of are they coming into this market, whether it's health or travel or home or auto, would be there until they formally declare we are not going there, and still people won't believe in it. Yeah. So
indeed.
And to be clear, I'm saying they are coming, right? I'm not saying that Amazon isn't interested, or others aren't interested. Look at Tesla, right, with their motor product. That seems to be very successful, right? But what I am saying is they're not just coming arbitrarily to take insurers' lunch, because it might not actually be that attractive. It might not be that tasty. There might be an alternative that you can get that is better.
Dear panel, there's a person there bursting with a question.
You gave me a really very surprising moment with your statement that you're not worried about embedded insurance companies coming in. Well, you're sitting up there with AXA, and then there is Ping An almost bigger in their earned insurance premium on an annual basis. And if anything is embedded, then Ping An is the embedded insurance company, almost got bigger within 10 years than AXA.
Absolutely.
On a global basis. So they are not coming, they are here.
Interesting.
Well, I'm not saying that we're not worried. I'm saying that there is very little that we can do about it to some extent. Okay, that's a fact of life. So they are coming, we are changing. I mean, I was just referring to the, well-known, well talked through threat of Amazon. Okay, and I think they are not really coming massively. Okay, they will be coming in niche markets, in countries, in the niche products or whatever else, unless they decide to take over insurance business. But they can, okay, so, and then probably it will all change. I think there is no 100% accurate answer to any question, really. If you remember when the lockdown started, 2020, so I think that the funniest thing I ever heard was in 2015, the typical question on interview would be, where do you see yourself in 5 years' time? So did somebody answer, I see myself sitting at home in front of my computer? No. So that means 100% of answers were incorrect. So I think we have very little control over what's coming in 5 years' time. We can influence, we can build up around it, but prediction, maybe some genius people who can do predictions. I'm not one of them.
So Valentina, thank you very much. I want to move on because we've got some more questions coming in, and also to your point, if we did have a crystal ball that was accurate, we'll all be very rich. I don't think we are, but well, maybe Ping An will be. Who knows? But great question. Thank you. So I've got a question here. How does embedded insurance affect consumers? On one hand, for example, it provides high level of convenience, but on the other, could coverage be less adequate if it is being provided by a non-insurer, and hence less experienced? Good question.
Well, I think we shouldn't be treating embedded insurance as the thing provided by non-insurer, because behind it, it's insurer who is just pushing the insurance product through the non-insurance channels.
So your question's wrong. Just saying, just call it out. Your question's.
And then if you take UK, we would be highly regulated on the fairness of the product, on the coverage limits provided and all stuff like that. So in that sense, whether you get your travel insurance through your credit card that you never knew about, you got any travel insurance, or you buy it yourself, as a minimum coverage, you will be well protected. Sure, if you pay additional premium, you will probably get bigger limits and maybe more generous lost luggage allowance or anything like that. But a base level is quite generous anyways.
Okay,
yeah.
cool. So can I just... You want a question, do you?
I do have a question.
Go on then.
When we're talking about embedded insurance, we're talking about personal customers a lot. Is there an application in the commercial space?
Great question.
I don't know.
So the answer is yes.
The answer is yes. I think.
Someone else can answer that.
Sorry.
So for example, for SMEs, often they buy their insurance annually, and then they kind of hope that their turnover doesn't exceed, or the number of employees don't exceed a certain threshold, or it invalidates their claim, their insurance coverage. So if an example of embedded insurance might be using Sage or accounting platforms like Sage or Xero or the like to automatically increase levels of cover, or indeed if you an SME can buy insurance for a single invoice that they think is going to be paid late or not paid. So credit insurance against the one, and it might cost them 5 pence. So the cost of transacting it must be really, really low. But actually, for me, I might go, yeah, I'm going to buy that insurance for just that one invoice because it might not be paid. Just 2 examples.
So just on that, so I agree with what you said. I think as the ticket price increases, it gets harder for insurers to give away control to a partner that's selling insurance into some kind of journey of a company. There are some good examples, within cyber insurance, for example. French insurtech I was talking to last year called Stoic is doing some really interesting partnerships with telecom companies where essentially they're putting their cyber product alongside what a business would normally buy around whether they're buying broadband or some other kind of business service. I kind of like that because it makes sense, right? You've got some good data that you can bring into play there. But I think the action is probably more in the personal space, but that doesn't mean at all that the SME space to come next won't be the next kind of dynamic in play, because there are some similarities between how people buy insurance and how SMEs buy insurance. Time poor, relatively disinterested in anything outside of the obligatory classes. Those types of dynamics speak to, if you've got data, you can try and take away some of that risk and it becomes okay. There's always going to be part of the market, though, where it's extremely hard. So your large cap companies, right, are probably not going to be buying a solution via something they didn't expect to be buying it via. It's going to be a broker-led conversation or some kind of sophisticated conversation. But this is an unsaturated marketplace, so there's an awful lot of opportunity out there. You just got to choose your distribution mechanism, choose your target demographic and the motivators, and then go after it. The point I was going to make earlier on non-insurance companies coming for our lunch or whatever is, you can't just go out and offer insurance if you're not an insurance entity. You have to find capacity. So to your point, there's always an insurer lurking in the background, right, doing the diligence on whether it makes sense or whatever else. So also the point around being worried about Ping An, I don't work for AXA, so I'm just going to make if I would say your situational intelligence on competitors becomes a lot more acute when you're in a saturated marketplace. If you're going over the next 10 years from 100 billion to 700 billion as a market, there is an awful lot of opportunity to get at. So I'm not saying you don't worry about the competition, I'm just saying that if you spend too much time staring over your shoulder, you're not going to be looking ahead enough. And ultimately, there's probably enough to go around before you get to that saturation point where you can start thinking about real acute competitive differences that might be more subtle.
Great. We've got 50 minutes left, so I want to move the conversation on. Who remembers the sort of hype around blockchain a few years ago? Yeah, lots of nods. Is it possible, what do you think, is the hype around embedded insurance similar to the hype around blockchain? That was a few years ago. There's a lady shaking her head at the back. Hello. Okay, great participation. I love it.
Yeah, I agree with you. The answer's no.
Okay. Would you like to explain?
I would like to expand. I think the connotation of the question is, does insurance fall in love with faddy trends that then become absorbed or become irrelevant? And I don't think either of these things are those. Now, there are some situations in which the kind of, I guess, the white horses on the wave of innovation tend to be a bit foamy and a bit frothy and everyone gets very excited, but the practical application is really hard. Blockchain is an example of that. However, I would point out that blockchain is central to the crypto asset industry, which is growing massively. It is a topic that insurers, I'm going to say this unequivocally, have to get into and have to look at and be relevant for. So if anything, blockchain is developing very quickly into a new force, a new industry. So we have to take that very seriously. So both embedded insurance products and blockchain, these aren't in some way competing facets, which I know you weren't saying, but they're both incredibly relevant, becoming more relevant. They're not
So both not hype?
They're not hype, no.
Valentina, do you agree or not?
I think it's a buzzword, okay? So, and it's okay. It doesn't mean that it's non-existent. It doesn't mean that it's fake. It doesn't mean that it doesn't have a future. It just means that at this period of time, this particular concept is super popular. Okay, so, and that's fine. I mean, blockchain is there, they're developing. It's just not that hype anymore, not being talked through. Okay, it doesn't mean that they died or they've been wrong or something. If embedded insurance is a hype word now, great, okay. So it doesn't hurt embedded insurance. It was there before, it is there now, and it will be there sometime as well. So hype is fine.
Fine is fine. Brilliant. We've had a question come in. I've seen embedded insurance fraudulently targeted. Do you see the market taking some time to catch up in detecting this organised behaviour? Good question.
I'm so sorry, I don't have a sensible answer to that question.
Thank you for your honesty.
Well, I think embedded insurance is not much different to any other insurance in that respect. So there is always possibility for a fraud. and there are always people who are working in anti-fraud department. So the new concept comes how to fraud someone, the new concept comes how to anti-fraud against that. I think we are at that stage as a society altogether that there is no longer any hidden things in there. So what was previously not that widely known, like your credit card having insurance, now it's a little bit more understanding. So the fraudsters, same people, so they understand better about how the credit card package is built, so they understand there is insurance behind it. There is an opportunity to fraud. So it is fraud in there, and there are anti-fraud departments. So,
Superb, thank you. So next question, ecosystems, a word often mentioned. Digitalisation has spawned new digital ecosystems orchestrated by powerful platform businesses. McKinsey estimates 30% of global economic activity, $60 trillion, will be mediated within these new ecosystems by 2025. How is the shift towards embedded insurance affecting the traditional insurance models? Valentina.
well, I think ecosystems is fine. I'm not too sure whether 25 kind of threshold would be a realistic one. I mean, I think we could all agree on one thing at least. So insurance companies are very conservative, and we have a lot of legacies, and we don't like risk, we don't like change. So to get to the ecosystem level for the big company, you need to decommission a lot of legacies. You need to connect a lot of pieces together. And I'm just not too sure that 25 is a reachable horizon, I would say. Yeah, it's needed, and embedded insurance is extremely difficult if you don't have ecosystem, actually serving all the angles of those triangles and rectangles and whatever other.
Valentina, but when it does happen,
yeah,
what do you see as the impact on traditional insurance models?
Okay, what then you call traditional insurance model then?
What we do now.
Okay, we do now quite a lot of ecosystems. So, I mean, I think it's all sits in definition, okay? To me, the ecosystem for embedded insurance is a digital connection of all partners, of all parties, kind of playing in that space. If we would call traditional insurance is when you write down policy on the piece of paper and then write down, you know, premium on another piece of paper and submit it by fax, doesn't exist, okay, by scan and email, then yes, they are very different. But luckily, I think there are not too many insurance companies that are basing their business on that traditional kind of...
Got it.
Even in countries like France and Spain, which they love their paper. Yeah.
I think it's a question that consultancies would love, because you could write some interesting papers on ecosystems. But I think from a practitioner perspective, exactly as you say, we exist in ecosystems right now. They might be different ecosystems, the ones that exist in years to come. You know, 5 years, 10 years, 50 years, whatever metric you want to use. There are new parties emerging all the time, new redundancies, new mouths in the chain to feed, or you could argue there's some kind of compounding of the value chain as we weed out, I guess, leakage against a pound of insurance premium. We are, as an industry, making an effort to make that process more efficient. And yeah, look, I think there are going to be a few winners. I think what is interesting and maybe mildly dystopian is the idea that tech companies, we've spoken a bit about Amazon, that they might own a lot more of our future than they currently do. So you might get Amazon Home Insurance, you might have an Amazon Bank, you might have an Amazon Mortgage, and I think that as owning the whole ecosystem, I think that's a really interesting play. And so I suppose you might end up with a kind of, a number of super ecosystems that compete with each other. And then the question is, well, where does everyone fit in within that world, and how do you compete? But we are in ecosystems right now, right?
Yep. Super. And gentleman there with a question.
Talking about ecosystems, I'm surprised we've got this far in a conversation about. Sorry, I'm surprised we got this far in a conversation about embedded insurance, without talking about Tesla and Mercedes and their recent claims or statements that they will insure their automated vehicles themselves. And I wonder whether this hybrid insurance, extended warranty, if you want to call it that, and the data that those organisations will have, both Mercedes on their vehicles and Tesla on theirs, but it could apply to a home builder that wants to build in a floodplain, for example, or it could apply to a construction company that's building a dam or is building an office block, and them indemnifying the businesses. Is that a threat to the incumbent insurance industry?
Great question, George.
Yeah, look, I think if you look at what's going on with Tesla, right, they've got a situation in which they have a novel technology without much lost data behind it. And so insurers initially freak out at that kind of thing and say, no, it doesn't compute, right? Computer says no. And so as Tesla, which is an increasingly cash generative business with a good balance sheet, you say, well, guess what? If you're not going to play, we're going to do it ourselves. Now, will Tesla still be doing insurance in 10 years or 20 years? Well, it depends. If the insurance market is caught up and can do something more competitive and allows them to free up that balance sheet, then they'll do that, right? So some of this stuff might be, bearing in mind that Tesla is not doing insurance because they think they can make money out of insurance. They're doing insurance because they sell cars and it adds to the experience. If you can weed out that component, because Elon Musk, he came to the insurance market, right? He said, help me out. The insurance market came short of his expectations. So in common with everything else he's done with every industry, he said, well, I can do it better and I'll build it myself.
Itself, though.
It is, yeah, in terms of relevance.
From the vehicles, and he has the courage and the bank balance.
Yeah.
So he has the data in the
He has
vehicles,
Twitter.
which he's never going to release to insurers, and he has the courage and the bank balance to actually say, I don't care. I don't care.
But
I don't care for
but what's the motivation? He's not an insurance person. He doesn't care. This is a commodity to him, right?
Because he's putting the customer at the centre of his journey, which insurers are traditionally, at least.
Yes. What I'm saying is if Tesla designs the product and it works really well and you switch out the capital later on because it's better for Tesla, then he'll definitely do that, right? This is a mercantile decision. He'll say, well, actually, now that you're interested, we got the headlines, we created a product, so we're in control of that. But if you want to slide your capital in behind us on a reinsurance basis or whatever, then they'll definitely start to do that, right? Because his motivation is not to be an insurance company. His motivation is not to retain this risk. That's not why this came about. So they are in this space as a product of industry not moving fast enough to keep up with what they required because of the lack of data and the scale of what they're trying to do.
100% agree, and I'm using. Sorry,
Last question.
I'm using motor as the example because it's so topical, I guess, with Mercedes coming out as well. But with Tesla and Mercedes both saying we're going to back our own vehicles, the chances are their competitors are going to follow suit. The BMW, the Audi, VW Group are all going to follow suit. And is that embedded insurance, or is that an extended warranty? And is an extended warranty insurance in the first place? I mean.
Yeah, I mean,
words and definition. But I'm just going to. We've got a few more topics to get through, if that's okay. Unless you particularly wanted to.
Or we could keep talking about this all the time.
Maybe you guys hook up after
exactly.
a drink, because
we can shout at each other for another hour. Yeah.
Fantastic. Very passionate topic. This embedded insurance, but also I've heard some people talk about embedded insurance as being invisible. What do you see as the disadvantages of that, particularly from a regulatory and PPI kind of examples from the past? Valentina.
Well, they are invisible to a certain extent, but they are still regulated how invisible or not invisible they are. I think we have all learned our lessons on PPI examples, so we shouldn't be falling into the same, problem second time around massively. It is invisible in the sense that it's not promoted that much, but it is visible to someone who wants to know about it. So I think the insurance market, especially in UK, is quite strongly regulated. And it's also a protection to insurance companies to some extent, because while it's a pain to provide all this information to your customers in a certain format, in a certain font or whatever else, it actually protects you as insurance from the same topic as PPI had. So it's good, and it's relatively safe, I think, not to fall into PPI, pathway.
Fantastic. So we've understood that the customer's world is changing through digitalisation. We've understood that there are leading examples of embedded insurance and the pros and cons of doing that. Let's move on to the sort of challenges. If there was an organisation out here that wanted to kind of start to explore embedded insurance as a way forward, what will be the kind of challenges that they'll face and how they could overcome them? Maybe George first.
Yeah, look, I think I'd start with the people. Whenever I look at a partner, it's always about the people and the problem. So why are these people good partners? You know, what do they bring to the table in terms of special knowledge or intelligence or aptitude for the issue, and then their understanding of the economics of the problem, that the purchaser's mindset, I think, is the second core attribute that I would look for. So, you know, an entity that comes to me, certainly bearing in mind who I work for, and says, well, we're interested in doing embedded motor, I'm probably not going to find that interesting. But if you come to me and say, look, here's an industry that's growing massively and here's a problem that no product solves, but I think insurance could do it, great, we're going to have a conversation about that. And you don't need to know about insurance, but if you have passion for your industry, then yeah, great. But we're on to stage 2. So yeah,
key challenge, finding the right partners.
Simplistically, yeah, people, product, people, problem. Start with that, and then go from there.
Fantastic, Valentina.
I think if we, again, coming back to embedded insurance, the invisible so-called and the visibles one, I think in the visible segment, there's not much of a danger. So it's kind of an accelerator to your sales. You associate yourself with something else, with another product. You just need to build it up, being suitable for the problems, for the pain points, whatever. But it's just a channel of distribution. On invisible, and you have all the benefits. You get the database, who are your customers, where they're going to, what they're doing, and stuff like that. On invisible front, when it's packaged firmly with something else, normally it comes with a great disadvantage. You don't know who are your end customers at any given point of time, and it gives the risk of low predictability. How often they will be coming to you back for service, how often they will be having claims, how big the claims would be. You take your typical, travel market, and coming back again to the credit cards. So we had this lockdown, right? Nobody traveled anywhere. The insurance companies with embedded travel products in credit card got their money back, right? So nobody was claiming anything. But as no government was saying the lockdown is only for 2 weeks, 2 months, 2 years, whatever. So the insurance companies had to keep on the books their agents to be ready to receive calls. And that is the spend that they incurred. If they had any idea of predictability, if they had any idea who bought tickets, who is those Joes and Marys who got their insurance, did they actually intend to travel, then they can reduce their costs. You can't do it with invisible packaging insurance. You can put some forecasting in place, but with big things like lockdowns and epidemics and whatever else, those forecasts, irrelevant. I mean, the recent one, okay, but the old one, irrelevant.
Fantastic, thank you very much. So it's just a few minutes to go, and the networking drinks, I can hear it chinking out there. One's got my name on. So looking at, to kind of wrap this up then, so if there was an insurance company out there wanting to kind of embark on this, what would be the one golden nugget of advice that you would give them? Perhaps Valentina first.
I'm afraid I'm not good with advices, so I don't think that I'm smarter than anyone else. And I think people are smart enough to find their own solutions. There are a lot of studies, cases, whatever online. Yeah, I think it comes with experience, and experience is personal in some ways.
Fantastic.
Sorry.
No, very honest answer. Thank you very much.
I'm not as humble than you. I think I am cleverer than a lot of people, so I'm going to give some advice.
They're expecting some advice, so I'm really pleased.
Just because you can do something doesn't mean you should. That would be my advice.
Ooh, what do you mean by that?
Just because a product is tenable and works mechanically and you think someone might buy it doesn't mean that it's the right thing to do versus other opportunities. I think people get so excited by the data stacking up in the way they thought it was going to, and we get into this insurance microcosm where we kind of nerd out and we're like, wow, this is so cool. My big fear is...
You're going to say hype in a minute, aren't you?
Yeah, I was going to, but my big fear is basically us collectively coming up with really cool insurance products that no one wants to buy. That's, yeah, basically the fear.
very
And
good.
that's why we're not progressive as quick as any banking sector or anything like that. That's why insurance is a little bit behind. So yeah,
It's a complex
they're
business.
risk averse.
Very complex
yeah,
business.
that's true.
Thank you. Any remaining questions before we bring it to a close? Hello.
Yes, just have a quick question. I know we had a lot of talk about embedded insurance against traditional products that we buy. Maybe I'm not understanding it well, but in my understanding, embedded insurance is something that is embedded into a product or a service that we buy, and which is very customer focused, depending on my needs or customer needs. So, for example, if I buy a bicycle and insurance is embedded into it, I just buy the insurance for my bicycle only. So maybe my needs are different. Maybe I want content insurance, which covers all of the content in my house. So how does it? I think there's market for both. I mean, I don't know,
Absolutely.
like, how do you feel about it?
Very good. Great question. What do we think?
Well, with 41 seconds to go, we should have had you up here, right? You would have made much more sense than I did. Yeah, look, I think it's just about the journey that you're trying to insert yourself into, right? The journey of someone buying a bicycle and being worried about bicycle risk is very different to the one when you're thinking about your home. Now, you might catch them at the right point where they go, oh, wow, you've also got home insurance, you've also got ABC, and you buy them all, that's great. But it's much harder to step outside of that journey and sell them something that's uncorrelated. So, yeah, I think it's all just about understanding people's lives and understanding the journeys they're going through and getting as close as possible to it and making it as easy to purchase as possible. And then, as I said, just getting out of the way. Just saying, okay, you know what, your policy documents are there if you need them, you know who to contact, that's it, that's the end of your interaction. That's on the very basic consumer side of things, right? As you go up the chain towards SMEs and businesses, they need a different type of interaction. They might want more contact because they want services and things, but it's a hard question to answer because there's so many different risks and so many different types of buyers.
I think they're not really in competition to some extent. And I think, again, coming back to the point, it's very difficult to predict. But my personal observation that society is getting lazier and lazier, okay? The lazier we get, the more embedded things needed. So it means I am lazy to go one step further and to look for insurance, right? So as insurance company, then it would be in my interest to make it easy and to embed it somewhere. So if we get to complete laziness scenario, then everything should be embedded. Otherwise, we won't sell policies. Yeah.
Fantastic. Thank you very much for that question. Brilliant. Thank you very much for listening to that. Thank you to the panelists, Valentina and George. Thank you so much. Great topic. Yes, not hype. It's happening now already. I think we can go in for a drink now. So I think back to you. Thank you very much.
Yes, David, Valentina, George, thank you for a great way to end the day. One final question from the rest of you. We are now coming to our final networking session, so I hope you've enjoyed the day. I think it's been a great day of insights covering everything, not least the context for change and the case for innovation, the need to rethink the industry. Some very succinct thoughts that we had, for example, the next 5 years in insurance will be very different to the last 5 years, and that's because we're only halfway through the revolution. As Ashok Krishnan said, it's a great time to be in insurance. So as I leave you with that thought, I'd like to say a big thanks to all of our sponsors, our speakers, our panelists, our presenters, and of course all of our delegates for being here today. Please do join us for a drink. Make it another opportunity to meet the exhibitors who are still out there. And please do give us your feedback. We want to make this bigger, but without diluting its quality and the value of those interactions. So please do tell us how you think we can do that as we continue in our mission to engage and connect the InsurTech industry. So thank you all, and hopefully we'll see you again out there for a drink and very soon at some of our other initiatives. Thank you.